7% and international passenger traffic was up more than 9%. PSU banks can be in focus as sources say FM is likely to hold review meeting today and deposit growth, CD ratio and performance of other schemes can be discussed. Electronic Smart promoters have sold 7.8% stake worth rupees 690 crore via block deals and SBI, MF and Norges Bank are likely key buyers in the block deals. KPI Green has raised 1,000 crore via QIP and issue prices at rupees 935 per share. Ambuja Cements have completed acquisition of Penna Cement Industries. JSW Cement has filed for rupees 4,000 crore IPO consisting of fresh shares of almost rupees 2,000 crore and JSL Limited is one of the shareholders in JSW Cement with 2.03% stake. Techno Electric partners Integrate for developing 2 greenfield interstate transmission projects and Caplin Point, Brazilian regulator issues no observation for manufacturing facility located in Tamil Nadu. And last is DCX Systems. Company has bagged orders worth rupees 107 crore from domestic and overseas customers. So keep an eye on these stocks that might be in focus today.
All right, okay, that is a long list, so we'll keep that on our radar. Finally, let me go across to Magnam. He's joining in with all the cues from the F&O space. Good morning, Magnam.
Good morning. So Friday was a big day, you know, when it came to the market moves. Look at the Nifty Bank, the mid-cap index doing extremely well as well. But what really led the rally was the IT pack. We saw a big move on the IT index, almost 3%, and a lot of stocks which were under pressure saw further buying as well. And that was reflected in the kind of flows that we saw in both cash market and index futures. So the FIs bought close to around 767 crores in cash market. The DIs backed it up with around 2,600 odd crores. And add to that, remember in the previous couple of trading sessions, the FIs had gone net short in index futures and that came undone as well. They bought 2,300 crores in index futures, added about 18,500 longs, covered 16,000 shorts. And as a result of which, 3 days ago, which is August 13, the FII net contracts were a negative 21,000, increased it to a negative 30,000, have now come back to a positive 4,000, increasing the FII long positioning marginally from 48% to 50% itself. In terms of options to watch out for, you know, on the way up, we saw all those call writers at 24,200 cover their positions and the Nifty is now around that 24,500 mark. 24,500 put writers are fairly active as well, telling you the support has moved higher towards that 24,400 mark. But on the way up, in the past, 24,800 and 24,850 have been a bit of congestion zones. So those are levels that we need to watch out for before we look at all-time highs on the frontline index. So what is the basic range for the index? Well, look at the 20-day moving average for the Nifty at the lower level would be an important support. On the way up, 24,800 to 24,850, which has been a congestion zone, needs to be crossed. For that to be crossed, we have the Nifty Bank to, you know, keep an eye out on because the Nifty Bank is still below both the 20 and the 50-day moving averages. So let's see whether it does go ahead and cross that as well. In terms of stocks, like we pointed out about the IT pack, there have been a lot of long positions being added on TCS. AB Capital is out of F&O ban. I'm also looking at Birla Soft in particular because IT stocks are doing extremely well and this stock too is out of F&O ban on Friday.
Okay, all right. Thank you so much for that, Magnam, and thank you guys for joining us and prepping us up for this trading day ahead. We'll sip into a break. Up next, the Finance Minister will meet with public sector bank representatives later today. We'll get you more on the agenda on the other side. Stay tuned.
You know, they do polls and this stuff, and I'm at like 93%. I said, so why are we having an election? They didn't have an election. Why are we having an election? How would you like to be Biden? He's working, he's spending money, he's trying. They wanted to have a debate. That's the thing that started it all. You know, if I didn't debate him, he'd still be running right now. But I believe she will be easier to beat than him because she's a truly radical left lunatic. And with him, he never really believed it. Of course, I don't know if he knew anything. I'm not sure. But he didn't really believe it. She totally believes it. She wants to destroy our country. With 4 more years of Kamala, your finances will never recover. They will only get worse. She said, I don't want fracking in Pennsylvania. She said it hundreds of times. I don't want it anywhere. We will. Then a couple of months ago, when the polls are showing that she's getting clobbered, well, actually, nobody actually thought they were politically correct. They wanted to be politically correct because they wanted, they had 11 different people, and they put her name in to be number 12, and they had a vote. She came in last. So people say, be nice. Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic. Have you heard it? I'm a better looking person than Kamala. No, I couldn't believe it. She said, I had never heard that one. They said, no, her biggest advantage is that she's a beautiful woman. I'm going, I never thought of that. I'm better looking than she is.
Welcome back. You're still tuned into Power Breakfast on CNBC TV18. The Finance Minister, Nirmala Sitharaman, will meet with representatives of public sector banks and regional rural banks later today over 2 sessions. During the first session with PSBs, the FM will review deposit growth, credit-to-deposit ratio and asset quality, all of which are vital indicators of the bank's health. And her agenda for the second session includes evaluating the bank's performance under government initiatives such as the PM Awas Yojana, PM Surya Ghar and PM Vishwakarma. She will also address issues pertaining to MSMEs and discuss any other pending issues that require attention. It's time to get you some more opinion from Mark Mobius on the recovery in the emerging markets and how the Indian market is faring versus the Chinese market. He also spoke on the possibility of a Fed rate cut coming soon.
When you look at emerging markets, India is going from strength to strength, but there are a lot of retail investors coming in and playing with derivatives and all kinds of operations, which could be kind of risky for that market. But generally speaking, things look good. And believe it or not, China is beginning to recover. We've seen a move from the bottom. And so that's good news for emerging markets generally. So if you look at the emerging markets index, you see some recovery. I think definitely there will be a move by the Fed to lower rates. There's no question about that. And that's, I think, being reflected in the markets. I think the markets are beginning to discount that. Also interesting that a lot of these emerging market currencies are getting stronger against the US dollar, which is quite interesting when you look at the whole situation. Part of that, of course, is some uncertainties regards to what's going to happen in the election. So that's, I think, beginning to be factored in to the markets and to the currency rates.
Okay, all right. With that, we'll sip into another break. When we come back, we'll talk all about the commodities market. A lot of action there as well. Stay tuned for that.
और मैं वोट पा गया था।
मैडम पलेना हमारे लिए चैंपियन है आज भी। इन्हें जो और से लेके तो पोडियम तक का सफर तय किया है। धन्यवाद।
Welcome back. You're still tuned into Power Breakfast. It's time to talk about commodities, some major moves there. Manisha Gupta is joining us with all the updates as always. Good morning, Manisha.
Morning, and thank you for that, Sonal. Well, after 5 weeks of decline in copper prices, we have seen 2.5% of gains in the previous week. The copper prices right now also are trading at a 2-week highs. This is because the Shanghai copper inventories have declined to March lows, and there are receding fears of recession in US, and that has led to short covering on positions, and that is taking the prices on the higher side. We also have seen gains come on in case of the crude oil prices. With 2 weeks of gains, the crude oil prices are just flirting with $80 a barrel right now. With Qatar urging Iran to de-escalate tensions with Israel is what has led to some bit of a profit-taking. But it also has to do with OPEC and IEA now lowering demand growth forecasts going forward. And when it comes to gold, well, we've seen an all-time high onto this one. $2,500 an ounce has been taken off in the previous week. We're just about trading around those levels right now. There are concerns on retaliatory strikes from Iran to Israel. Markets are anticipating a bigger interest rate cut for the month of September. So all of those factors clearly seem to be leading to safe haven buying in gold, keeping the prices where they are.
Okay, all right. So that's what's happening with the commodity space. Thank you so much, Manisha, for joining us with those details. Moving on, a day after the Indian Medical Association's 24-hour nationwide protest, the Supreme Court takes suo motu cognizance of the gruesome rape and murder of a trainee doctor at RG Kar Medical College in Kolkata. A 3-judge bench led by Chief Justice of India, D.Y. Chandrachud, will hear the case tomorrow. The medical body has also written to Prime Minister Narendra Modi and has appealed to bring in a central law to check violence against healthcare professionals. Meanwhile, the resident doctors in Maharashtra will continue their indefinite strike today. On the occasion of Raksha Bandhan, the protesting doctors will send Rakhis to the Prime Minister demanding a safe working environment. The doctors will also tie Rakhis to the government officials, police officers, healthcare workers and medical college administrators. Okay, all right. On that note, we'll do one thing. We'll take your leave on this edition of Power Breakfast, but do stay tuned. All the action on Bazaar Morning Call, that comes up next.
The Roadster series, the first product is going to be the Roadster Pro. This is the Roadster Pro. But I'm going to move along. We have a lot of announcements. A 10-inch TFT touchscreen, ADAS. With this vehicle, you saw the vision of ADAS in MoveOS. That'll be installed in this vehicle. It'll come with all the sensor package. So that's the Roadster. The specs again are absolutely killer. Fast acceleration, high top speed, power, range, 250 kilometers of range. Kripa is a biker girl, isn't she? So we've shown you two bikes, the Roadster Pro and the Roadster. All right, let's have the Roadster X. That's the Roadster X. Again, great features for its class of performance. High top speed, 11 kilowatt of power, 200 kilometers of range in a single charge. Iconic LEDs, 4.3-inch LCD, and that's the Roadster X. So आज हमने एक नहीं, दो नहीं, 3 बाइक्स दिखाई हैं. 3 बाइक्स लॉन्च कर रहे हैं. Across the price point, across from the Pro, absolutely top of the line bike. The kind of power that bike has, maybe even 1000cc bikes don't have. The Roadster and the Roadster X. You can take your pick, all from the same family, same design, same platform.
The example that you're talking about is one of my favorite analogies in the book, which is the fact that in America they have an opiate crisis, where and the reason why they have this opiate crisis is, as many medical people have said, is that the slightest hint of any pain, you administer opiates. So you become hooked then, like on opiates in terms of that, and you have so many people, you have so many movies, everything else which have been made documenting that. So the same approach now has come to economic management, which is that at the slightest hint of trouble, you administer stimulus or you do like a rescue. It's no longer very selective. Even in America, and this is what I find really fascinating, the concept of bailing out private sector companies was considered completely heretical until the 1980s. So before that, the private sector was supposed to operate on its own and the government was not supposed to come to the rescue if any companies got in trouble. In the 1970s, we got the first calls for such bailouts, and it was met with a lot of opposition, including from politicians. Then, and this is...
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a holiday-shortened week, it looks like we're coming out of a long weekend. It was not. Friday was working, but Thursday was not. So I think it's kind of looking like one of those. This is a fresh new week. Markets are looking good after Friday's big rally. We're coming to you live as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam is here today with us. Guys, good morning.
Morning.
Hi,
I was one of those lucky people who happened to get an approved leave on Friday, so made
He did get the long weekend.
4 days. That was me. And coming after the results season, budget and all of that heavy period, it looks like we're in a beautiful space right now, just calm. Markets are doing well. Monsoons are good, weather, everything's fine, and we're on set of the festive season. So nothing can go wrong, touch wood.
The thing is, when you work 4 days a week, 5 seems long, but then we get back to it, and it's just par for the course. But in that holiday shortened week, markets had a rollicking ride, a huge pullback, right? And I think the question this morning is whether we'll see more of it or whether that extreme sort of yo-yo effect of down and then up, whether that's out and then we get into some sort of an equilibrium.
I think it's the former, not the latter. I think it's past. I mean, the big sort of events, and I think it's not something we will easily, forget. And we're talking about, of course, the 2nd of August, 5th of August events. But there's been it's not ricocheted back in any shape or form, that big week. But as always, let's begin with what you need to know as we begin another day, another week. So Friday was excellent. I mean, you essentially had a 400-point Nifty rally, and that in one session took us past beyond the 20-day moving average. It looked a little iffy. There was even one sell-off early on. In the first hour, the market actually gave up about 100 points, and then it picked up pace and continued higher. It then sort of crossed the 20-day moving average and kind of stayed above it for bulk of the session. The 20-day, of course, at about 24,480 or so. I'll get to levels in a bit. Now, S&P 500 on Friday, no real surprises, a little higher, about 0.2%, and NASDAQ about 0.2%. You had the 10-year yield in the US, which is now kind of steadying at about 3.88. It was down about 3 basis points. The dollar index has seen a big sell down. I mean, on Friday, it lost about 0.6%, and we're at about 102.4. So this is good news for emerging markets in a risk-off environment and caused by sort of global uncertainties or a fundamental shock, etc. The dollar tends to appreciate because people sort of rush back home. But for emerging markets to do well, you want the dollar lower, not higher. Spot gold, it was a blink and you'll miss kind of moment. It hit $2,500 on Friday, and this is something which is interesting from an India perspective as well. And we'll talk about that. All these jewelry stocks have done phenomenally well. Of course, the gold financiers are not doing too badly either. Second-tier data in the U.S. on Friday was a mixed bag. You had housing starts, which were soft, and the University of Michigan sentiment indicators was a little better, although the inflation component there hardened a little bit. Markets this week, as we go into the rest of the week, focus on this Jackson Hole Symposium where central bankers will speak. Of course, you'll have lots of them speaking. The main event is Powell's speech, which is only on Friday. That is still some time away, end of the week essentially. So where does all of this leave us as far as levels are concerned? The Nifty is now beyond the 20-day moving average, which is, as of Friday's close, at 24,477, and that's the first level that the market needs to stay above. Respect. That's essentially a very important short-term average, always on the way on a break down and on a break higher. I would say that, and I was saying this on Friday morning, sentiment got extremely overdone negatively in the very, very near term. And that kind of met, of course, Thursday's big Wall Street move. And you got the Friday session. But I think you look around you, dollar is down, yields are well behaved. Global markets are kind of getting back to a more stable zone. I'm not saying it's an up and up kind of a session, but I think, the worst of what we saw starting the 1st of August, that 1 week, that is not sort of coming back to us in any big way, at least not right now. So the immediate resistance for the Nifty is the upper end of the gap level. That's the sort of global market caused gap around the early August period. That is 24,686. So that's the next target for the market. And of course, beyond that, you're looking at that 25,078 level, which is, of course, the all-time high. Supports, of course, for the Nifty come in around the 24,100, where the market has taken support many times in the last 10 odd trading sessions or so. So 24,686. And after that, we'll see if the market wants to sort of continue in an uninterrupted fashion. Supports at 24,100. The Nifty Bank had a very nice rally on Friday. It's the weaker of the two indices, but it's yet to hit its 20-day moving average. So that's the first level. That's 50,922 for the Nifty Bank. It's about 1% away. Immediate resistance after that is, before that level is 5830. That is a swing high for the Nifty Bank. And then, of course, you get to the 20-day moving average. Support for the Nifty Bank comes in at the 50% retracement of the move, which essentially is at 49,717. Again, a level which the Bank Nifty has spent a lot of time over the last fortnight or so trading around. Gift Nifty will come up on your screen. I think it's a higher start, 70-point higher start. And we are going to start, I think, around, if these numbers hold, around that upper end of the gap level, which is about 24,600. 686 or so. But that's essentially the GIFT Nifty. The spot, of course, will also be tracking that. But it's a higher start, and hopefully we continue to build on top of that through the course of the day. Surabhi.
Prashant, I'm just wondering, this time at Jackson Hole, what will the central bankers talk about? Hey, are you cutting? Okay, wait, I'll go on hold. Well, I won't go up. You're going down. We'll go in this together. So I don't know, maybe a little more interesting than usual, that symposium. But only at the end of the week do we start getting the headlines from there. The Asian markets this morning, they're actually off to a bit of a quiet start. So if you look at most of them, Japan and even the Chinese markets, which are trading right now, a little bit of red. So a bit of a consolidation as we kickstart the week. The machinery orders data out of Japan, that's missed expectations. So it's kind of keeping the bulls reined in as we kick off. Anyway, to sort of wrap up last week and the extent of the moves that we saw, the ferocity of the pullback. The S&P 500, 3.8% higher. US tech pullback. If there were any naysayers, they were completely stopped in their tracks, because look at the NASDAQ, up 5%. The Dow was okay, around 3% higher. The Nikkei pulled back 7.9% last week. Again, I'm just putting the numbers on the board to sort of put in context the ferocity of the move on the other side as well. As a contrast, the Nifty moved up only 0.5%. So is there going to be more of that recoiled spring effect that plays out here for our markets? The distance from the peak, just to again put the numbers in context, Nifty is about 2% away from the all-time high. Mid-cap index is about 3% away. The small-cap index is a little over 4% away from the all-time high. And the underperformance of the banks, so the bank Nifty is around 5% away from its peak. The fund flow situation, well, we had FIs on the buy side on Friday. So will there be more of this, if this is a trend reversal or not? We need to track. But this is after many, many days of consistent selling. Do we have a small buy figure, 766 crores? Domestic institutions, as usual, were buying 2,600 odd crores. Now, some numbers have come in on the domestic front. The situation for banks and the fight for deposits, that's really telling, because the latest data that's come in, the fortnightly data that we get from the Reserve Bank of India, this is X of the HDFC merger impact. Credit growth is running away at about 13.7%. Deposit growth is lagging, as usual, 10.6%. So the gap remains. And even if you include the HDFC merger, then the deposit growth is 11% and the credit growth is 15%. So there's a fair amount of gap. So let's see. I mean, that's something that's been an overhang on bank stocks. We'll see how the reaction is today. There's lots of manufacturing news and good news, actually. So there's Escorts Kubota. They are looking at a big investment, perhaps in UP. That's where the talks are on land acquisition. 4,500 crores is the amount that they're looking to put to work. And then watch out for a lot of the railway and metro infrastructure stocks, the likes of BEL, BEML, and even L&T, etc. People who are involved in the construction of metro projects, because the numbers are pretty big. This was all cabinet approval coming through. So Bengaluru is 15,600 crores, Thane Metro is 12,200, and for Pune Metro, the expansion project, it's about 3,000 crores that has been approved by way of investment. So tendering will start. So expect some buzz around this side of the market. So I think we're back to looking at Q's earnings season has drawn to an end. And by the way, there's a big split. We'll talk about this as we go forward. Big split between brokers and the way they are calling it. Morgan Stanley seems to be the most bullish at the end of the first quarter results season. There are others who are turning a bit skeptical about the pace of earnings growth. More on that as we go forward. GIFT Nifty is pointing to a positive start. But as I said, Asia is a little more cautious this morning.
Well, Asia is a little more cautious. What's actually interesting is that if one uses the holiday, analogy itself, are we taking off or is it just taxiing? That's the big question, right? Because the reversal happened from extremely oversold zones. The rally happened towards levels where we're closer to congestion zones. So that's the big question, right? Is it a reversal from lower levels or something has fundamentally changed? Because if you discount even the August 5, August 6 lows on the Nifty, the budget day low was 24,074. August 8, thereafter the low was 24,079. And August 14, one day before, where we saw that big move, the low on the Nifty was 24,099. So those are lower levels which the market is respecting. Two things can change that. One, the IT index. Nifty IT index led the charge on Friday. In fact, the Nifty Bank did well, but the IT index was actually up 3%. An improving US outlook supports that sector. That's also the sector where, if you made a Venn diagram of valuations, having not done anything else, and improving prospects with lower multiples, maybe the common shaded area would be the IT pack. So that's something we'll be watching out for. Yes, the flows returned on the cash side, both the DIs and FIs bought, but also there was purchase of 2,300 crores in index futures. The prior two trading sessions, the FIs actually went net short on index futures. So some of that was, unwinding of those short positions as well. So if you look at it, they added about 18,000 long contracts and covered 16,000 short contracts. So if you look at the last 3 trading sessions, on August 13th, the FIs went net short to the tune of 21,000 contracts. Long positioning was 48%. That increased a little bit to 30,000 contracts. Again, long positions went down to 47%. And that up move has led to some of those shorts being covering their positions, longs being added. So net contracts at 4,000 contracts at 50%. It's an even keel yet. The 24,200 call writers covered their positions. 24,500 put writers also wrote some contracts telling you that there is support which has moved higher to around that 24,400, 24,450 mark. But on the way up, 24,800 call writers are still active, telling you that the earlier congestion of the Nifty, which is between 24,800 and 24,850, may continue. So if you just had to look at the range on the Nifty, maybe the 20-day moving average is a lower level. Prashant did point that out. 24,477 would be a support. On the way up, 24,800, 24,850 is the congestion zone that we need to navigate before we go to all-time highs. And what is it that can take us to all-time highs? If the Nifty Bank goes past its own congestion level of 50,900 to 51,300, that 400-point band, because that's where rests the 20 and the 50-day moving average. Apart from the IT sector, I'm looking at Birlasoft as a stock today. Why? Because one, IT stocks are doing well in general. That stock was 6% higher and also got out of F&O ban. So that's something that could be on one's radar.
All right, Mangalam, thanks very much for that. So IT absolutely has been doing well. And if US stays as it is, which is in, by the way, the S&P 500 is just 2% away from its highs. That's quite something, right? Just like that, in a fortnight or so, we've seen so much. Lynn Alden is founder at Lynn Alden Investment Strategy. She's joining us right now to take some questions. Lynn, great to have you with us here on CNBC TV18. Prashant this side. Now, just sort of your own framework at, everyone is kind of talking about whether what we saw early August is firmly behind us and we are once again back into more sort of trending up and up kind of markets. What's your sense, Lynn?
So first of all, thank you for having me. I think one of the major things to focus on is the upcoming Jackson Hole Symposium and some of the potential moves that the Fed could be making, because in addition to affecting U.S. markets, it can affect global markets. As you mentioned earlier in the program, the dollar index is a really strong variable for that. And the base case going forward that the market is pricing in is a number of gradual rate cuts in the quarters ahead, which should relieve burdens, especially for various markets that have a lot of dollar-denominated debt. That's one of the main mechanisms where that weaker dollar, or at least that like somewhat softer dollar, should be supportive. So I think we have to watch if there's going to be follow-through with those actions.
Lynn, hi, good morning. So do you see the environment continuing to be conducive for risk assets? Because I think everyone's agreeing that the Fed will cut. It's just a question of the pace and the timing. Is the worst of the yen-related volatility, is that behind us?
So I think we shouldn't expect the type of performance we got last week. I think we have to be a little bit more cautious after the rebound. I don't specialize in predicting very short-term moves. I think we're still probably going to see some periods of volatility. One of the things I'm tracking a lot is that I don't particularly think that the rate cuts we're going to expect in the U.S. are going to be very effective for the U.S. economy. So the U.S. economy is softening. A lot of the debt for both consumers and corporations is already locked in at fixed rates lower. And there's only some parts of the market that have, variable rate debts or other kind of high rate debt. And so I don't think 50 basis points or even 100 basis points is going to be particularly effective there. But I do think that could be meaningful for the dollar relative to other currencies. And so actually some of the areas that could get the biggest boost from a softer Fed are the emerging and frontier markets of the world. So that's kind of where I'm monitoring to see if that thesis plays out as expected.
Well, Lynn, if one's belief is that it's about when the US cuts rates and not if, do you think emerging markets would benefit? You don't see it doing much for the US economy on the whole, but if emerging markets were to benefit, if that's the thesis, then would it be India or would it be others because of the outperformance that India has already seen?
I think it'd be a number of them. It could very well be outside of India because India has less dollar-denominated debt as a percentage of GDP. So that particular variable is less impacted. There's more other factors that have been going on. Instead, I think we could see some kind of catch up from some of the emerging markets that have struggled as of late, particularly Latin America, for example, other parts of the world. And you can get kind of a virtuous cycle there. So there, when capital pulls out of emerging markets, it goes into the dollar and other kind of areas like that. It strengthens the dollar and therefore puts pressure on their debts. But when the dollar softens and eases their debt, it eases liquidity conditions in those types of economies, and then it can attract more foreign capital, which ironically can weaken the dollar further and strengthen those currencies a little bit further. The most useful comparison to be aware of is that kind of 2002 to 2007 period. After the U.S. Went through its dot-com bubble, we had a fairly mild recession in 2001. We cut rates, and that the biggest benefactors, I mean, the U.S. housing market did well, but the biggest benefactors were emerging markets for that next kind of 5-year period. And I think that we could see, maybe not to that extreme level, but I do think that we could see that kind of leadership, and that's the kind of rotation that I'm looking to see if that starts to confirm itself or not.
Lynn, do you look at emerging markets? Do you look at India at all? Any views here?
I do. I've been structurally bullish on the Indian stock market for years, given the specific dollar focus and how we could get dollar relief from some of the markets that have not done well. I do think that there could be a period of time where, for example, Latin American equities have my attention at the moment because they're the ones that would potentially benefit the most from, say, the dollar index falling by a few hundred basis points. But I'm structurally bullish on India. I'm structurally bullish on more cyclically bullish, I would say, on parts of Latin America, as well as certain frontier markets, other parts of Southeast Asia.
All right, Lynn, we'll leave it there. Great conversation. Thank you very much for being here on CNBC TV18. Appreciate your time here. Well, let's move on and take a quick commercial break. Before we do that, let's quickly run you through some more opinion. This time it's coming in from Rajiv Batra of JP Morgan. Remember, we were talking about first quarter earnings, and this is the view on that. So Q1 earnings, Rajiv says, were lackluster with a moderate pickup in revenue growth and margin expansion. Lower input cost benefit is largely getting behind us as anticipated in the previous quarter. He says factors such as limited government expenditure, relatively higher base in the previous year, demand fluctuations and rising competition were also a key drag. He adds domestic cyclicals segment fared better as compared to global cyclicals. Near term, he's expecting the market will remain range bound due to rising domestic headwinds and global market volatility as well.
Amish Shah of Bank of America Securities says the consensus expects Nifty FY25 earnings growth to moderate to 10%, led by slowing growth across energy, financials and discretionary. Although he sees downside risks as a slower first quarter implies 14% growth for the following 9 months of FY25, he believes that potential beats in auto, industrials, healthcare and IT may not be enough to offset the misses in financials, metals and energy. Besides, he adds that slowing global growth is a risk in itself.
Okay, some money market views as well. Kunal Sadani of Shriram Bank says that dovish Fed expectations and a positive risk tone keep the US dollar bulls on the defensive. The dollar index may find immediate support at the 101.8 levels, while the 103.2 is a resistance. For the USD INR pair, he says 83.75 to the dollar acts as the support, while 83.95 is the resistance.
On bonds, Vishal Goenka of IndiaBonds.com says volatility in global markets continued to subside with the US CBOE VIX closing below 15 on Friday. This week, he says the main global focus is going to be on the Fed chairman's speech at Jackson Hole, as well as geopolitical news around Israel. He expects bond yields to be in a holding pattern for the 10-year in a trading band of 6.85 to 6.9%. All right, we'll take a quick break on that note. Up on the other side, our list of top stocks to watch this Monday morning.
That in the middle of the so-called Reagan-Thatcher revolution, which we thought was all about free markets doing well, in 1984, the first big bailout of an American financial institution takes place. That's Continental Illinois. And after that, there's been no looking back, which is that one after another, every time there's been a crisis, whether the savings and loans crisis in the late 1980s, then LTCM, which happened in 1998, and then you had in 2008, of course, all the bailouts. I still feel it's very tough to do business on the ground in terms of that. And one thing which I've been very vocal about is in terms of the, like the role of the fact that you have weaponized the investigative agencies. I've been very critical of that you may do that for political purposes, but there are serious business and economic consequences to that. On the ground, we know it, that the fear now, once again, of being raided, of having the, like in terms of the power that the bureaucrats have got on that at the top level, they don't even know that in terms of how it's being misused at the ground level, what exactly is going on out there. I think that, the license, that, and the fact that, some of these agencies have been even more weaponized in terms of the powers they have, who they can call for questioning, how that can be done. Like all this may appear optically it's being done for anti-corruption stuff, but the real consequences on the ground, we meet people, we talk to businesses privately, we do that. So I think that it's stuff like that I have much greater problem with. The macro management, I think, has been really good. The micromanagement in terms of why is it so difficult? Why is manufacturing as a share of the economy still stagnating, at 14, 15%? Of GDP forever, in terms of that. Why is foreign investment still not flowing in more the way it should be? Why is, in terms of domestic private investment not doing more? Because it's still the government capex cycle which has done a lot. I think that those are issues that I would like to see more to be done for. And as I said, that the great opportunity for us is that, in a way, is that China has clearly imploded, right? I mean, it's an economy that I've been pretty bearish on, as you know, for a while. And I think that the China story is done. Now, the debate in China is only whether...
When you say it's done, what do you mean exactly? Because there was a lot of talk around, no one's anywhere but China and so on and so forth. But that's not, it hasn't played out that way.
Exactly.
So
yeah.
What do you...
Welcome back. Lots of stocks to track as usual. Earnings season is over, but the news flow is not. And our research team is standing by to get you the CNBC TV18 list of top stocks to watch. Kicking it off with the Maruti. Sudarshan, morning. This was interesting. They're making a provision because of some mutual fund related taxation. Really caught my eye. Tell us more about it.
Morning, Survi. So first, as far as color is concerned, I'm going with red for Maruti just on the basis of news, but stock may see recovery during the day. Now, coming to the news, company says its Q2 profit will see one-time impact of Rs 850 crore. That is 24% of Q1 profit and 6% of FY24 profit. Now, coming to the details of the news, company used to make provision for deferred tax liability on debt mutual fund investment gains. Now, if you remember in the budget, FM had announced that removal of indexation benefit and tax rate has been changed from 20%, that is with indexation, to 12.5% without indexation. And because of this, company is saying that in Q2 profit, it will see one-time impact of Rs 850 crore. And that is LTC's long-term capital gains. An actual payment of tax will be made at the time of redemption of these mutual funds. That company, when it's going to make the payment, that is redemption amount, that time it will see the one-time impact. So overall, one-time impact of Rs 850 crore in the Q2 profit that company is likely to see.
Oh, okay. All right. Got it. It's a sizable amount, 850 crores. Manglam.
Well, 850 crores. We'll keep an eye out on that one. But I'm looking at electronic marts as well. But before that, let's go across to Vamakshi, who joins in on Voltas. They held a conference call and a lot of brokerages have written on that. Vamakshi, good morning.
Well, good morning, Mangalam. Let me first start off with Nomura. They've gone ahead, maintained a buy rating, raised their target price to 1,857 per share. The management in the con call said that for the room AC segment, better channel planning and not the discounts helped the company gain market share in the segment. They target to retain high single-digit EBIT margins as well. For the project business, they say that they've received favorable arbitration for FY23 provisions. However, they are cautious on some of the new orders. They, however, believe that EBIT margins of nearly 4 to 5% should be possible over a cycle. So given those factors, Nomura has gone ahead and maintained its buy rating and raised its target price. But apart from that, we also have a note coming in from UBS. They too have a buy call on this counter. They've gone ahead and raised their target price to 1,960 per share. So given those factors, going with the green for Voltas.
All right. Thanks very much, Vamakshi, for that. Voltas is something which has done well last week. I mean, I think on this Wednesday, where the stock went up sharply. Friday was a bit quiet. GMR Airports is the next one we're going to focus on. Vivek is here to tell us why. Vivek, morning.
Well, good morning. GMR Airports is in focus. The company has given the July operational update in terms of, number one, how passenger traffic spanned out and how many aircraft the company actually handled. Along with that, the company also gave an update regarding, the T1 terminal. So first up, looking at the passenger traffic, it crossed 6.3 million passenger, which is up almost 7.7% on a year-on-year basis. It's largely flat on a month-on-month basis. Domestic traffic up 6.6% and international traffic up almost 11%. Now, the company says Terminal 1 is now fully operational and back on track. And along with that, when you're talking about the aircraft that the company handled, it's 68,755, which is up almost 6% on a year-on-year basis on the back of the upflow going with the green on GMR Airports.
All right, Vivek, thanks a lot for that. Going with a green on GMR Airports. Let's talk about electronic marts. If you look at the stock on Friday, there was a large trade that took place. The stock ended higher by about 3% as well. And now we have the participants of that large trade as well. Nearly 8% equity changed hands. It was promoter entities, Karan Bajaj and Pawan Kumar Bajaj, who sold about 7.8% stake, and the buyers were SBI MF, which bought close to 4% stake, and Norges Bank was the other one, which bought about 1.75% stake as well. As of June 2024, the promoters held in the company close to 73% stake, so that comes down to about 65% stake. But the reason I'm going with a green on this is because, one, the sale of 8% was easily absorbed by mutual funds. Also, the stock has seen a big move, 2x in the last 12 months, 4x from issue price of 59 odd rupees, and they have a fair amount of triggers going forward as well. Q1 was a strong one for them, and also they've got continued leadership in South India. Increasingly, they are adding new stores in North India, and increasing share of revenue and improved operations from North India would be something that would be further growth triggers for electronic marts. So the last 1 month up 6%, last 12 months has doubled. And we'll have the management later on the show to discuss more about the performance of the company going forward. There you have it, 83% of the last 12 months.
All right, that's interesting. And the consumer durables as a space also, what you heard about Voltas and other stuff is coming back. At least that's the hope. Let's also talk about oil companies, ONGC and Oil India. Sonal is here with that one. Sonal, morning.
Good morning, Prashant. Well, the fortnight review has come by, and windfall taxes on crude oil production, that has seen a big cut. It has been cut to 2,100 rupees per ton on crude oil production from 4,600 rupees per ton. This is because of the fall that we saw in crude oil prices during the month of July. However, the export duty on ATF, diesel and petrol continues to be nil. It has been that case for months. So ONGC and Oil India, those two stocks will be in focus. This ensures their realizations remain above that $75 per barrel mark.
Right, Sonal, thanks a lot for that. Let's talk about Techno Electric and IndiGrid. Vivek joins in with the updates on those.
Well, that's right. So Techno Electric as well as IndiGrid, both of them will be in focus. A very interesting development, actually. So now Techno Electric has actually gone ahead and partnered with IndiGrid, and this is for the development of 2 interstate transmission system projects, now which was actually won by IndiGrid. So Techno Electric, number one, will co-develop and invest in both of these projects. Techno Electric will also have an equity portion in this particular project. Role of Techno Electric will actually be that it will be responsible for the complete execution of the projects, and this is being done on a lump sum turnkey basis. Going with the green on both of these stocks, it's a positive development given the fact that it actually enables IndiGrid to go ahead and aggressively go ahead and bid for more transmission projects.
Okay, all right, got it. Thanks very much, Vivek, for that. Back to Vamakshi. Vamakshi, you're watching out for Siva Cements and I think Genus Power. What's the news here?
Well, absolutely. Let me first start off with Shiva Cement. JSW Cement has filed for a 4,000 crore IPO consisting of fresh issue of shares of nearly 2,000 crores. But why does this bode well for Shiva Cement? And that is because JSW Cement is the promoter of the company. It holds just over 66% stake in the company after it was and in fact it acquired this stake in Shiva Cement in 2017. The company also supplies clinker, which is a key component in cement production to JSW Cement. So overall, with the DRHP being filed, it bodes well for Shiva Cement. Genus Power is the next one I'll be watching out for, going with the green for this counter as well, because it has signed 3 LOAs worth almost 3,000 crores, and with these recent orders, the total order book for the company exceeds 24,383 crores. So overall, going with the green for Genus Power as well.
Okay, all right. Thank you very much, Vamakshi, for all of those details. Those are all the stocks, but commodity cues as well. And guess what's making headlines? It's really gold over the weekend, right? Manisha is joining in with a roundup. Manisha, good morning.
Morning, Sylvia, and absolutely. Gold hit an all-time high at $2,500 an ounce and above that as well. We have seen some profit taking right now, while the strong safe haven demand will continue. But the markets do read into the Qatar urging Iran to de-escalate tensions with Israel, and that's led to some profit taking in gold, silver, and in crude prices also. The markets will watch out for the U.S. Fed rate meeting minutes that would be released in this week itself. Not just gold, we also have seen the crude oil prices after hitting a 2-week gains and 2-week highs also come off the market. OPEC and IEA both have lowered the demand growth forecast for 2024 and first half of 2025. That seems to be weighing onto the markets right now. But the bright spot also is in silver, which gained 3.5% in the previous week, and copper prices, which gained 2.5% in the previous week. So metals as a whole, the industrial metals that is, seem to be holding on a firmer note in Chinese markets right now.
Okay, all right, Manisha, thank you very much for that. We'll watch out for that sparkle on gold if it indeed is going to continue above $2,500. Take a quick break. We'll come back on the other side and we'll have market expert Prakash Diwan joining in with some fundamental stock ideas.
So it's done in a way, like in the fact that I feel that the debate in China now is that can that in terms of can the economy still grow, or is the economy headed for some sort of a property financial sector bust? That's the range of the debate. I think that the days when China could grow at even 4-5% are behind us, right? Because I think that's because its demographics, its debt are just totally against it. No country in the world can generate a meaningful growth when your population is shrinking. For the first time, Chinese population is shrinking. How do you generate growth on the back of that, in terms of that? And then the debt hangover that they have is incredible in terms of, like how much debt they pumped up in the last decade. And they've created so much overcapacity across industries using this debt that it's very hard for them to grow out of this. So that's the debate as far as China is concerned. Plus, you have the added thing that because of geopolitical reasons and other things, that nobody wants to concentrate their bets on China. But remember, when China was booming and doing well, it was attracting FDI of 3-4% of GDP. Foreigners were lining up to get into China. I saw that in the 90s and the 2000s. Foreigners just wanted to get into China, and they felt very secure and stable. That once we get into China, we know exactly what it is. In India's case, that's just not happening. That why are foreign investment lying up? It's, you can't, to attract foreign investment by talking to the top CEO of a top tech company and keeping him happy and doing that. That's just not the way it works. It has to be much more organic in terms of it. In China, the provinces were really attracting investment, going out of the way to do that. So the issue is that we need to think about those issues, about how do we do that? Because, we can be happy with the current growth rate, which is 6 to 7%. On a relative basis, it's fantastic. At a time when the rest of the global economy is growing at 2 or 3%, maybe it appears really good. When no other really, serious emerging market is out there. So on a relative basis, that's great. But remember, on this path, our per capita income is still less than $3,000. On this path, we are going to be, in terms of, we'll won't even become a serious middle income nation in the next 20 years.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC TV18 filed a request on
Welcome back. You're watching us here on Bazaar Morning Call. In case you've just joined in, it looks like a good opening for the market. A 75-point uptick is what the Gift Nifty is indicating. Let's welcome Prakash Diwan joining in on the show now. Prakash, good morning. All the durable makers are in focus this morning. There was a conference call that Voltas held, and then all the brokerages have gone ahead and upped their estimates. There was a large trade that took place on a durable seller, Electronics Mart. I'm not sure whether you've tracked that or not. What are your thoughts on EMIL, and do you have thoughts on Voltas? Any particular consumer durable stock that you like?
Good morning, Mangalam. So, I think interestingly what the Voltas commentary mentioned, and I'll take that first, it's about, them being able to manage to grow, continuously grow, even if it is going to be a bit lumpy going ahead with decent margins. Because what we've seen in this earnings season is that there has been, wherever we've seen retention of margins, volumes have taken a backseat. And wherever we've seen some companies clock decent revenue growth, margins have been kind of compromised. So, that's the interesting part in this space. And to be honest, it's not something which has run up so much, as compared to cap goods or as compared to staples and all of those. So there is definitely some room, some comfort there. But overall in the market, if you really ask me, I'm not looking at buying or adding anything till the peaking out happens, and which in my understanding is going to coincide with the first announcement of the US interest rate cut. So as and when that happens, probably is going to be the peak of the market for some time. And then we'll probably review it. But on the basis of the Voltas commentary, yes, consumer durable segment as a whole looks promising, but there's nothing which is outshining in that sense or attracting us to buy from that segment today.
Got that, Prakash. Any thoughts on on Zomato? We're going to talk more about this. You must have seen that tweet about highest ever orders over the weekend, and there's a call as well from UBS comparing where Zomato is trading it as compared to some of the consumer names, and how it's more attractively. I mean, it's a little expensive, prima facie, but on other matrices, as I think the brokerage is pointing out, it's doing a lot better. Your thoughts here?
Good morning, Prashant. No, so you're absolutely right. I think Zomato has morphed from being treated with FOMO to actually something which people want to buy from a momentum or a growth perspective. Now, if you are willing to live with certain downsides which could intermittently happen in the next 4 or 5 years, the kind of market size and the market share that Zomato takes thereof is going to be significant. So this is a classic, and I mentioned this some time back when it started making profits and things were evident, but then everybody will say, I said so. But today, if you were to stick your neck out, it's a gorilla theory. In a world of monkeys, there's one gorilla who's actually likely to become so big and significant that they will command premium, not just on valuation, but even on pricing. And I'll tell you where the pricing is coming. The Blinkit model has given them so much of data richness that they are able to work with OEMs in such a simple way, the principles, and tell them which PIN codes matter and what times of the day matter, what days of the week matter. So all of that data is going to really help them fetch a lot of onboarding premium. So I think it's a great story in the making. If you will, you could add on dips, but even otherwise at these levels, it does offer that growth momentum that you could ride for the next few years.
Yeah, you're right. Actually, data is the new gold, and these platforms have all the possible data on when I'm eating, when I'm sleeping, when I feel hungry at night, and where I want what delivered. So take your point. It's pretty fabulous, the wealth of information that they have. Prakash, stay on. We want to discuss autos as well, and for that we also have a guest joining in. We have Jay Kale with us to talk about the disruption that seems to be happening at the entry-level segment. Now, Ola announced the company's foray into the electronic motorcycle segment with the launch of the Roadster series. The bikes are, there's a range for different bikes. The portfolio has 3 different models. The starting point or the starting price is 75,000 rupees. So what does this mean for the entry-level motorbike segment? We have Jay Kale with us. He is from Elara Capital. Jay, so we all saw the bikes last week. And, I'm just going to go back a couple of weeks earlier when Bajaj Auto was really trying to, take the competition head on here with their hybrid launch, right? And they were saying that they want to make inroads in that sub 125cc segment, which has traditionally been a very stronghold for Hero Motor. Now you have Ola with this new challenger at 75,000 rupees. What is the kind of disruption? What are the kind of market share shifts that we are potentially looking at?
Yeah, I mean, good morning. We've had these launches from Ola, and we've seen in the EV segment, EV two-wheeler segment, till now the disruption has happened, or the penetration increase has happened mainly on the scooter side. Motorcycles to a certain extent, that from the consumer standpoint is a little different customer profile. We've had, scooters, the average daily running is relatively lower. Just about 20 odd kilometers per day is what the industry standard is. Whereas motorcycles, they are much higher. Motorcycles are used much more in the semi-urban and rural areas. So that requires a higher range, more rugged motorcycle. And one needs to see how the this EV motorcycle, while the price is attractive, whether it ticks the other boxes of the customer profile of motorcycles, which is kind of different than what a scooter customer profile is. So yes, the price is attractive, but one needs to see how the acceptance of this product is from the different customer profile.
Jay, but you'd agree, right? I mean, when we talk about two-wheelers, right, it's mostly motorbikes. Scooters is a very small segment, and Ola wasn't scooters so far, and now they're coming into what is the bulk of the two-wheeler market, which is motorcycles. So in that sense, I mean, it'll cause some ripples. We don't know, as you said, adoption with a product and all of that, of course, but it's out there now.
Yeah, definitely. I mean, scooters is 33% of the overall industry, two-wheeler industry. Motorcycles is the bulk, like you said, 60-65% of the industry is motorcycles. Till now, we've had historically just one player, Revolt, which was mainly into EV motorcycles, but that did not pick up as well as what one would have thought of. So, one needs to see, like I said, the customer profile in motorcycles is totally different than a scooter customer profile. And, while price is one aspect, definitely it will, push the other OEMs. It will seriously nudge the other OEMs to launch their versions of EV motorcycles as well at a particular price point, which actually happened in the EV scooters as well. Because of the startups pushing, the incumbents also now are ramping up on their EV scooter portfolio. The same could happen on the EV motorcycles as well. But like I said, while EV scooter
do we already know? Have you heard from all these companies, TVS, Bajaj, Hero, etc., about their EV motorcycles yet? I mean, in their calls and.
No, I mean, they've spoken of product launches in the EV scooter side. I'm pretty sure they will be working, in the background for EV motorcycles as well. Nothing that has been spelled out in the public domain in terms of when their launch pipeline is.
Well, Jay, I just wanted your thoughts on Ola Electric Mobility as a stock itself. Ever since the IPO, the stock has rallied, 75, 80 odd %, nearly doubled. Market cap close to 60,000 crores. Yes, fundamentally, everyone's looking at the electric vehicle story and they are making announcements to that extent as well. But how much do you think is a function of the way the market forces are right now and how much of that is fundamental? The reason I say this is because I'm just looking at the number of locked in shares. 83% of the outstanding equity is locked in. It's just 17% of float which is available for trade. That causes a big move in, the number of shares which are bid for versus the price at which the stock comes at you. What are your thoughts on the stock fundamentally at 60,000 crore market cap and a big move that it's already seen?
Well, I think absolutely. You spelled it out rightly that, there is this liquidity thing, 83% is locked in, and that's why you see quite stark movements, in the initial days of the listing. But, there are positives and there are negatives. Of course, being the positives, they are one of the leaders in terms of electric scooters in the country. Their ramp up has been pretty impressive. In a very short span, they have ramped up quite well on the EV two-wheeler side, and now they are going ahead with the EV motorcycles as well. But one needs to be cautious about their cell venture as well. Globally, cell prices have crashed. How much of a benefit will that cells be for their internal consumption versus peers? That needs to be looked at. The cell, stability in terms of yields is also something that needs to be looked at. And hence, once the cell manufacturing comes on full stream, how much of that really gives in terms of cost advantage is something that is, still, execution is one of the key risks for Ola over here on the cell side. On the two-wheeler side, they've relatively done better off. But cells is something that will be keenly watched. So I would want this, this liquidity-led rally to kind of settle down. We currently don't have it under coverage, so we wouldn't be able to give an official view.
Okay, thanks very much, Jay. That's an important and very interesting point because, yes, Bhavesh Agarwal has been talking about the cell venture really feeding into profitability because, cells are a huge part of the cost. But you're saying with this crash in global cell pricing, we need to see how the dynamics play out over there. So important point, take that. Thank you very much for joining in with this quick take. Let's take this back to Prakash. Prakash, you were hearing the conversation there, and this remains the question now, whether Bajaj's CNG bike emerges as a winner or whether these EV bikes from Ola, they emerge as the winner. We'll have answers only, I think, a quarter down the line. But is it safe to say that Hero is looking at some serious competition? In terms of stock positioning, what would you change? What would you add and subtract, given what we are likely to see at the entry level?
Okay, so here's what, Subhi. The EV portfolio for most larger established players, two-wheeler players, is not so significant as yet. So it won't kind of move the needle so much in terms of, the stock positioning. But on this debate between an EV motorcycle and a CNG-driven bike that only Bajaj has, I think Bajaj is also taking its time to kind of get this, not just piloted, but introduced commercially in a softer way so that they can clear all the nagging issues around the launch, the utility of the bike. But once it gets established, we are such a price-sensitive market and the segment that they are catering to, you don't have electric charging infrastructure in those markets where Bajaj is going to sell CNG, but CNG could possibly be available. So I think it definitely theoretically has a very positive construct. And you remember the stock reacted so positively after the launch was understood by most of us. So I think that's here to stay. A couple of quarters, it will just get strengthened. So I believe EV bikes is still a lot of issues around it, especially the charging part. And they're usually used for long distance drives, right? So you really don't, you can't depend on EV charging to take you 100, 150 kilometers at a stretch and come back from where you go. So that's an issue with bikes yet, and that's why scooters have proliferated. So wait for some time, but I still have a very strong view on Hero Moto bouncing back given the metrics that it has reached. It's probably bottomed out, if you ask me, in this quarter. Post the monsoon, things would probably look very positive for them.
All right, Prakash, well, thanks for that. And I want to ask you about, and Mangalam, I'm sure you've seen that story, which is the big story today, the foolproof indicator. Innerwear sales apparently are on the up and up.
Yes,
so it's proof of, as a friend put it, the andar ki baat hai. So
Alan Greenspan used to subscribe to the underwear index. He said that during good times of the economy, the sale of men's underwear increases.
I thought that was during COVID. That's when all these stocks were going through the roof. But now it's turning on its head, is it?
I'm not too sure about the COVID bit.
No, actually, COVID...
it was all about innerwears. Remember, it was the era of Page Industries because that's all we were buying.
I think that is before COVID. COVID, I think it was, there was nothing very much...
Anyway, we're going on a tangent.
Something for Prakash to chew on, and I will come back to him. I mean, it's being seen, I read a headline saying it's an indicator of the economic turnaround to come. But more on that later. Anuj is here with what he's making of the market. Anuj, good morning.
Morning, Prashant. And slightly less interesting topic, right? The market. Let's get to that. The market, passed a big test on Friday with flying colors, which is a 20-day exponential moving average. And my sense is normally this is a perfect market, which after correction is ready for an all-time high. Not only it crossed it, but it closed above it handsomely, the 20-day exponential moving average. The Bank Nifty also made a double bottom low. Somewhere around the August 6 lows. And the market cues this morning are quite good. Brent crude is back to below 80. There's some hope of ceasefire between Israel and Gaza. I think that could be something positive. The only caveat is there should not be any incremental negative news flow on the SEBI side, which is, was the reason that you fell in the first place. Of course, the market will now eye what happens in the Jackson Hole Symposium and the US Fed, the chairman's speech over there. Coming to levels then, on the Nifty, the first resistance is 24,700 to 24,750 based on the options data, and then 24,800 to 24,850 based on charts. Support, of course, is 24,400 to 24,450, where you have the 20-day exponential moving average and the options zone. And in the unlikely event, if you break it, then the 24,200 to 24,250 level, which is Friday's low. And the Bank Nifty is more crucial because it's shown signs of a bigger short covering. It's made a double bottom, or looks like has made a double bottom at around 100-day exponential moving average. It's yet to reclaim the 50-day exponential moving average, which is placed at 5950, which is going to be the first resistance around the 51,000 mark, and then 51,150 to 51,500 based on the options. Support comes in at 50,500 first at the 10-day exponential moving average, and then 50,000 to 50,200 based on the options. questions, I leave you with the quote of the day, and it ties in with what is the big event today. It's Raksha Bandhan. So it's a quote that, you know, I really like. A sister is a gift to the heart, a friend to the spirit, and a golden thread to the meaning of life. I can say that safely. My sister, for example, has always been my protector. So happy Rakhi to all the sisters. And thank you so much for protecting all your brothers and me also.
And, you know, Anuj, thanks very much for reminding us of that. Absolutely happy Raksha Bandhan to everybody. And I'd just like to add on a slightly more somber note that sisters, mothers, all of us women in this country can protect ourselves, but it will help if the men also join in. And I'm sure our viewers know what we're talking about. Huge movement in the country right now. So more power and strength to all the women out there.
Right. We take that point, and also, you know, more power and strength to all the women. But I don't just one follow-up on the conversation that we were having before you spoke about the markets. Alan Greenspan has his men's underwear index, etc. But is there any particular anecdotal index that you look at which tells about the market going up or going down, how the economy is doing? Because you keep talking about these, you know, the Domino's next to your house, for instance, or the Zudios around you and all of that.
You know, the index that I use is, Mangalam, that when I go to the malls over the weekend, do I get parking or not? This weekend I did not. So the economy is really doing well and the market is doing well, and that's why the retail stocks are doing so well. So that's the indicator that I use.
That's Peter Lynch, parking at malls, etc. Well, parking actually, unfortunately, you don't get anywhere these days.
Mumbai. Yeah.
All right, we'll take a quick commercial break here. More on this topic, and Prakash, of course, is still with us, and we're going to go back to him on some of these in a bit. Mitesh and Sudarshan also join in with some specific trading ideas in terms of technical ones on the other side. Stay with us.
The Supreme Court verdict actually was a blow for the mining companies. And mining companies, yes, they were down, but they didn't get knocked out. You know, and that was something that was encouraging, because what the Supreme Court said, that the state governments, via royalty, via taxes, they can go ahead and levy taxes both retrospectively as well as on a prospective basis. So initially people were very, very nervous because of the retrospective part of it. And if it wasn't the retrospective part of it, and if it had to be paid immediately, it would be a large proportion. If you look at the contingent liability as a percentage of the EBITDA for FY24, well, it would be very, very large. But the Supreme Court's verdict gave some hope, because there were a couple of clauses that they put in. They said that the payments can be staggered over the next 12 years. They also said that the states will not impose penalties or tax for past demands, which was encouraging. So because of this 12-year clause, well, the impact didn't look that much. For Tata Steel, they already made a contingent liability of around 17,350 crores. Now they'll be paying that over the next 12 years or so. And we have Phillip Capital that's put in a number very, very marginal in comparison to what their target price was. Similar is the case with SAIL. You know, they had marked a contingent liability of around 3,000 crores, but it has to be paid over a long time. So the impact is very, very limited on the target price. NMDC as well, they had put out a contingent liability of around 4,400 crores, but it could be passed through as well, and it will have to be paid over the next few years. So some part of that will be pushed through to its clients. In all, you know, this number, though they were looking big initially, but in fact, you know, if they're going to be given time, then it doesn't look very, very big. And similar is the case with regard to Nalco. So all these numbers that came out post it, it appeared big, but because that concession was given of around 12 years odd, the impact is not that much. On a prospective basis, what about it? Well, we already had Jharkhand post the Supreme Court verdict in July itself. They went ahead and they tinkered with the rates. They increased the rates on coal and iron ore, on bauxite as well as manganese ore. And now the state believes that the other states as well, you know, Maharashtra and other states, they will follow the way of Jharkhand. That is, don't increase taxes by that much, because otherwise, you know, it doesn't become very, very viable for those companies. So that's why Phillip Capital, they've quantified it. They say that at most, you know, most of these companies will have to incur only 1 to around 3% of the total cost of production. For steel companies, it could be a little bit higher hit, 400 to around 500 rupees approximately. But for aluminium companies, it won't be that.
Okay, welcome back. Let's just quickly run you through the technical ideas this morning. Sudarshan and Mitesh are with us. Gentlemen, good morning. Great to have both of you here. Mitesh, we finally, on the Nifty at least, ended above the 20-day. How are things looking, and what would be the trades?
Morning, Prashant. One hurdle is cleared, another one is pending, is what I understand. So there's the 61.8% retracement and the gap area around this 24,625, 24,685 zone. I think That's the level which I'll watch now. A positive opening indicated by the GIFT Nifty suggests that we might open closer to those levels. So let's see if there's follow through buying. If that happens, then I think we are looking at levels beyond 24,850. But for the timing, I'll hold my horses. The IT sector looks very good, strong on an outperformance basis. The banking sector also had a strong reversal on intraday charts on Friday. So there's a good chance that we might get past that. So we are trading with long bias on stocks, but on the index, I think we'll take it step by step. I think 24,700 will see a lot of supply come in, and only once we clear that, we can look at the next resistance at about 24,850.
All right, next resistance is above 24,850. So Darshan, your thoughts on the index?
Yeah, good morning. Well, I've been consistently maintaining all of last week that we are in a consolidation inside a bull market, and therefore every dip is a buying opportunity. So anyone who's listened to this show should have been long at some point, and we got so many dips, including one on Friday morning. That view continues. Now, there's no sense in trying to call a top in the market for me, because I don't know where it will end and how it will end. It could end today for all I know, but since we don't know, we just go with the trend. Even today, if you see an intraday dip, go long with the Nifty, keep a tight 100-point stop from where your entry is, but beyond that, stay long.
All right, individual stocks, any of stocks that you have on your list today, Sudarshan?
Yeah, yes. Siemens is a buy with a stop under 7,000. The stock has been an outstanding performer and continues to do so. ONGC is a buying opportunity. There's a small dip after a big run-up. That dip could be a buy on dips idea. Stop under 315. Lupin is a buy. Lupin has a small bullish flag which tells us that if it breaks out, it could have a significant run on the upside again. So Lupin is a buy with a stop under 2040. And my final stock is also a buy, Persistent Systems, with a stop under 4740.
And Mitesh, your?
Morning, Mangalam. I too have a couple of IT names. The first one is a buy on HCL Technologies, made a fresh swing high. So keep a stop at 16,454. Look for a first target of 1,700. Birlasoft gave a good reversal. Buy here with a stop at 590 for a first target of 620. A buy on Dixon Technologies for targets of 12,750, 800, and keep a stop below 12,170 here. And a buy on Canfin Home with a stop at 814 for targets of 880.
All right. Well, that's basically technical trading ideas. We'll come back to you in a bit for more. Gentlemen, thank you very much for joining us. The GIFT Nifty is indicating a 60-65 point bump right at the word go. We're going to be joined by Mr. Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services. The 20th India Conference kicks off today here in Mumbai. So some market conversations around that in just a bit. Stay with us.
In all, it appears that yes, this Supreme Court verdict that came in on the mining companies, it was a knock at them, but it wasn't a knockout. So that's why the street did buy into that news, in fact, in Friday's trading session.
करीब 25,000 युवा हर साल विदेश में मेडिकल एजुकेशन के लिए जाते हैं और ऐसे ऐसे देश में जाना पड़ रहा है कभी कभी जो मैं सुनता हूं तो हैरान हो जाता हूं और इसलिए हमने तय किया है कि अगले 5 साल में मेडिकल लाइन में 75,000 नई सीटें बनाई जाएगी।
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically, if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have
Welcome back. Just about 14 minutes to go before we kickstart the action today. Asian markets have been fairly range-bound, but the GIFT Nifty has been telling us it will get a pop at the open. So let's see how that plays out. In fact, the pre-open rates have started coming in as well, and that's a big one. Let's wait for it to settle and see if indeed we'll get that sort of a move. But the start seems to be on the optimistic side. Chandan Taparia is joining in for a couple of F&O ideas. He's from Motilal Oswal Financial Services. Chandan, good morning. What are you working with, index or stocks? What are the calls for today?
Good morning, Surbhi, Mangalam and Prasant. Thanks for having me. So Nifty has been moving in a range from last couple of days. It has been moving in between 23,900 to 24,400 zone from last 8 trading session. In between, it was finding sustained supply near 24,350, but on Friday, it has given that breakout. And now it seems that bulls are again back on the track. We have seen positive data setup. Put-call ratio has seen a sharp surge. Volatility index has been falling down from last 9-10 trading session. So decline in the volatility with surge in the put-call ratio indicate that market is forming the higher base. And now I believe that 24,000 will be higher base to commence the next leg of rally towards 25,000 and way beyond 25,250. But for immediate point of view, till it holds about 24,300, continue to be with buy on decline stance for a upside move towards 24,750 and higher marks. Now looking at the bank Nifty, that has been underperforming, but now it has bottomed out with multiple support zone. Nifty has taken support at 50 EMA, but bank Nifty has formed the double bottom on the daily chart. 2 times in last 10 days, it tested the support near 49,650. So small follow-up could give the confirmation of the double bottom on the daily chart. And we believe that hold above 50,250, 50,500 could open the upside target towards 52,000 in the bank Nifty. Now looking at the stock specific, we are positive on the Nifty Auto, Nifty IT, selective fertilizer, and selective name from auto ends could be in focus, and capital market related counter could be in focus. So first is buy on Ashok Leyland. The stock has given a breakout from its pole and flag pattern, which has the bullish implication. Nifty Auto Index is doing well, and Ashok Leyland is all set for 275. One can buy with a stop loss of 245 level. Second trading idea, that is buy on Coromandel. Holding the gains, major trend is positive. After the consolidating move last 3-4 days, stock is at the words of the fresh breakout led by open interest activity. So one can buy with support of 1730 for an upside target towards 1840 zone. Last trading idea, that is buy on SCL Tech. We are positive on most of Nifty Auto and Nifty IT name. Most of the IT stocks looks good because most of these stocks have turned from key moving averages with built up of long position and the delivery volume. HCL Tech we are recommending here as it completed a rounding bottom formation on the daily chart, making our top side bottom on the daily and the weekly scale. So one can buy with support of 1630 and expecting an up move towards 1750 in the counter.
Right, Chandan, thank you so much for joining in and giving us your stock picks as well as the views on index basis, the F&O positions. The pre-open rates have settled now quite a bit, and the Nifty sees a mild uptick at the open, but a lot of individual stocks in focus. We have stocks like Oil India and ONGC having settled higher, and that's largely on account of the cut that has come by in the windfall taxes. So that's a positive. Other than that, we're seeing some traction in a lot of these defense infra-related names as well. So BEML is one stock which is up around 7%, settled about 7% higher. And we're also seeing some traction on names like Zomato, which is up close to around 3.5–4% at pre-open itself. Let's take the Zomato point forward itself. Albinder Dinsau, who's obviously heading the Blinkit vertical, yesterday wrote on his Twitter and LinkedIn post as well, saying that Blinkit reached its all-time high orders yesterday, also reached its higher all-time orders per minute and GMB. So a lot of those stats were blown away in yesterday's trading session. What was special about yesterday? A lot of Rakis and Raki related things were ordered. In fact, at peak, the company hit a run rate of 693 RPM. What does RPM stand for? Rakis per minute. So they sold about 700 Rakis per minute at peak. And this morning we are also supported by a UBS note which has come in. They've raised their target price from 260 to 320. But mind you, this is on a roll forward basis, not really on an earnings change. But after the first quarter earnings itself, they've increased their estimates up by 20 to 30% for QCOM and 2 to 3% for food delivery itself. So you tweak all of that. They've compared the valuation of Zomato at 35 times EV to EBITDA. If you look at it on an FY27 basis, this compares with the average of Indian consumer retail peers at around 30 times. And it offers better growth prospects and perhaps better operational performance prospects as well, given the expected turnaround in Blinkit and improved margins in the food business. So they believe that the premium that they're paying to all the other consumer retail peers may be justified despite the up move that we're seeing. And that explains why the stock is up around 4% at pre-open.
The stock was 47 rupees around January of 2023. Yes. Zomato has really proved the naysayers wrong, and they were also raising expectations for a lot of the new age companies that are listing now, that they have shown that path to profitability is indeed possible. Prakash is still with us. Prakash, I mean, we've discussed Zomato, we've discussed the auto space. Anything else? I mean, the earnings season is over. So which are the brightest stars for you? The one or two stocks where you'd, go ahead and punch in a buy, even now with the market being where it is or the stock being where it is?
So, what stops us from adding to some of the names is the levels of the market itself, where we feel it's still a little bit frothy, and we would see lower levels. But if I were to buy at lower levels, subject to that, it would be, apart from the names like Zomato that we discussed, it would be something like a Hero MotoCorp. It would be some of the OMCs, which we've ignored because they normally don't make news headlines, but the way things have been for the entire quarter and what's anticipated going forward on crude levels, so you can very well imagine they will actually clock revenues which are faster, which are far higher and faster than most PSUs would do. So I would believe HPCL, IOC, BPCL, they make for very good buying even at these levels. But apart from that, it'd probably be a small bank here and there. It's more of adding to the same names. We've not found any numbers for any of the segments or stocks which have been very promising that you would kind of go and load up. All of them seem to be fairly priced. But yes, as I said, at lower levels, you would buy probably an ITC from the consumption basket. Autos, it would probably be a Hero Moto. So those are the names that we would still stick around.
I just put up these names if we can. These are big movers from Friday. PB Fintech had a big move, about 6-7%. And this is all the so-called we're talking about Zomato, but these are the other sort of tech new age stocks. Paytm is another one. PB Fintech, big mover. Paytm was up 5-6%. Zaggle was another one which was up 8-9%. And there was also MapMy India, which was up sharply. So these are all kind of interesting moves which we had on Friday. But then, I mean, that day you had so much more. From the consumer names, let's do a quick check for Barbecue, which was up 10% on Friday. I'm not sure if there's anything more. Jubilant Food, of course, had a move after numbers earlier. Ethos was another consumer name which was up sharply. That's essentially the watch retailer. And in the financial space, on Friday, you had names like Piramal Enterprises. Piramal Enterprises went down 10%, then went back up 10%. So just a complete flip-flop after earnings, of course. But you also had AB Capital, which did well. You had Nippon India, which was higher. So just highlighting some of these sort of interesting movers from the previous trading session. But Voltas is another one we want to sort of highlight. And there are some brokers weighing in. I think there's UBS on one side, and I think there's Kotak on the other one. Sud is here with details.
So Voltas stocks saw a huge run after reporting a healthy set of earnings, and on Friday, company held a management call in which it has given the guidance for UCP business margin, for which it says it continues to maintain high single-digit margin guidance for FY25. Majority of the brokerages, though, remain bullish on the stock after Q1 earnings. Nomura has a buy call and target is ₹1,857 per share. It says growth outlook remains strong and it has raised FY25 UCP revenue growth to to 30% from 26% earlier. And also it adds priority of market share gain over margin. It's a step in the right direction by Voltas. Jefferies has a buy call and target is rupees 1770 per share. It has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and target is raised to 1960 per share. It says company is optimistic on demand for Volt Beck and products in Q3 FY25 that is likely to be led by festive spend. Morgan Stanley has an equal weight rating. Target is rupees 1225 per share. Kotak Institutional Equities, though, has a sell call and target is rupees 1100 per share. It says there is a limited margin expansion and changed guidance indicates intense competition, and it has raised estimates by 11 to 14%. CLSA also maintains underperform call and target is raised to 1310 per share. It sees limited re-rating potential, and last is GS. It maintains sell call and target is 1310 per share. It says margin may have limited room to surprise positively in the future after a strong set of earnings in Q1.
All right, Sudarshan, thanks a lot for that. So that's about Voltas, settled about 1% higher in pre-open after a big move that it saw all of last week as well. Just one question to Prakash as well. Prakash, what are your thoughts on the cement space now? Because over the weekend we also got the news that JSW Cement has filed for papers, finally a 4,000 crore issue, of which 2,000 crore will be fresh. Parth Jindal had said to us that, you know, they're eyeing 60 million tons of capacity by the end of this decade. And it could be both organic as well as inorganic. They're mainly in the south, and south is where a lot of the action is as well, given, you know, Ultratech's deal with India Cements. And this morning as well, there's the completion of acquisition of Penna Cements by Ambuja. So many assets which are on the block, so many buyers which are looking to strengthen their positions. And all of this as we come towards the end of the monsoon season, where there is perhaps the hope of a price hike coming in as well with higher infra, etc. play. How do you look at the cement space right now? Are there any stocks that really stand out for you?
Yeah. So, you know, to make it very simple, it's either the acquirers or the potential acquirees, if I'm, you know, those are the two segments that you need to fish out of. And if you look at most of the eligible small players, prices have already gone up in anticipation of some kind of an inorganic growth participation that they would be involved in. But if you hear commentary from most cement players, they have been very clearly not anticipating a price hike or they've not made it imminent in their projections. And the cost advantage that you saw in the last couple of quarters probably also stabilized now, Mangalam. So there's nothing much in terms of margin growth. Now, where do the volumes come from? And that's where the consolidation becomes much more promising. So I would still go with the acquirers. What has happened to Ultratech after it's acquired these 3-4 assets in the last few years? They've ramped up, got economies of scale. The same thing Ambuja is likely to do. So if you really were to buy into a business for the long term, it would be something like Ambuja. Of course, you know, you could debate on the pricing and all of that being higher now. But I believe what they are trying to build as a portfolio is going to be significantly dominant in terms of pricing power. And that's what the cement industry needs eventually. So I would go with Ambuja. They've done very well in terms of rationalizing their existing assets as well. And I expect them to continue doing well going forward on.
Okay, all right. Got that. Just a couple of minutes to go before we kickstart trade. By the way, some of these oil and gas stocks are also rejoicing the fact that the windfall tax has come down. So ONGC, for instance, is up about 1.5%, and Oil India, also about 2% higher. So tracking some of those moves. Okay, let's quickly move to our technical experts, get the calls in for the day. So Darshan, what's the stock you'll go with?
Well, I'll go with ONGC, buy with a stop under 315. Okay,
ONGC. And Mitesh, your stock?
I'll choose a buy on Canfin Home for targets of 880.
Okay. All right.
All right. Thanks very much for that. Mitesh, I was talking about these names earlier, Paytm and PB Fintech and Zaggle and MapMy India. Anything stands out to you?
A couple of them, Prashant. Zaggle is something which I like. It's been making new highs. There is signs of expansion on the daily and the weekly chart, so this stock could do well. The last closing high we got was around 380, and the stock just managed to close below that on Friday. So I think it will complete a saucer top pattern, as we call it technically, on a closing about 380, and then one can look at targets in the range of 460 to about 480. Similarly, delivery is also on the radar. I think, after a long time, the stock showing signs of reversals. It needs to get past this 420, 421 zone, and then it can head towards 460, 470 zones.
All right. Just before we start with market opening, keep an eye out on PVR. The stock settled higher in pre-open, up around 2% and that's largely because the last 5 days have been very good at the box office. Stree 2, the movie that released, has done almost 200 crores in collection so far. Some on the street are expecting 350 crores as well, which in a lean period is pretty good for the industry. The stock has already seen a bit of correction, so maybe this quarter being good on the back of content pipeline does well for them. The last 4 days have been good.
Absolutely, and stocks up 2% in the pre-open, as you highlight. Well, let's quickly wait for the market open. The first rates coming up on indices, and then we'll get into stocks. What do we have at the word go? The Nifty starting about 0.4% higher, 24,636. 24,636, by the way, is that gap area which the Nifty needs to target, and then, of course, beyond that, perhaps a little bit more. So 24,618 is where the Nifty is at, 616. That's about 70 points higher. The Nifty Bank is up about 100 points. That's a 0.25%. And 50,622. We've got the IT index, which of course was a big mover on Friday, which is up about 12 points, 10 points. It's actually now almost in the red. Advanced decline is good to begin with, but it's early 8:1 in favor of advances. So that's the essential sort of rates as far as indices are concerned. As you can see on the Nifty 50, there are only 4 stocks which are down more now, but it's overwhelmingly green, at least to begin today's session.
Well, the stocks that are catching your eye are actually beyond the Nifty. Zomato and Ola Electric. Ola Electric still electrifying, 5% up at the word go, and Zomato is reacting very well to the higher target price that UBS is ascribing the stock now, 4% up on Zomato. Anyway, back to the Nifty. Let's see what's working here. The stocks that we were just discussing, ONGC, it was also Sudarshan's call for the morning, 2.5% higher as windfall taxes have been lowered quite substantially. BPCL is up about 2% thereabouts as well. Reliance is up, so these are the early movers, and you've got gains on Shriram Finance, Tata Steel, Ultratech Cement, Adani Ports. Very diverse set of stocks taking the market higher. What are the banks doing? The bank Nifty is actually in step with the Nifty, so not too bad. SBI is up about 0.5%. HDFC Bank is sulking. It's absolutely flat. ICICI Bank is up about 0.5%. So divergent trends across banking. And finally, IT seeing a bit of a cool off, not a sell-off, but a cool off after the Friday big move. TCS Infosys down about 0.25%, but not bad. 88 points up on the Nifty.
Not bad at all. In fact, it's picking up for the Nifty. What's picking up more is the broader markets. Nearly 1,800 stocks advancing for about 300 stocks which are declining, making the advanced decline ratio at a firm 6:1 at open itself. We were talking about a bunch of stocks that are doing well, right? So from the broader markets, Voltas continues to move higher, up around 3% this morning. The street likes the commentary that is coming from the management. We spoke about PVR as well, up around 2.5% at open itself. Birlasoft, it's one of the stocks that we highlighted this morning that in an otherwise profit-taking mood for the IT pack, Birlasoft is standing out with a 3% up move. It follows a 6% move that happened on Friday as well. The stock's out of F&O ban, so that explains one of the moves that we're seeing. On the pharma pack, though, we're seeing some bit of profit-taking. So, you have names like Strides, Alembic, Aurobindo, Torrent. In fact, of all the top losers in the F&O space, 4 out of 5 belong to the pharma pack itself. So we'll just keep an eye out on that one. And Ola, when you spotted it, it was up around 6%, now up 9%, taking the up move all the way up to nearly 90% from its listing. So, maybe a couple of more rupees from here, and Ola will actually double from its issue price of 76 odd rupees. So we're looking at a number at 152, which would mean that the stock has doubled from its listing. So 10 rupees from here, and the stock would have doubled in just 10 trading sessions. That's about Ola Electric, and a lot of these other stray stocks doing well. Case in point, something like Ajmera Realty, Keynote, some of the real estate stocks, and Kitex Garments as well continues to do well, something that we've seen over the last few trading sessions.
Absolutely, Kitex is up 40%, and today is the third session, so that's how fast some of these moves are. But of course, Ola continues to be really quite something. So 143 on Ola right now. CDSL is up about 4% as well. GMR is another one. Vivek was highlighting GMR. It's up 5. It's locked up 5%. Keynes is up 5. PGEL, that is PG Electroplast, is up about 4% or so, amongst other things. So this is a pretty good-looking screen all across at this point in time. Well, 70 points on the Nifty is what you have, 24,600, and it's looking pretty good as far as the screen is concerned. PB Fintech is taking a bit of a knock. It's down about 3%, but the stock's done very, very well over the last couple of trading sessions. Let's welcome in Ramdev Agarwal. He's chairman and co-founder at Motilal Oswal Financial Services, and he's joining us from the sidelines of the Motilal Oswal India Investor Conference. It's the 20th edition. Ramdev, great to have you with us here. Appreciate your time. Thanks very much. Prashant this side. You know, the mood is buoyant as it has been the last couple of years. You know, a mini heart attack about 10 days back with global markets and huge amount of volatility. But that was just it. And the market has looked through that as well in some style, especially here in India. In the US, the S&P is just 2% away from its highs. So, you know, remarkable stabilization across markets. What are you most excited about, Ramdevji, at the conference? What theme, what would you like to hear over the next couple of days? What would you keen to sort of, it's not just what you are telling investors and they'd want to hear from you. What do you want to hear from the people who are gathered there for the conference?
Yeah, good morning, Prashant. And actually, this is a wonderful time post-election and post-budget and all. This conference is coming up, and we are seeing very wide participation from the corporate side as well as from the fund side. A lot of FIs are coming in today, so I'm looking forward to talking to them. So I have two objectives to figure out. One is sitting through the corporate meetings and try to figure out what's happening on the ground. Because the recovery post-COVID has not been across the board. I mean, there has been some patches where like consumer and all, FMCG and all have been very slow. So what's happening there? So we have Godrej consumer coming up, and Hero MotoCorp will start the session, one session immediately after. So there are a whole lot of corporates we have designed to get two things for the people who are attending the conference. One, to figure out what's happening on the ground across the sectors, where the bright spots and where are the challenges. Second, what's the behavior likely to be of the FIs? I mean, FI is a big player in Indian context. Of course, because of retail participation, the importance of FIs is kind of reduced, but still they are very large players, and their participation, particularly on the upside, buying side, can further fuel the markets, what we are seeing in last 2 years. So these two aspects are the key focus points for me.
All right. Very interestingly spelled out, Mr. Agarwal out here. You speak about on the corporate side, how's demand, and on the investor side, how the FIs are looking at the Indian market. You know, you talk about bull markets climbing walls of worry. There are multiple mountains of worry that we've crossed over the last month and a half or so itself. But now the bull market itself has become a bit of a cause for worry, largely because of everyone talking about valuations and the kind of euphoria that we are seeing in a lot of the stocks. Is there any hint or tinge of risk among all the participants who are there around? Is there, you know, any sort of worry that people are talking about?
So this early, in the sense that we have just about, I mean, this is early morning, they are just coming in, pouring in. So through the day, as we interact with them, we'll get to see more probably one-on-one meetings in the evening. That will open up their concerns, their excitement about India. I mean, I think the only concern, even among the domestic investors and global investors, is the valuation. Global investors have a choice not to come or go to some other markets, buy stocks somewhere else, or not buy at all. Whereas domestic investors don't have any choice, but to, if at all they want to buy, they have to buy India. So, so that's a fundamental difference. And so we have to gauge the mood about the FIs. And what I had seen 2 months back, I was in US, and what I felt was they were waiting for the election event to get over, and then they will take a fresh look at India. So whether they are as positively inclined as the domestic investors, that we have to see, or will the valuation keep them away? So it's a, I think we can talk about it only after 2 days, not now.
Ramdev, good morning. Great to see you there from the conference, and then the buzz is, you know, quite palpable. We can feel it here in the studios as well. The one corporate conversation that I would really watch out for and would want to know what the outcome is from Hero MotoCorp. I think you have some members of the management who are joining in. And these are very, very interesting times for the two-wheeler segment, right? Because you have Bajaj turning on the competition by launching that CNG bike. You have Ola really turning on the competition by getting into motorcycles as well. And look at the Ola stock, Ramdev. It's almost doubling since listing. So markets we know can swing to extremes, extreme fear and extreme greed. Where do you think we are on a business like Ola? And in general, what's your sense on two-wheelers? There's so much happening here.
Yeah, so as the bottom of the pyramid picks up, I mean, when the trickle down happens and bottom of the pyramid picks up, the demand for two-wheeler has to just explode because the penetration still has a scope to move up. And for last 2-3 years, they were slow immediately after COVID. So a lot of replacement demand is also likely to happen. So my sense is that demand for two-wheelers is going to pick up. But that's whether it is happening in aggregate. I mean, yeah, the excitement of Ola for their market share, the excitement of new business model, those things are there. But actually what is happening on the ground, that will come to know when we meet Hero management and Ola management or whosoever are there from the industry. So I would think that the best is ahead for the industry. As we go forward, recovery will pick up. I think we've seen the first quarter result. First quarter result was fantastic for Hero, and I think they are going to get back their volume pickup because monsoon is very good. So the post monsoon, I think when the crop time comes, my sense is demand will be quite buoyant.
Got that, Ramdevji. One of the other names. By the way, Zomato at the conference.
I don't think so. I mean, they might be there as a company meeting, but they're not there on the CEO track.
I see. I mean, we're getting newer and newer ways of assessing demand, right? Weekend orders. Yeah, I'm sure you would have seen. And the pace of ordering, it's something that you've been... I don't know if you have to do it now every weekend. On Monday, we have to see what the weekend was like we do for movies sometimes. But incredible run. I mean, and you've been bullish. You were early on. You've been bullish. But at a fund level, you've also been booking profits there, Ramdevji, as far as Zomato is concerned. What's the thinking overall? And how much do you own? How much did you start with at the peak, and how much do you own now, as far as that position is concerned?
So that, I mean, at mutual fund level, those positions keep changing. But what you said is right. What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level. But exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus. I think even fund managers, they also get a little jittery when the stocks move like this, and they do like to book some profit so that next opportunities they can bet on. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant, in the sense that this is the largest internet business, and it is one of the largest opportunity one is tapping in quick commerce particularly. So I think the best is yet to come again in this particular segment.
The wealth creation metric that you have, Mr. Agarwal, it's usually about the size of the opportunity, the improvement in margins, and the underlying valuation re-rating which may come about as well. For Zomato, we've seen a fair amount of that, but the size of the opportunity still remains. I wanted your thoughts in particular on Trent, because there is a CEO track out there. Trent continues to compound at upwards of 80% when it comes to earnings. Valuation re-rating has happened, I mean, over 130 times 1 year forward earnings. What more are the triggers for wealth creation out here? What is it that you would like to hear from the management of Trent at the CEO track?
Yeah, so the valuation part, I mean, businesses are very exciting. What they are doing, what they are achieving, that is very exciting. But the the valuation part, which is happening at 100, I mean, the pace at which, even if you look at the Ola listing at 76 and now 140, as I've heard about it, I think 140, 135, 140. So the kind of demand which is there in the system, and all the fund managers, they're sitting on cash. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
That's a interesting sort of a dilemma, I think, that a lot of fund managers are confronted with, and you've beautifully summed it up, sir, that the underlying businesses might be great, but at what price do you keep buying them? So, Ramdev ji, then tell us what excites you. I mean, if we simply, try and marry the two, where there is underlying momentum, growth, business potential, and valuations have not turned completely sort of out of whack. Where is that, that space in the market, if you see it at all?
Yeah, so one of the things is that newer opportunities are coming up. Like say, all these digital companies were kind of not down and out, but were out of favor. So all the PSUs were another segment which was completely beaten down at some point of time and became darling of the market. Right now, say, banking sector is completely out of, I mean, it was darling of the market for decades, and that's where the FIs put a lot of money, and today it has not done well because they have also sold a little bit of it. But when you look at the fundamentals, I mean, I was looking at my presentation, and there one of the slide is about the quality of NPAs or quality of assets, credit quality in the banking system has been, I think right now it is historically the best, and it is becoming even better. And if you look at it, while the business is growing at 15-60% and quality of asset is the best, and it is likely to remain better as we go forward, and yet the valuations are at the lowest. So I think the market does this funny thing. And that is what throws you opportunity. So I would think that you have to be a little contrarian, or you have to buy into something which is unpopular, but you have conviction. So that's what, and it's not that all the sectors, 50-60 sectors, it's not that all of them are in unreasonable valuation. There are 10-15 sectors or segments which are reasonably priced or underpriced. I think that's where you have to pick up the stocks.
And which one of these would you like the most? You're saying there are about maybe 10 to 11 segments at least, which are still reasonably priced. Out of these 10, 11, which would be the ones that you like the most, Ramdev?
I would look at still BFSI in that capital market, as I also have told. Capital market still looks very exciting. You look at last month Demat addition, it was almost all-time high, 4.5 million. So the way market is expanding, the way flow is, I think capital market guys, they're still, I think the growth in the segment is going to be quite significant, and it is going to be very high quality, asset light. So I would think the banking, the private sector banking and BFSI, they look to be good. Even insurance is looking up very well. But there are other segments in manufacturing and all. One can look at it, but since I'm not that clued on to day-to-day stock picking, I would think that this sector is close to my heart, and they look to be good.
And it's likely, and for the capital market space, a lot of the chatter was, regulators trying to slow down, trying to put some brakes, right, through all these regulations on the F&O side. And you think that is now, that bump is behind, or what's speed bump, not a bump, but a speed bump is behind, or does that cause any worry at all? Could there be more coming? What's the sense? Taxation went up, the market hardly noticed, but I mean, it is happening, right? Some of these speed breakers are being put in.
Yeah. So I think regulators are putting some restriction on the expansion of the F&O market, but there is a lot of, see, it is about the energy. The participation, the money is coming in the market. Now, whether it goes into F&O, whether it goes into cash market, see, once the restrictions come, then only players will decide what is going to be their new game. Because the money is there, money is pouring in. So I would think that with a little break in terms of volume expansion for a quarter or two, and market will get adjusted to the lower earnings, lower volume, whatever. But I would think that in a year or 2 years' time, even with the new restriction, we'll see all-time new high in terms of revenues and profits from the players. Because regulators can restrict the volumes or who should play or what should be the lot size and things like that. But what the entrepreneurs will do in response to that, that is yet to be seen. So I would remain, if the business is growing, participation is more, funds are flowing, I would think the capital market in general, despite regulators' concern, will do very well.
Right. Going back to the Zomato point itself, quick commerce as an opportunity is a large opportunity. Everyone's talking about the sort of, runway for growth that there is, but increasingly there are more competitors raising a fair amount of funds as well. Flipkart started Flipkart Minutes, for instance. Zepto's raising funds at breakneck pace out there. So do you think the strategic significant advantage of Zomato in that will continue, or at some point it becomes a 2-3 player market?
Even today it is 2-3 player market. I mean, in quick commerce also, you have Insta, you have Blinkit, and now Zepto is building up very quickly. Zepto is presenting tomorrow. A very wonderful story to listen to. There will be a lot of excitement out there. So again, they're all bit away from the serious money making, but the pace of growth, 100%, 80% compounded. I think the compounded growth of about 70, 80% or even 100%. I mean, in just 5 years' time, you look 3 or 4 years' time, you look very different. And once the operating leverage starts working from, say, from negative 2% or 3% net margin to 2%, 3%, 4% net margin, you can do the numbers on a large turnover of $10, $15 billion. The numbers will achieve. And another thing is that it is going to be a very asset light. So free cash flow will be very, very large. Economic profit will be high. So this is a completely different environment, different type of companies, different growth levels, different free cash flow, and a very sustainable, visible kind of demand in growing economy. Today we are a $4 trillion economy. In 10 years' time, we will be $8 trillion economy. Now in 8 trillion, your consumer demand will be at least 3x more than current levels. And the players will be only 3. So the growing demand, consolidated playing field, and then the margin expanding. People want convenience in India. So I think it's a very exciting time for these companies.
Adit of Zepto had said that in the next couple of years, they'll be bigger than DMart. I just wanted your thoughts on DMart. What are you thinking about DMart? Because Blinkit has said they are not gaining any share from DMart, or they are not eating into their shares. The segment of the audiences are different. But if consumption has to increase and value-conscious consumption has to increase, is DMart an opportunity currently?
No, DMart has its own customer base, and I think still they have not covered the geography of the entire country. So, I mean, if you go to the developed market also, I think this organized format stores, they have a role to play, because ultimately this quick commerce, online buying and all, it can take care of some portion for the convenience, but the bulk of the buying happens from the stores. So I think DMart has a different segment, and they will keep doing well. Just that DMart might be growing at 15-20%, where these guys are growing at 80-90%. And 80% growth is not 4x. 80% growth is like 20x. So that has to be understood in the mind that 4-5 times more growth on the top line and bottom line is not 4x for the valuation.
Ramdeo, I want to get your attention back to Ola. I mean, how can we not, right? And I think our viewers will really benefit a lot from your wisdom. You've seen this for decades and decades, right? So now here's a new business. And I guess timing is also very interesting, because we were just discussing Zomato. Zomato has proved to the street that good businesses can come. They can come making losses, but they can turn around. They can have sustainable growth. Maybe that's also having a rub-off effect on Ola. Apart from the scarcity issue that you described, right? I mean, to get good businesses at a good pricing. They offered this business at 76. The market is now almost giving them 150. Is it getting excessive? How should investors look at Ola?
Subhi, I'm sorry to say that, but my knowledge on Ola is very limited. Except that I know that they are clearly leader in their field, and in two-wheeler particularly, I have seen being number one is very important. So on the electric mobility, they are clearly number one, and they have very dominant share. And so that dominant share is what market is very excited about, because still the transition from IC to EV is limited, and so I think at some point of time, as the transition picks up from petrol vehicles to electric vehicles, I think they are there to encash, and their positioning is so strong that it is going to be extremely difficult for anybody else to dislocate them from the current position. And that's what market is saying, that okay, you are number one and I want to be in my portfolio even if it is a little expensive. That's what I hear. I don't think the current fundamentals per se would justify the price one is paying right now.
You know, Ramdev, let me ask you about what this means for the traditional big boys, right? And you have been one of the earliest, I think, persons who picked out Hero. It was one of the stocks many, many years ago that you singled out. Now, for Hero Moto itself, the landscape is really changing, right? You have Ola with this competitive, fierce intensity. They're getting into bikes, and their bike is starting at 75,000. There is Bajaj, which is always a challenger. Bajaj is saying we've got a CNG bike now. They want to also make inroads into the traditional stronghold of 125cc below, which was Hero. So for Hero Moto, a company that you've loved and liked and tracked for so long, what is the road ahead looking like?
See, for them, both the sides, one of the things is that now the competition in the IC side is not coming in the sense that new competitors are not coming. There are three guys, Bajaj, Hero and TVS. They themselves are kind of fighting among themselves. So if the market expands and the transition to EV remains slow, in that case, they have the entire booty amongst themselves. And then on top of it, the export market is also looking up. So I think they have, and also at some point of time, they'll also become a dominant player on the EV side. It's not that EV is left out to Ola or everybody has a EV offering, and I'm sure they'll give tough competition. But this is the problem of the winner's curse. When you are so good with the old technology, it becomes very difficult to get into a new one.
Yeah. Ramsiji, let's wind this conversation down. Politics is back, right, on the anvil. Yeah. The last election results did barely sort of caused any breaks, but now we got state elections. Although we don't have the date for Maharashtra yet, but we do have it for Haryana, J&K. What's your sense? Do you think Maharashtra is a big one? Maybe it'll have a little later. But they'll have to do it because the assembly session ends on the 25th of November, if I'm not mistaken. So they have to do the elections, I think 1st of October and then maybe mid-October, maybe a little later. What's your sense? Could it be a market moving event in that sense? Because it's not very far away.
I would not be. I don't think so. I mean, if the central election where the ruling party lost its majority and we got into some kind of a coalition government, that didn't deter the market. I mean, what happens to us? How does a small one-state election matter? In the sense that, yes, it is important politically, but as far as the stock market is concerned, I think we have seen and got over it much bigger event than what is ahead.
No, that's well put. Thank you very much. We would love to go on, but I understand you have sessions to go to as well, and people are waiting to listen to you if they've not been listening to you here on CNBC. Thank you very much for joining us, Ramdevji. Have a fantastic conference, and we'll touch base in a few days after the conference is over. And I think, as you said, you'll have a better sense after speaking to people about those the two things you're trying to understand: recovery on the ground, and of course, behavior of FII is something we started the conversation with. Thank you very much. 80 points on the Nifty, 24,620 is where we are at, and it's looking pretty good. We'll take a quick commercial break here. We'll be speaking with the management of Electronics Mart India to discuss their business and, of course, the recent stake sale by promoters. Stay tuned.
sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर
Welcome back. Looking good for the markets. The mid-cap index doing well this morning as well. One of the stocks on our radar is Electronics Mart. The reason why we're speaking to the management, apart from getting their business outlook going forward, is also because on Friday, promoters Karan Bajaj and Pawan Kumar Bajaj sold about 8% stake in the company. Promoters who held about 73%, their stake comes down to about 65%. Premchand Devarkonda, who's the CFO of the company, joins in now. Thanks a lot, Mr. Devarkonda, for joining in. Obviously it's not your call to take, but if you could explain to us what the rationale for the promoters' stake sale was, and secondly, is there any more on the cards? Because, they've sold about 7.8% already.
Very good morning. And first of all, thank you very much for having me on your show. Before we get into the further discussion, I would like to update you on the background of our promoters. Our promoters started this business way back in 1980 from the scratch, and they reinvested whatever they earned from the business in the same business, and they grew the business over a period. And it is the time for them to unlock their capital and also secure their families. So that was the only intention they had for diluting their stake in the business. And also they don't have any plans to set up any parallel business. So the entire family is working on growing this business, and they don't have any other business also. That's the reason why I think it is,
What we want to understand is if they will sell more, because now what they've sold gives them about 690 crores. They still hold about 63% stake in the company. Will they continue to hold on to that, or could there be some more selling in the very near future?
It will not happen in the near future, as per my discussion with our promoters. And they are right now holding about 65% stake in the company, and that will be retained by them till our share price touches 1,000 rupees. That's all.
Sorry, you're saying?
He's saying promoters will be there till the share price touches 1,000 rupees. It's 41 right now.
And So let me combine.
So they won't sell till 1,000 rupees.
No, I'm just saying in jest. You said near term and 1,000 rupees. So 1,000 rupees in near term.
If it goes to 1,000, we never know. Like if someone wants to pay, right? So we never know that. But I'm very jokes apart, and they're very clear that they want to hold the 65% for long term. That is for sure.
Okay, long term. And should we take that 1,000? Or you was just saying that in jest? So you're saying that for the long term?
I'm just, don't take it seriously. I'm just kidding.
Okay, got it.
Okay, so let's come down to the brass tacks, to the business. And business has looked quite okay. The revenue in the first quarter is up 17.3%. Your margins have been steady at around 7.8%. Let's track the longer term trajectory. Same store sales growth. So in FY22, it was around 22%. It dipped to about 17% in FY23. FY24 was 8.4%. So give us two parameters. One, what is the revenue target for this year? And second, what is the same-store sales growth that you'd like to maintain on a steady-state basis?
See, we are targeting year-on-year 15% top-line growth. That is 7%. And second thing, we would like to maintain the same-store growth at above 8%. So it may go up to 10%. So it will be ranging between 8 and 10.
Okay, so same-store sales growth between 8 to 10%, top-line growth this year targeted at about 15%. Just break this down in terms of geographies as well, because while you're really dominant in South India, you've also been expanding into the NCR region, into the north. So what is the revenue mix right now, and how do you see it shape up as we go towards the end of the year?
See, currently we are getting 60% of revenue from Hyderabad, about another 8% has come from NCR, and the remaining from the Telangana, Andhra states.
Right.
So that mix, that proportion will be more or less same for the year. So that's what we are expecting.
All right. You know, Mr. Devakonda, I wanted your thoughts on 2 points in particular. One, NCR, while it is a small contributor to your revenue, the leverage out here available is a lot more, because NCR is still about 2.6% margins. The per store sales is a lot lower than what you do in South as well. South has 8.3% margin. So at what point does NCR scale to the same per store metrics as the South? That's point number one. And secondly, because a large part of your revenues are Andhra and Telangana, the recent political elections, etc., which is happening, the thrust on infra in Andhra and Telangana, could there be further than this 15% growth out there? So on both South and North, I wanted your thoughts.
See, North, we have a lot of scope. Currently, we are having less than 5% market share, not even 5%. It is further less. It is at around 1% market share in NCR. There we have huge potential to grow our business in the near future. And it takes at least as per my assessment, it will take another 2 years to reach the same levels of the South market. And South market will be growing because the economies of these states are improving year on year. So as a result, the market is also expanding. And we are also expanding our stores to the tier 2, tier 3 cities rampantly in South cluster. So as a result, there will be consistent, at least for the next 4-5 years, there will be consistent growth in the existing market, and there will be the growth will be much better in the North cluster.
Sir, just a word also on your product mix, because I think it's the larger appliances, the high-ticket items, which fetch you better margin. But their contribution in your mix has been coming down. Mangalam tells us it's come down from 61% to about, I think, 42% in FY24. So what is the targeted mix that you want to have? And give us some sort of a trajectory on margins. I mean, full year blended EBITDA margins for this year, what is it that you're aiming at?
See, the product mix is not under our control because markets will drive that. So if the demand for mobiles go up, obviously their contribution will be more in our product mix. So, for example, in the last summer, there was huge demand for the cooling products. As a result, the proportion of the large appliances has gone up drastically compared to the earlier years. So that's why it is purely dependent on multiple things. But we are giving equal importance to all the product categories because each product category is headed by one business head. So their responsibility is to show an improvement year on year in their categories. So that is one part. And what is the second question you asked?
Margins. The margins, sir. Full year margins, what are you targeting?
So in the first quarter, we had an EBITDA margin about around 7.8%. And by end of the year, it will be above 7%. So between 7 and 7.5%.
All right, we'll leave it there. Thank you very much for joining us. Good speaking with you. And thank you for being with us here. I just want to take a quick look at the markets as well. So on the Nifty, it's 30 points, just 30 points left. So, you know, the high point today was 24,640, and we've given up about 70 points from the high. So 24,570 or so is where the index is now trading at. So this is not a good look. It's a red candle and a prominent one at that, but this is still early days. Of course, remember, we are also coming out of the 400-point big rally that we had on Friday. So that was a pretty large one. Bank Nifty is marginally in the red. That's been the underperformer between both indices. Market breadth still holds very solid, 4:1 in favor of advances. You know, just look at Hindustan Zinc because, I mean, I think there was, of course, a big crack on Friday, and it's down to about 493 now. Hindustan Zinc. I think it's once again, Hindustan Zinc stock will come up. It's once again the biggest volume-led loser for the second day running. On the NSE, it's the biggest, by far the biggest volume-led loser, 492 on Hindustan Zinc. There's Mazgaon Dock, which is sort of 3% down. Prudent, again, from the highs, it's taking a bit of a knock, 6% lower. Mahindra and Mahindra is down about 1.33%. Policy Bazaar is coming down about 3.5%. PB Fintech, of course, after Friday's very sharp gains, is coming down. Suprajit is down about 4%. V-Guard is down about 5%. And so it goes. So volume-led activity is still very much on the upside, but just highlighting some of what is happening on the downside as well. You got about a 30-odd point out there on the Nifty for now.
Prashant, absolutely take your point, but I just wanted to highlight some of the stocks that are managing to buck the trend as well. A lot of them are news-based. We were so sort of absorbed looking at Zomato and Ola this morning, but the others deserve a mention. BEML, remember we told you in the beginning that a lot of cabinet approvals have come in for large ticket metro projects across Pune, Thane, and a couple of other places as well. That's working very well for a stock like BEML, which is up 6%. There's Kaplan Point, which has received the Brazilian regulator's approval for one of their facilities, pharma facilities in Tamil Nadu. That stock's surging 8% right now. Shiva Cement is owned by JSW Cement, which is doing an IPO. So Shiva is up about 5-6% as well. So these are some of the stocks in news which are having a good day despite the market overall cooling off quite a bit. Well, with that, let's quickly move on to the next theme that's coming up for discussion. We have with us Abhishek Kumar, Equity Research Analyst at JM Financial, and also Mr. Vijay Simhaj, COO of Zenzar Technology. Thank you so much, gentlemen, for joining in. Mr. Vijay, I want to start with you. The topic that we want to discuss is whether the IT sector is really past its worst, given what we saw in the first quarter, and whether these green shoots are really visible in some of the foreign geographies like the US. Why don't you take it off and tell us what you're hearing from clients now? I mean, in between, there was this big fear about the possibility of a US recession, but now data is again looking good. So the macros are really confusing. You tell us, what is it that you hear on ground from companies?
Yeah, so look, good morning. Thanks for having me. So I think overall we are seeing that the demand situation is stabilizing for the IT sector, especially from the US economy. For us in Zensar, we actually had a 6.6% sequential growth Q1, and we are cautiously optimistic that this will continue for the rest of the fiscal year. Having said that, I don't think it is same across all industry sectors. I think it is stable in BFSI. There is moderate amount of growth that we are seeing in the manufacturing and consumer services, primarily in the consumer service. And healthcare as well, there is cautious spending. But in the tech sector, we are seeing some bit of right sizing. So it is fairly volatile. So it's not a uniform stuff, but based on what we saw in Q1 and what we are currently seeing, I think we are cautiously optimistic about the rest of the year in terms of growth in US.
Gentlemen, morning. Mr. Vijay Simhaj, Prashant here. If I can sort of ask you, at a broad level, the concern is that the growth rates that we saw pre-COVID, right, on a CAGR basis, that will not repeat for the IT industry over the next couple of years. So you're essentially going to settle in for a lower rate of growth. Is that an assumption one should make, or do you think it's going to be, as you said, it's different sectors are growing at different speeds and it depends on what a company is exposed to?
Yeah, I think it'll be very difficult to broad base it. We are definitely seeing that the clients are a lot more discerning about discretionary spend. By that, I mean that there is a lot of focus on like digital commerce. There is still focus on customer experience, definitely focus on automation, and of course, legacy modernization in pockets. So given these broad trends, and of course, there is a lot of excitement and enthusiasm about AI, Gen AI, and the way it impact business in the larger scheme of things. I think it will be not right to make the assumption that like we will not get to the pre-COVID levels of spend. But having said that, right, I think clients are discerning in their discretionary spend, so there would be some short-term volatility.
Okay, so would you hazard a guess? I know this is difficult to put a number to these things, but Vijay, would you want to sort of, and I'm not saying Zensar alone, but overall, the peer set, are we looking at sort of mid-single digit, high single digit? What should one expect for FY25 going into maybe FY26? So next 2 years, I mean, just the overall growth trends.
Look, I think it's very difficult to hazard a guess, and we particularly are not into the giving the forward-looking guidance. We are cautiously optimistic. Our Q1 was really good in terms of 4% quarter-on-quarter sequential growth, and within the US market, a 6.6% growth. As we have said in the past, our offerings around experience, engineering, and engagement is finding a lot of resonance with our clients. So we are cautiously optimistic that we will continue to grow. It's very difficult to like hazard a guess at this point of time.
All right, not asking you for forward-looking statements, but I remember the first after the first quarter when we had this conversation, you were talking about a couple of large deals being in the pipeline, and you were hopeful of converting a couple of them. It's been a few weeks since then. Have you converted any? I mean, what's the update there?
Yeah, I think, look, we can't talk about specific deals, but I think it is looking good. I think those deals are obviously moving in the right direction. But having said that, as we said in our Q1 update as well, I think some of these deals have a longer decision cycle, but we are hopeful that we will close a few of them in the current fiscal.
Okay. Well, Abhishek has been listening into the conversation patiently as well. So, Abhishek, let's get in your thoughts. I mean, what was your takeaway after the first quarter? While, I mean, we always go in the season with great expectations, but we don't see the big upgrades really come through. What are you penciling in overall, and what are your sort of top picks in the sector right now?
Yeah, hi. Good morning. Thanks for having me here. So yeah, you rightly pointed out the upgrades didn't come through for most companies except Infosys after first quarter, and which was not very surprising to us. Infosys, the guidance, the year beginning guidance was quite conservative, and they did better than, in fact, 5 out of top 6 large cap IT companies outperformed the analyst expectations in 1Q. Still, just Infosys earnings were upgraded. That tells you that probably Infosys was where the guidance and the expectations were slightly more conservative. And that's why Infosys remains, our top pick. Apart from Infosys, we like Tech Mahindra, and we also like Wipro. So those will be our top picks in the large cap sector space.
What about Abhishek? What about the mid cap space, mid cap, small cap space?
Yeah, so in mid cap, we like Persistent Systems. That's our top mid cap pick. We also like KPIT.
Okay. KPIT, though, post the earnings, there have been some downgrades to estimates, right?
I wouldn't think so. See, KPIT is one stock, which consistently is delivering for past 2 years, and that has led to, a step up in the valuation band. So I don't think there is any change in the outlook there. The guidance also was maintained both on the top line and EBITDA margin, and they continue to win deals despite, the challenges that we have seen in the auto OEM side. That tells you that the programs that they are involved in with the OEMs, which is software-defined vehicle programs, those are not getting impacted by the current weakness in the EV demand.
So just to wrap it up, Abhishek, what is your sense? I mean, this broad IT rally, we see this. Would you see this broadly as a flash in the pan, or you think it could be sustainable? What are you hearing from investors? Because it is also about what other sectors are doing, right? It's all relative.
Yeah, it is relative. That sector rotation does play. But, as an analyst, if I look at the fundamentals of the sector, I think gradually things are improving, especially as Vijay Simha also mentioned, banking is stable. A lot of players pointed at some green shoots in the banking. Our data analysis also suggests that probably the phase of optimization that banks were on for past couple of years probably coming to an end. And if the rate cut happens and next budget cycle starts, there could be discretionary spend that can start again. So I think and banking generally has been a precursor to the broad pickup in demand for IT services. So I think the current rally could sustain. There could be ups and downs given where the valuation is, but I think earning upgrade should start coming through. So yeah, I think good time to stay invested in the sector.
Okay, all right. Both of you gentlemen, thank you very much for joining in and giving us some perspective on how demand trends are shaping up in the IT sector and how stocks are poised for it. We have to take a quick break on that note. We'll come back on the other side, get you the latest from the commodity markets. Equity markets are trying to hold on to that little bit of green, but we are back with Manisha. Let's see what the headlines are from the commodity space.
पड़ोसी देश के नाते चिंता होना मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां पर हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जात की भलाई सोचने वाले लोग हैं।
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Investing.
Welcome back. So the market, as we've been saying, is really trying to hold on to that green. There is a cool off from the high. We've got Mitesh back with us. Mitesh, what thoughts now and what are the trades at 10?
Good morning again, Surbhi. So two things. One, I think, we still haven't closed the gap down because the low was 24,686 and today we got a high of 24,639 and 24,625 is the 61.8% retracement area. So maybe today the market will be slightly subdued, but I do expect buying to come in at lower levels. So in case you get slightly more of a dip, let's say if the index comes down to about 540, 530 zones, I think buy there with a 70, 80 point kind of a stop loss and we can again look at a test of 24,700. So positive view, but a mild buy on dips kind of a bias. And on the stock side, I think, I like the refineries pack, HPCL, BPCL, ISV in that order. So I'll take a buy on HPCL, keep a stop at 384.5, look for targets of 410. And Metropolis is another one which is on the verge of giving a breakout. So buy here with a stop at 2095, look for targets of 2200.
Got that. Bitesh, Keytex Garments, I think the low from 230 to 360 and today is the third day. Is it taking out any levels and what would you do? It's basically back at 2017 levels.
Yeah. Prashant, I think ever since that news flow from Bangladesh happened, I think all the textile stocks have done very well, and Keytex is, in the last 4 days has literally taken off the shelf.
Numbers also, yeah.
Yeah. So, it's cleared a very important weekly pivot at 340, 335. So, I think the stock should see more upsides, and the target which I'm looking at is around 460. Roughly another about 20-25% kind of an upside, and any declines over 340 would be good adding opportunity. So don't buy after the 58% rally which the stock has seen in the month, but slowly accumulates. If you want to buy something, let's buy 25%. You get a 15-20 point kind of a dip, add more and keep adding till you complete your quantity. And I think on the upside, you can look at a target of around 460 plus in the next 8 to 9 weeks.
All right, we'll leave it there. Mitesh, thank you very much for that. Appreciate you joining in, and more later. Well, let's shift focus to the commodity space. Manisha is here with the one commodity which is top of mind for her. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at copper because after 5 weeks of constant declines, last week was one that we saw gains come in for the copper prices. Many of the industrial metals actually have started to gain up in the last 2 or 3 sessions. For copper prices, it is trading at a 2-week highs right now, and we have seen 2.5% gains in the previous week itself. When you look at the LME markets itself, we saw 8,800 as a low, but 9,100 is where copper on LME seems to be trading right now. There are various reasons for support. One, the Shanghai inventories for copper are at March lows. They are at around 262,200 tons as of now. The second point is that there are now receding fears of recession in US. We've seen most of the regional equity markets do well. So that has led to a lot of short covering in case of metal prices, and copper is one of those as well. The other thing really is about the US Fed rate cut, where the markets are now factoring in almost 100 basis point of a rate cut for the year 2024 in the calendar year, and that has been supportive. But the major factor clearly comes in from Chile, where BHP's Escondida mine is gone in for a strike, and Escondida is the world's largest copper mine. 5% of global copper comes in from Escondida, and the strike really doesn't augur so well here because markets already are looking at a shortage of copper as we get into 2025, and this could really hamper supplies going forward. So when you look at the numbers itself, BHP has offered a bonus of around $28,000, but the workers have been asking for $35,000. This is where the whole conversation is getting stuck now. But Escondida also has a history of strikes in the past as well. The last one was 2021. There was wage negotiations, and it was just averted in time. 2017, there was 44 days of strike. 2011 saw 14 days. 2006, 26 days as well. And there was an year in between at 2015 when there was a hunger strike by the workers there. So Escondida, as I said, has a history of strikes, and that always does impact copper prices, and especially on the higher side. This is where we've seen support come in from. Having said that, there's a lot of data also coming in, and for this week, you have Bank of Korea decision coming in. Reserve Bank of Australia also is coming out with their meeting minutes. You also have China 1-year and 5-year loan prime rates coming in, and then there's inflation data from Japan and Singapore, and then the Jackson Hole meeting by the end of this week is something that the markets will be keeping an eye on.
Absolutely. Glad you brought up the history on Escondida, Manisha, because I remember every couple of years this mine will hit global headlines because of some sort of labor unrest or the other, and major disruptions, right? We hope that it all gets resolved amicably for mutual benefit for the unions and the mine operator. Thank you so much for joining in. We do have to take a break on that note, but on the other side, it's time for It's the Economy. Today, Lata will connect with Nikhil Nigania of Bernstein and Manish Gupta, senior at Crystal Ratings, to decode key trends in India's power sector.
मध्यम वर्ग के परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है, वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ पे जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the...
Welcome back. Today, the focus is on the power sector on the economy. Media reports say Adani Power may be seeking to acquire the Butibori power plant in Nagpur. While CNBC TV18 hasn't independently verified the news, it reflects the theme that we are discussing today. It reflects a reality that power demand-supply mismatch is still so high that large companies are looking for acquisitions. Some data on power demand, according to CRISIL, the power demand is growing at an average of 8% per annum, at least over the last 3 years. So which part of the power segment, sector, is still good to bet on? To discuss this, I have with me Nikhil Nigania, the Director, Senior Analyst at Bernstein, and Manish Gupta, the Senior Director and Deputy Chief Ratings Officer at CRISIL. Manish and Nikhil, thank you very much for your time. I want to discuss the health of the power sector, or the extraordinary health of the power sector. But before that, Nikhil, just a word on something which seems to be like a bit of a negative, the Bangladesh crisis and the problems it may pose for units exposed to it. You've written a report. Can you tell us which are the companies exposed and whether it's a big deal?
Sure, Lata. So essentially on the Bangladesh side, 2 entities are exposed. The biggest exposure is Adani Power. So they have a plant in Goda, Jharkhand, which supplies power to Bangladesh. It is at a very good tariff. And I think in terms of FY24, the plant contributed almost 900 crore to the company's profits. So the challenge, I think, for the company could be receivables if things don't improve. So that is one entity. And the second one is NTPC. They have a joint venture and they commissioned the 1300 megawatt plant there within Bangladesh. So these 2 entities are the ones which are primarily exposed. Are we concerned? Not at this point. Both these entities are supplying power at prices which are lower than many plants in Bangladesh. So they are fine as per the merit order of Bangladesh. But we are watching the event as it unfolds. Yeah. So not concerned right now on these.
Okay, none of the power financiers would be still a spot of bother, would it, Nikhil?
Apology, I missed that. Actually, yeah, you're right. So Adani Power's plant, I think the biggest lenders are PFC and REC to that asset. And I think, but the government's directive, which came last week, that if that plant has challenges in exporting power to Bangladesh, they would be allowed to sell it within India. Will give.
Okay. Okay, so that will give them other avenues. And in any case, as you say, if they are the lowest cost power suppliers, perhaps that will not be the biggest problem. That should not be a problem. Manish, now let me come to the overall power sector dynamics itself. We have seen a lot of power plants getting acquired. We saw KSK, Sarda, quite a bit, indicating that, there is still a dearth, and that's why people are willing to buy what just wouldn't sell between 2016 and 2018. I remember Rajneesh Kumar trying his level best with some 16 power plants which had become bad loans. How is the demand-supply dynamics now?
Yeah, thanks, Lata, for having me on your show. You're right. First of all, from the point of view of power demand, like over last 3 years, we have certainly seen power demand growth at around 8% or so. And this demand growth is certainly linked with the GDP growth, where the GDP also has been growing pretty well. As we are seeing some bit of a moderation in the coming years, our expectation is power demand growth will continue to be at around 6% or so over next 3 to 4 years. Now, having said this, I think when we look at the way the power capacities have come up over last few years, I'm sure you are aware that there is a strong shift towards the renewable power capacities over last 3-4 years, and very limited additions have happened on the thermal power capacity side. So while renewable capacities have been coming over the last 3-4 years, but they have not been able to keep pace with the way the power demand has been growing. And hence, from a base load perspective, the demand for thermal power capacities have risen over the last few years. And that is one of the reasons why the interest is there on these thermal power plants, particularly the ones which are under resolution. A good proportion of these stressed thermal power plants have already been resolved. As per a report in 2018, around 41 gigawatt of thermal power capacities was under resolution, of which 25 is already resolved. So and 10 gigawatt is something which is under liquidation or about to be liquidated. But remaining 6 gigawatt is still there for resolution. And some of the things that we are hearing of are linked to those 6 gigawatt of stressed thermal capacities, which are still to be resolved as we move forward.
Okay. Just a word on Bangladesh. You have any views, Manish? It's not something that has developed into a debt issue at all.
I completely agree with Nikhil, what he said related to the Bangladesh issue. While certainly there can be risks related to receivables or offtake, but as of now, we are not seeing any change for the power plants which are exposed to Bangladesh. And some of the enabling provisions which the government of India has also brought in, I think that should be a welcome shift as well, in case any of those things start to culminate.
Okay, fine. Now to come to you, Nikhil. The ground is laid out that we are growing at an 8% CAGR when it comes to power demand, and within that, of course, renewable is taking the lion's share, perhaps growing at double digits, with thermal growing at lower single digits. But which part is priced to perfection? What would you like? Would you like the generators at all?
Yeah, so if you look at the power value chain, the equipment suppliers, the lenders, the generators, and the transmission companies, there are parts we like in each of them. So the part our top pick right now is still NTPC. We think they benefit both from thermal generation. They are looking to enter into nuclear as well, and even renewables. We think they have an advantage given their low cost of debt. Then we like the lenders as well, PFC, REC, both benefiting from all the capex happening in the sector. And on the grid side, we like Power Grid as well, given transmission is becoming a big constraint for the power landscape in India. The equipment names, while big beneficiaries, at least we don't cover them, but we find the valuations quite rich.
Okay, but would the power equipment, one of the arguments a broker presented to me is that power equipment guys are paid by the power generators, who are healthy companies, private sector, a Tata Power or a CESC or an Adani Power, whereas the power generators are dependent on discoms. So discoms, as we know, are politically always vulnerable to late payments by their own state governments. So by that logic, will equipment guys be better off, or are they already priced out?
No, you're right in terms of they will be, they are not exposed to risks of discom dues. They will make higher margins. They'll see good order inflows, which they are seeing. But just in terms of valuation outside in, it seems to be reflecting most of it to us. Hence, our preference has been to focus more on the NTPCs, power grids, and the lenders.
Okay. You're not that impressed by Tata Power? Or the private power producers, Nikhil?
We don't cover Tata Power, but what we feel is, the valuations, again, outside in, they're trading almost 30, 40 times price to earning multiple, most of these private power sector companies. Whereas the PSU ones are the ones trading cheaper with good ROEs and with certain benefits, especially cost of debt.
Oh, yes, and good ROEs. After all, they get a fixed ROE for a part of their capex. Even now, the old regime hasn't gone away. Manish, according to you, in terms of debt, are power generators much better off now? Because you have the late payment surcharge, some reforms underway.
Yeah, that's right. And in fact, from a rating agency perspective, what we have seen for the operating power plants, the credit profiles have improved over last 3-4 years. We have seen upgrades happening in the thermal power sector, which was not expected few years back or so. And one of the key reasons for that is the fact that the late payment surcharge schemes and the other schemes which government has brought in the past, like Atmanirbhar one as well, that has helped put more cash in the hands of the DISCOMs. DISCOMs have actually in turn paid off their past dues to the generators, and hence the receivable profile for generators have improved substantially. And what's more important is the fact that these generators, having received the cash from the DISCOMs, they have actually reduced their debt levels. So from a leverage profile perspective, the thermal power generators are in a much better stead today, as we had seen in the past. So having said that, a key caveat still remains that because the DISCOM's fundamental situation still remains to be weak, and hence how the DISCOM payment behavior will be post the expiry of the LPS scheme, which may happen over the next 6 to 12 months, that remains to be seen and will be a key monitorable from our perspective too.
Oh, that's important. The scheme runs out, is it? Okay, then there is a sword hanging. Actually, this always happens. We start with the legacy power plants and don't have time for renewables. But Nikhil, what would be your pick of the pack in renewables? And there are early signs even of nuclear, which the government seems to be encouraging. Any potential ahead of the curve picks over there?
So maybe on the second question first, on nuclear, the two beneficiaries that we see, one is L&T. From a construction perspective, L&T is a beneficiary. And from a developer perspective, NTPC comes in, given the joint venture with Nuclear Power Corporation. So in the listed space, these are the two names we'd highlight. On the first question on renewables, a conventional renewable generation, not many names, pure play names to play out there. I mean, we are looking out for events like listing of NTPC's renewable business and some more IPOs in this space. On the equipment side, wind, I think, is an exciting theme. But again, as we said earlier, valuation looks quite rich on many of those equipment names.
Okay. You want to add a word, Manish, on the renewable space? At the moment, no worries about debt anywhere.
No, not with respect to debt for sure, but renewables is also going through a transition phase. Currently, renewable power in the overall power mix for India, renewable power is somewhere around 11 to 12% only. At this percentage proportion, renewable power doesn't hit the grid balance so much. So as you're aware, like renewable power is a little bit intermittent, and hence the grid balance becomes the challenge. As the renewable capacities or renewable proportion of renewable in the power mix increases and reaches somewhere close to 18 to 20%, there the risk of grid imbalance will become quite imminent. And this calls in for increased round-the-clock power to be made available, which can be made sure through hybrids, through batteries, and all. Some of these things are very important. Government is trying to make the shift here, and that remains a monitorable, like how that shift happens. And I think that will be an important thing to watch out for in the renewable space.
Sure, but that's way, way ahead of the curve, isn't it? We haven't yet come to grid batteries and companies making them. So that discussion may be next year. But thank you very much for joining us, Nikhil. We'll invite you again on renewables separately. because especially nuclear, a very, very interesting theme. Thank you, Manish, for giving us the perspective as well. We have to wind down on Bazaar, but with the news that markets absolutely on a cliffhanger at this point in time. All the morning gains have been wiped out, but we are seeing a little bit of red even on the Nasdaq futures. So perhaps today is a day of caution. Let's wait and see how the second half pans out. Wrap up on Bazaar. Chart Burst is coming up.
Accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult, and the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों के तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए, और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs, and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted, and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force, and I think all investors should definitely look at
Oil marketing companies ONGC and Oil India gain about 2% each after the windfall tax on crude gets cut to 2,100 rupees from about 4,600 rupees a ton.
PVR climbs over 3.5% after the company sees strong collections over the long weekend.
Birla Soft climbs as it comes out of F&O ban. The stock is up more than 4.5% after a 6% up move that we saw on that counter on Friday as well.
And Ola Electric continues its stock rally even as the circuit filter was now revised to 10%. The stock is now locked in a 10% upper circuit after a wave of new launch announcements last week boost the stock.
Almost doubling on Ola Electric out there.
Hello and welcome to Chartbusters. I'm Hormuz Fatakia. With me is Mangalam Malu. We are slightly off the highs of the day, but still holding on to gains. It's been a strong start to the new week after the up move that we saw on Friday in the second half of the trading session. The Nifty continuing to hold up to around that mark of 24,600. The intraday high being 24,638. We're slightly off those levels, but continuing to hold on above that mark of 24,550. The Nifty Bank, though, has been a bit of a sore spot in today's session. That too saw a very strong up move on Friday, but has cooled off from the highs of the day, currently trading now below that mark of 5,500, continuing to find resistance around that 50,800 mark as we speak, but the broader markets are doing well for themselves.
Broader markets are doing a lot better. You know, Hormaz, two things I'm looking out for as we move forward. One, there has been a smidge of a recovery on the Nifty Bank from the lows. Secondly, Reliance has started to move higher. So Reliance, with its weight, if it continues to move higher, then maybe this dip that we've been seeing on the Sensex and the Nifty may get bought into, and the health of the broader market continues to do extremely well. Nearly 6 stocks advancing for every stock which is declining in the markets, and a lot of these stocks are surging now as we speak. Case in point, something like a Balrampur Chini has seen an up move. Piramal Enterprises from the lows has seen a bit of a pickup. This morning itself, we had Ramdev Agarwal speak about how valuations in some names like even Trent have gone beyond growth expectations, but these stocks have momentum. So who's to say where they go? Well, who's to say where they go? Just pull up the intraday chart of Trent and you'll see this morning itself the stock has moved all the way up to that 6,700 rupee mark, a fresh high on Trent as well. This is one of those bullet trains that keeps rolling on. So we'll keep an eye out on all these pockets as they move along. We've lined up a management for you as well of a company that's coming out with its IPO. But before all of that, let's welcome Shivangi Sarda as always for a quick check on the way the markets are moving right now. Shivangi, the initial uptick was sold into. Do you think this is a dip that needs to be bought into?
Very good morning. Thank you so much for having me. So we've seen that, Nifty witnessed a sharp recovery on the Friday session. It closed on a positive note after the consolidation of the last 8 sessions. Today, we are, holding above 24,500, but with a slight bit of a consolidative mode. So this is going to continue because, of course, we've seen that sector-specific action is on, but Bank Nifty is not performing, and it is not showing any signs of, stability. We've seen that this index has underperformed, for the number of series that we've seen. But there is no strength over here, and the heavyweights are also sort of giving up. So because of which Nifty is moving in a slightly dull manner. Now we are still in the buy on decline stance for Nifty. So we are expecting, the next target of around 24,850 and then 25,000 levels positionally for Nifty with a support of 24,250 levels. So this will be the range for Nifty to watch out. Talking about Bank Nifty, underperformance will continue over here. We've seen that this index is struggling, to hold a tad bit near its 50-daily exponential moving average, still below it from the last round about 9 sessions. And we will see a very small range in Bank Nifty of round about 51,000 and 50,150 levels on the downside. So this will be the take on Bank Nifty. Of course, conviction is more on the Nifty side.
What about specific stocks then, Shivangi? The broader markets continue to do well, are in a league of their own. What's on your radar this morning?
On my radar, firstly, is IGL. We've seen that this stock is now getting ready to come out of its consolidation of the last 5 weeks and, clearly holding well above its key 50-daily exponential moving average from the last, 1 month odd. So we've seen that this stock has witnessed a good recovery from the intraday lows of 5th August, and then thereafter we've seen a consolidative phase for this stock. The good part is it has been holding on to the support of 545 odd levels. So now the stock is getting ready for a good rally. So recommending a buy here with a target of around 575 and a stop of 538 levels. Now the second pick on radar is Trend. Of course, this has been the mover of the year. And we've seen that the stock has clearly outperformed, and we are seeing fresh buying after the breakout, which is quite positive. And the good part is that weekly basis the supports are shifting higher from the last many weeks. So overall, the strength in this counter will continue with, of course, strength and tailwind from the entire sector. And we will be seeing a target of around 6,900 over here. Immediately, and then we can look at for 7,000 levels with a support of 6,580 levels.
All right, Shivangi, thank you so much. Call and Trent coming once again. Let's get you an idea for profit coming in from our colleagues at Money Control Pro. Anant Chaudhary joins in with stock that he's been tracking.
The stock which we will discuss today is Prince Pipes Limited, a leading manufacturer of polymer pipes and fittings in India. The company produces a range of pipes including UPVC, CPVC, PPR and HDPE used for various applications in plumbing, irrigation and sewage disposals. The stock looks attractive due to several reasons. First, it is among the largest beneficiary of the ongoing upswing in the real estate sector. Government initiatives like Housing for All and the Jal Jeevan Mission are also driving growth for the company. Second, PVC prices have now stabilized at around 80 to 90 rupees per kg, down from a peak of 180 rupees. General inventory has now normalized and demand prospects looks very promising. Volume growth in the last quarter Q1 FY25 was 14%, which is likely to continue for the rest of the financial year. The ongoing brownfield expansion in Bihar to add 50,000 tons of capacity will be operational by January 2025. This expansion also includes fittings, which has higher margins. The stock appears reasonably valued at 24 times on FY26 earnings, following a period of price consolidation over the last 3 years. Key risks for Prince Pipes could be a slowdown in the real estate activities and any sharp fluctuation in the PVC prices.
Ideas of profit coming in there from Money Control Pro. Time for a short break. When we return, we'll be joined by the management of InterArc Building Products to discuss their opening of their IPO and a lot more. Stay tuned. Back on the other side.
Favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ें।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Welcome back. The secondary market doing the secondary market things. The dip in the Nifty has been bought into. It's back a little above that green mark led by Reliance. Broader market's doing extremely well as well. So let's shift focus to the primary market action. Interarc Building Products, a company that's involved in the design and manufacturing along with selling of pre-engineered steel buildings, opens its 600 crore rupee IPO for subscription today. Closes on the 21st of August. Gautam Suri, who's the director, and Manish Kumar Garg, who's the CEO of the company, joins in now to discuss their business prospects further. Of the 600 crore, remember, 400 crore is an offer for sale and 200 crores is a fresh issue going into the company. Thanks a lot, Gautam and Manish, for joining in. Let's start with Manish. Manish, I'm looking at two things. One is that your capacity is likely to increase to over 2 lakh tons per annum. And also your order book stands at around 1153 crores. So on those two accounts, I just wanted to know, what are the kind of order inflows that you're targeting for the next couple of years? Because your order book currently is just about 1 time your annual sales. And secondly, at peak utilization, what is your revenue likely to be?
Hi, good morning. So in terms of our business, the cycle time of the order execution on an average is about 8 months. And therefore, a very large order book is not really something that you see very commonly in our business. So an 8 to 9 months order book is quite strong. And as we go along, we look at our order book becoming far more stronger and far more capable of fulfilling the capacities that we are going to be establishing going forward at Andhra, as you must have seen in the objects, and going forward in west of India.
Manish, good morning. Thank you for joining in. And I wanted to ask you, staying with the order book itself, that most of your orders, the orders that you get, are from repeat orders. Almost 81%, as if I am correct, for FY24 came from repeat orders. Do you see that number sticking to where it is currently? Because you've highlighted this as one of your risk factors, that this is a repeat order. A lot of those are concerned. So do you plan on bringing that number down as you go forward into FY25?
So see, again, I would like to clarify what repeat order means. Interarc is a 40-year-old organization. And repeat order classically for us is anybody who has placed any order on us in last 40 years, we count that as a repeat order. So quite obviously, a repeat order for Interarc is not really the same customer ordering every year or every month. It could be a Reliance who ordered us some false ceilings 30 years ago and ordering, their solar manufacturing plants now is counted as a repeat customer. So repeat customer is classically in our business termed as somebody who has ever bought anything from Interarc in last 40 years. So to that extent, it's a classical definition, and we have a very strong customer stickiness, and we expect this to remain the way it is, and our order book remaining as strong as it is, even better.
Let's talk about numbers then, and maybe we'll try and get in Deepak in as well when it comes to the business performance and the outlook, or rather Gautam in as well. Gautam, the last few years, you'll have grown fairly well. The revenues the last year have grown above that 1100 crore mark. The industry itself, as per your prospectus, is likely to compound between 11 to 12%, become as big as 33 to 34,000 crores by FY29. What is the kind of market share that you're targeting by FY29? What is the growth that you are likely to, display over the next 4 or 5 years? And as that happens, what are the kind of margin levers that you have? You're still at around high single-digit sort of margins. So margin improvement and overall growth aspiration for you, if you could give us a sense on that.
Thank you. Thank you. Even currently, we are growing faster than the industry average. Our growth rate is higher than the industry average for established players. Margins are improving as more complex and buildings come in. Margins get better, larger projects. And this industry, in any case, deserves a larger margin, and we're all working towards that. And I'm pretty confident that the margin should reach 10%, if not higher, over the years as we go forward. And there is a huge market for pre-engineered construction because it is getting used in every kind of, besides manufacturing, there's infrastructure, there's airports, there's ports. So the entire pre-engineered construction space is infinite. And Interact is well placed to exceed industry parameters.
Fair enough, but Gautam, I'd allude to one of the points that Mangalam highlighted earlier as well. You're planning on expanding capacity, yes, but at peak capacity, what is the kind of revenue that you are expecting to generate going forward at your units?
See, generally speaking, each of our plants at peak capacity generates about 550 crores of revenue. We talk in, that's the easier way to talk rather than tonnage. So we have 3 functioning plants which are presently, which are capable of about 1,600 crores. The additional Andhra plant will come into, first phase is already operational. The second phase will be operational by end of March next year, which is the second phase is part of the proceeds of the offer. And so by the end of early 2025, our established capacity should be in the region of 2,200 crores a year.
So FY26, with increase in utilization, should we expect you to post revenues of a little around 2,000 crores with double-digit margins? Would that be a fair estimate?
Yeah. Can I ask Manish to answer the question, please?
Manish, go ahead.
Thank you. Yeah. So see what happens in our business. So number one, we would want to do much better than what we have been doing. We are growing at a very high rate. However, any new plant, as you see, will take some time to actually come to the capacity. And we are also trying to add capacity by line balancing as part of the objective of the offer in our existing plants also. So yes, right now we are only constrained by how much we can do, and going forward we look at a much better capacity utilization and performance. We of course do not wish to put a number to it, but yes, it's going to be a good growth going forward.
Let us put the number and you tell us whether it's off the estimates or not. Say you want to do a lot better than the 2,200 crore which your capacity is showing, maybe with some debottlenecking, increasing execution, 2,500 crores by FY26 with 10% plus margins. Is that a possibility, or are we way off the estimates?
I think that is certainly a possibility, all going well, because we are working on the internal efficiencies also. But yes, we like to grow cautiously. And therefore, right now, the external environment is supporting. And with our capacity coming on stream, there is no doubt that those kind of numbers are certainly a possibility.
I wanted to ask you about your product mix, both Manish and Gautam, whoever wishes to answer this. Your industrial business contributed to 68% of your top line this year compared to 80% last year. Do you see that number increasing, decreasing for the industrial to non-industrial ratio? And also, if you could share the margin difference between the two businesses as well.
Half our business is industrial and infrastructure. Industrial is all manufacturing. We are in all kinds of sectors. We are industry agnostic. Infrastructure currently is primarily warehousing and distribution centers. We are also moving into data centers. We've done data centers. We do trying to get this into the possibility of doing high-rise building, which are also picking up in the use of steel in high-rise. Our new plants are actually adding capacity and product mix to be able to manufacture special sections for high-rise buildings. And industry will be a prime focus for at least for the next year to come. But as we see the market expanding and growing, the product mix will change. But our mix is primarily custom designed steel buildings, which are manufactured in a plant and delivered to site for quick bolt-on assembly. We have no other sales of separate products.
All right, take that point. Thank you so much. But for now, the headline that we have is that revenues of close to 2,500 crore with double-digit margins is something which is not out of the realm of possibility over the next couple of years. We'll let the people mull on those thoughts until the next time when we speak on your listing itself, and then we'll plug in for some more numbers and the outlook on your business itself. Gautam, Manish, thank you so much for joining in. Wish you good luck. Take a short break, come back, tell you more on the stock markets as well as a lot of these individual movers which are buzzing around in today's trading session.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave.
Back with us here on Chartbusters, the cool-off continues from the highs of the day. Now the Nifty is off nearly 100 points from the highs of the day, now nearing the 24,550 mark, which is where it closed on Friday, led predominantly by the Nifty Bank. That is now down 300 points from the highs of the day, now nearing levels of 5,400 after making an intraday high of 5,728. But pull up Ola Electric, that is the stock that is making headlines and continues to do so. Another 10% circuit today. The price band was revised from 20% to 10%, and so it is locked in a 10% circuit now. 146 on the stock, almost double of its IPO price of 76 rupees within just a few days of listing. But with that, we call time on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.
They really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep. And now, in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens. They induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers. Aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone, and one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive.
Good morning. Welcome to Trading Hour. It's a brand new week of Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy. And for the markets, it's a slow grind down to the flat line for the benchmark indices. The mid-cap index is holding up in the green. It's up about 140 points. But from the session highs, which was about a 450-point gain, even the mid-cap index has given up a bit. The advanced decline ratio, though, is fairly strong. 3 stocks gaining for 1 in the red. Hi, Sonia.
Hi, Reema. Good morning. And I think the market is sort of just playing this wait and watch game, right? Because you do have a lot of big events coming up later this month. There's so much from the US markets that will come through in terms of the Jackson Hole meeting, etc. So I guess the market is just sort of consolidating at these levels, which is not a bad thing. After the kind of up move that we saw on Friday, it's still holding on to 24,500. And today really belongs to a lot of the new age companies, whether it's Ola Electric, which has had a phenomenal run, whether it's Zomato, which is up 2.5% and sitting at a fresh 52-week high this morning. And the volumes on Ola also phenomenal this morning. So, and you know, a lot of these consumption plays, something like a trend is sitting at a fresh 52-week high as well. So all of this looking pretty good.
In fact, let's talk about Ola Electric because the stock has practically doubled from its issue price of 76 in a matter of few days, and it's just been hitting upper circuit after upper circuit. I think since listing, this is the 4th upper circuit for Ola Electric. Now, last week, HSBC India initiated coverage on Ola Electric. They have a buy rating on the stock. Target price is 140. Well, the stock has crossed it already, but is the stock worth investing? And what's the investment thesis behind it? To talk more about the EV space and the stock in general, we have Yogesh Agarwal now joining in. Yogesh, morning. Thank you very much for joining in. So you've said in your report, Ola's investment thesis is dependent on 4 key forces. 1, the EV penetration curve in India. 2, market share and competitive intensity. 3, the regulatory aspect. And 4, the success or failure of Ola's battery manufacturing unit. So before getting into the stock, tell us about the EV landscape and on each of these 4 parameters that you've listed, which are kind of the make and break for Ola Electric, where do you stand?
Yeah, thanks, Reema. Good to be here. Look, electrification journey in India has been very hard for almost everyone, not just OEMs, but on the government as well, because Indian government has been really supportive of electrification. And I mean, just last year at the peak, they were offering almost 80 to 85,000 rupees subsidy on a two-wheeler, which is pretty significant. And even on four-wheelers today, if you adjust for the GST, the subsidy goes in lakhs. So almost 20 to 30% of the value of the vehicle. So government has tried its bit. But still, the electrification journey has been slow. I mean, even today, we sell only 2 to 3% of passenger vehicles electric. and maybe around 7% for two-wheelers. So it's still slow. We believe there could be some improvement in the next 2 years. We still don't think it's going to be like a hockey stick effect, but at least for the next 2 years, things will be better. And it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, just from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we have all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. So, and that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in four-wheelers, and in two-wheelers anyway, the launches are happening more and more. With more launches, there'll be more options, and I think there will be some bit of a pull factor as well. But overall, to keep it short, I think the penetration will still be slower in India, fundamentally for many reasons. But at least the next 2 years look better than the past 4 years.
Okay, so you're not worried about the fall that we've seen in the global sales for EVs, although India has been a bright spot compared to global EV sales. But the larger trend globally is a fall in EV sales, right? That's not something that would worry you. And also from this point, I mean, the kind of rally that we've already seen in the stock, from this point, is the risk reward still favorable for long-term investors?
Hi, Sonia. So look, globally, EV penetration has slowed down. You're absolutely right. Particularly, people quote about Europe. And India, you said, is a shining star. But look, we are comparing apples to oranges here. Europe is 15 to 20% penetrated already. Okay, we are at 2%. So at 2%, I mean, global penetration is 11-12%. So we are way behind in terms of penetration. So yes, we may see a little bit growth. Actually, I'm talking about passenger vehicles right now, but we are still way behind. And eventually, look, electrification has to happen. So even in Europe next 2 years, the emission requirements are very strict. So even if the OEMs have to take a profit cut, they will have to push electric cars. So yeah, I think it's not comparable, but eventually EVs have to happen because we have to reduce emissions. I want to make one point here. I think in India, hybrids is an older technology, but I think we have been a bit of supportive for hybrids. Just to give you one statistic, hybrid cars are 15 to 20% less polluting than EVs in India if you factor in the well-to-wheel emissions. So I think eventually we will do EVs, but at least for the next 4-5 years, we are hoping there will be some support for hybrids because that could help emissions, which is the core objective to do electrification anyway.
Yogesh, I know this is tough to hazard the way this will play out in the market. But how do you expect EV penetration to increase for two-wheelers? Now, Ola has said that they think the EV penetration will rise to 40-50% by, say, FY28. What is your own assessment? Because you said it's not going to be a hockey stick kind of a pickup. And two, what about Ola's own market share? Currently, it's very high, closer to even 50%. But can it sustain with competition also coming into the market?
Yeah, so Reema, so our estimates for FY28 the same time is just about 20% or could slightly be lower than that. And that will highly dependent on, again, scooters. I think just from a form factor perspective, it is very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it will be a very big challenge to electrify motorcycles. I know Ola recently launched motorcycles, but there will be some part of the motorcycle market which will be happy to move to EVs and just purely focus on the cost of ownership. But large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
Okay.
Now,
So
you asked about competition. I think Honda is yet to launch in India, so that will be an incremental competition. But by and large, I think, a couple of years back, there were more than 100 OEMs in India, EV. There were startups almost every day. Now, there is a lot more sanity, a lot more consolidation. And I think whoever are the players today, without getting into specific names, I think we are reaching a bit of equilibrium for the next few years at least.
So Yogesh, just one quick follow-up then on the EV motorbike that Ola has launched at 75,000. It's undercutting the market because I was reading somewhere the low, in that category is more than 1 lakh. So what explains the kind of pricing Ola Electric has done? And if the cost is anyway going to be higher, does it mean that the company could be making higher losses going forward?
Actually, Rima, great point, and I think that is a big question for the overall penetration story itself. Look, today as well, if you look at just getting slightly technical here, if you see an ICE scooter can be manufactured in 40 to 45,000 rupees, whereas the electric vehicle is around 1 lakh or 110,000 rupees. And I think today companies are still able to sell at ICE prices because the subsidy, direct and indirect, is still 45,000 rupees on a per scooter basis. And I think the key question here is, what is the pace at which government will reduce subsidies, which we assume it to go down to around 10,000 rupees in the next 3 years. But in the meantime, the companies will be able to cut cost as well. And as I said, battery costs are coming down very, very sharply. I mean, there was a time just in the recent times from a 650 to 60,000 rupees per scooter battery is now down to 25 to 30,000 rupees. Plus significant operating leverage, right? Across the supply chain, motors are localized. Large part of the chargers are localized, X of semiconductors, and then generic operating leverage. So I don't think it is a simple equation. I think it is the push and pull between subsidies versus the cost. And the good thing is subsidies are there to stay at least for the next 2 years, whereas the costs are falling now. And therefore, I don't think the companies will be making significant losses for the next 2 years.
Okay, very helpful there. Thanks a lot for explaining that to us and, giving us a little bit of an idea of which way the EV market is going to head from here. Very interesting and engaging conversation there. Thanks a lot for joining in. Let's slip into a quick commercial break. On the other side, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain documenting India's expanding expertise in medicines.
25.
Welcome back to Trading Hour on CNBC TV18. Let's now shift focus to the commodity markets. Manisha Gupta joins in, and today the focus is on gold. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, yes, today with Raksha Bandhan, it officially kickstarts the festival season, and today is the first day that you will see a lot of buying happen in gold. But the only dampener perhaps can be that the gold prices are trading at an all-time highs in the international markets. We've seen an all-time high of $25.10 an ounce in the Indian markets as well. We are now trading at an all-time high, especially with the rupee declining also. So we've seen nearly 2% of gains in the previous week, and it continues like that in this week as well. It is about strong safe haven demand that we've seen coming in. There are a couple of factors for that. One is the conflicting statements about ceasefire coming in from Hamas and Israel sometimes. And then there also are concerns about escalation of tensions between Ukraine and Russia as well. And then the markets are almost pricing in 25 basis to even 50 basis points of a rate cut from the US Fed meeting. Important to see would be the statements coming in from the Jackson Hole meeting. That's between 22nd to 24th of August. The street also is looking at various economic data and central bank meetings as well happening within this week as well. If you look at the chart on how gold is done in this year, well, we started with $2,058 an ounce in the month of Jan. By Feb, we had seen the prices decline to below 2,000 as well, but we are trading at an all-time highs of 25.10 at this point in time. The Indian markets also constantly rising, with expectations that 2,600 to 2,700 kind of levels is what you could see in case of gold by the end of this year.
Thank you very much for that. Let's get a corporate conversation going. The stock on our radar right now is Quess Corp. Now, if you remember, the company had earlier announced at the beginning of the year that they plan to demerge their business into 3 entities. Now, the latest update is that NSE and BSE have issued a no adverse observation or no objection certificate to their demerger plans. So now the company will go ahead and approach the NCLT Bangalore. So basically, it's a step forward, a positive step forward in the company's demerger progress. Kamal Pal Hoda, the group CFO of Quess Corp, is now with us on the show. Thank you very much for joining in. This is Rima here. So can you give us some timelines on the demerger, the next steps, and when do you think the 3 entities would be listed, to your mind?
Sure. Good morning, Rima, and good morning to your viewers. As you mentioned, we have recently received the BSE and the NSE clearance, as well as the secured creditors clearance. So that's a major milestone. And the demerger, we are making significant progress with our demerger process on the back of steady sales growth, consistent financial results across all our platforms, and strengthening of our leadership positions. If I talk about timelines, last week we have already applied to NCLT, and this process usually, should take 6 to 7 months. And we are hopeful that by end of this financial year, we should be able to complete the demerger process, post which these 3 separate companies should get listed.
At the end of FY25, you're hopeful that the demerger process should get completed, and by Q1 of FY26, can we assume the 3 entities would be listed separately?
Yes, that's our internal timelines and estimates as well. And like I said, there's significant traction that's happening in the organization right now towards demerger. We've recently strengthened our leadership positions for the BPM business, where we are also targeting grow from a $350 million base of revenue to $1 billion over next 4 to 5 years. So yes, all looks on track for Q1 of next financial year.
Okay. Mr. Hoda, good morning, and thank you for speaking to CNBC TV18. Well, can you tell us, your main business is workforce management, correct? What would the margin profile and revenue growth be for FY25? I think you're sitting at about 2.6% EBITDA margins, and last year you had a growth of around 13.5%. So can you tell us what kind of growth are you looking at in FY25?
Sure. See, we started this year, Q1, fantastically for us. We did around 30,000 plus headcount additions at the start of this financial year. If you see last year, full year, the revenue grew around 11% and the EBITDA grew around 18% at an overall level. This year, we are confident of growing a good double-digit growth in revenue, and we should be able to repeat our EBITDA growth performance year on year from last year in the range of 18 to 20%. When you speak about workforce management, the festive season has just begun with Raksha Bandhan today, and we are seeing good, increase, almost a 20% increase in our open mandates, which is around 40,000 now. in last 3 months. And the sectors which are primarily hiring right now is e-commerce, modern age manufacturing, and BFSI. So we are very confident of doing a good double-digit growth in revenue, a healthy double-digit growth in revenue, and 18 to 20% growth in EBITDA for this financial year.
So you're saying for FY25, a healthy double-digit growth in revenues is what you've done. But can you just give us the numbers for FY24? What did you close the year with in terms of revenue growth, as well as what was your margin profile?
Sure. So last year the revenue growth was, as I said, 11%, and EBITDA margin we were around 3.6, 3.7% on a full year basis. We had guided the market that we should be close to around 4% this year, and we look to be on track to reach to the 4% milestone by end of Q2 or early Q3 this year.
Okay, so that's on one of the businesses, workforce management. Now, the second demerged entity is going to be Digitide. Can you tell us a little bit more about Digitide? What is the business that it covers, and what will be the financial profile, the revenues, the margins, and the revenue growth investors should expect from Digitide?
Sure. Just a correction, the workforce, the numbers that I gave are the consolidated Quest level for this year at 4% margin. Workforce management, the EBITDA margin is around 2.6% right now, and we expect the margins to move more near towards 3% as we progress towards this year. Maybe at the end of Q3, we should be seeing around 2.7 to 2.8% margin. Moving to Digitide, which is primarily into the BPM space as well as the HRO space. We've got a $350 million business with around 18% EBITDA margin that we are operating right now. We are among, let's say, the top 3 players as far as the BPM space is concerned in the country, and obviously the largest player in the payroll processing space. So in that business, like I mentioned, we've been strengthening leadership, and we believe that we should be able to grow that business over long term from a $350 million business to a $1 billion business.
Okay, and can you tell us a little bit more about the third entity, which will include the operating asset management, which is basically facilities management, and you also have the founded business. So this third entity, can you give us what is the current revenue scale of this company with margins? And founded, I believe, is loss-making. So once it turns around, what could be the margin profile of this company?
Sure. So the third business is the legal entity called Blue Spring Enterprises, which will hold primarily 3 businesses: the facility management business, the industrial asset business, and our investments in Founded. The facility space and the asset maintenance space on a consolidated basis is around 3,500 crores of top line on an annualized basis, operating at an industry benchmark of around 5% margins. There is opportunity to grow these margins further 10%. That's what the target is this year, to increase the margins from 5% and move towards 5.3, 5.4% levels. As far as Founded is concerned, Founded should be a break-even for this year in terms of the EBITDA. The annual revenue run rate Founded, we are expecting to cross around 200 crores. At that level, Founded should be a break-even business. So, we have from FY23, where we did around 95 crores of investments and cash burn in business, we brought down our losses on the back of good steady sales growth last year to around 55 crores in Founded. And this year we are expecting from a negative 55 crores to go to 0. So that's what Founded is going to do this year.
We will let you go on that note. Mr. Hoda, thanks a lot for joining in and speaking to CNBC TV18. That is the word coming in from Quest Corp. But for the market, it's still very quiet, but there are so many stocks that are buzzing around. So we'll do one thing. We'll take a quick break. On the other side, we'll discuss market technicals. Soni Patnaik of GM Financial will also be with us, and we will get her top trading bets as well. Stay tuned.
Excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE.
Welcome back. It's time now to get a quick tech check on the market. Soni Patnaik from JM Financial Services now joins in for a quick analysis of the market. Soni, thank you very much for joining in. What have you made of the day so far? It appears to be steady and quiet. And what catches your attention in stocks?
Good morning, Rima. Thank you for having me on the show. So I think Nifty has a very strong support of 24,500. We saw very aggressive put writing taking place last Friday in 3 major strike prices of 24,300, 24,400 and 24,500. So that level, I think it's going to remain as in a consolidation mode from 24,450, 24,500 as a support. On the higher side, 24,700, 750 can be a resistance for now, as a lot of call writers are still positioned at that level. So this 300 points could be the range for Nifty. One can play around in the range itself. And stock-specific approaches, I think we can see a lot of fresh breakout happening in stocks. My first pick would be in GAIL today. So we've seen a fresh breakout in GAIL with good short covering position taking place. One can buy at current levels, keeping a stop loss of 228 and a target of 250, 255 can be seen. The second stock pick comes in Berger Paint, which has again seen a fresh breakout on charts with positive MACD divergence, which is indicating a very strong outlook from current levels. So Berger Paint from current levels, one can buy around 560, 63, keep a stop loss of 545 and a target of 600, 610 can be seen.
Okay, that's on Berger Paints. Got that. Soni, just before we let you go, I'm sure you're tracking the chart of Zomato as well, and it has been hitting new highs. Of course, there's not too much history behind it, but whatever you've seen so far on the charts, do you think, it can build on to its gains? And what's the advice here?
Good morning, Sonia. Definitely, I think Zomato, if we look at on a positional basis, it has given a strong breakout. The level of that breakout is above 265. So one can actually accumulate in this range between 265 to 270 for a short-term trading perspective. Hold on to your longs. The stock can definitely test 290, 295 on a higher strike. It continues to form a higher low sort of a formation on daily charts, backed with good volumes. So I think the stock is just consolidating. It's in a sideways muted today, to be very precise, but definitely hold on to the longs with 260,500 and as a stop loss.
Thank you for joining in. We'll get into a break. We'll come back and talk about individual stocks, Voltas and Zomato. Stay tuned.
Together, we will build what I call an opportunity economy. Under my plan, more than 100 million Americans will get a tax cut, and we will do this by restoring 2 tax cuts designed to help middle class and working Americans. The Earned Income Tax Credit and the Child Tax Credit. We will provide $6,000 in tax relief to families during the first year of a child's life. Now think what that means. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance.
We have a 5-year-old daughter. We want to make sure that she has access to the best schools and to community programming and those kinds of things. And so we really want to be in a position to give her the kind of home, a little more space, a place where we can entertain and invite our friends in our community to spend time with us. All of those things are really important. And we really want to make sure that it makes financial sense before we can do something like that. So she spoke to my heart as a potential homeowner.
Welcome back to Trading Hour on CNBC TV18. Well, the market for now is very quiet. It hasn't done much through the course of the day. It's also, Raksha Bandhan, so there's festivities all around. There was a long weekend behind us. So perhaps a little bit of a slow day. But the good part is that the Nifty is now building on to its gains a little bit, 50 points in the green. And it has had a very strong week. So we're just sort of, building on to that and getting to the 24,600 mark. But Voltas has been gaining on the back of a strong performance in the UCP business in Q1. And brokerages have raised their target price on the stock. Sudarshan joins in with the details. Sudarshan, over to you.
So Voltas is built onto strong gains that company had seen post strong Q1 earnings. In today's trade also it's up almost 3%. And as far as Q1 is concerned, it was led by strong performance in the UCP business. And for UCP business, volume growth was at 67%. And for FY25, company maintains high single-digit UCP margin for FY25. As far as brokerage is concerned, most of them are bullish on the stock. Nomura has a buy call with target of ₹1,857 per share. It says growth outlook book remains strong, and for FY25 it has raised UCP revenue growth to 30% from 26% earlier, and it also adds priority of market share gain over margin by the company is a step in the right direction. Jefferies too has a buy call with a target of rupees 1770 per share. It has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and it has raised target to 1960 per share. It says company is optimistic on demand for Volpac products in Q3 led by festive demand. MS though has an equal weight call with a target of rupees 1225 per share. It says company has guided for high single-digit margin UCP business given elevated competition. Kotak has a sell call with a target of rupees 1100 per share. It says limited margin expansion and changed guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLSA also has an underperform call and target is raised to 1310 per share. It says limited re-rating potential. Last is GS. It too has a sell call with a target of rupees 1310 per share. It says margin may have limited room to surprise positively after strong Q1 earnings, and sustainability of ordering is key for the stock going forward.
Okay, so mixed view coming in on Voltas. There are many who've raised the target price, but the others like CLSA and Kotak, though they've upped the EPS estimates post the numbers, are still holding on to that bearish call. But let's talk about Zomato. That's surging in trade after receiving record number of orders on Blinkit yesterday. Mangalam joins in for more. Mangalam.
But Q-commerce is certainly catching up, pace in India, and in terms of behavioral patterns as well. We saw it from the leaders of Zepto, Ola, Swiggy, as well as Zomato, Blinkit yesterday on social media, them having talked about record orders that they've got on their platform. And Albinder Dinsa is, one such who did write that Blinkit actually reached all-time high orders yesterday, also reached the highest ever orders per minute and gross merchandise value over their platform itself. And because it was Raksha Bandhan, the sales for chocolates, etc. increased, as did the sales for Rakhi, where, peak concurrency for Rakhi was 693 Rakhis per minute. That was the sort of orders that took place in Q-commerce. So all these factors have given a bit of a tailwind to Zomato. Add to that, there's a note that is coming from UBS this morning as well. They've increased their target price from 260 to about 320. And the reason why they've done that is because they've rolled forward their estimates. Remember, in the first quarter, after the first quarter, they increased their estimates by about 20 to 30% for Q-commerce and 2 to 3% for food delivery as well. And they've valued this company at 35 times FY27 EV to EBITDA, which compares with all the other consumer retail peers at around 30 times. And they justify this by saying that, maybe the growth prospects and turnaround on the operational front is a lot more for Zomato than all the other listed consumer peers. And as a result of which, this sort of valuation is justified. And as a result of which, the stock also at a fresh record high.
Okay. In fact, earlier we spoke to Ramdev Agarwal, the chairman and co-founder of Motilal Oswal Financial Services. Let's listen into his views on Zomato.
What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant.
Okay, let's take a short break on that note. On the other side, we'll continue to discuss market fundamentals. Nilesh Shetty of Quantum Advisors will be with us. Stay tuned.
We want justice! We want justice!
Welcome back. It's up about 50 points on the Nifty. The Sensex is up close to about 100 odd points. It's been a quiet session of consolidation. It's the start of the week. But since 11 o'clock, you can see there has been a bit of a positive momentum in the market. Some of the big movers include in Asian Paints, so that's up nearly 1%. Apollo Hospitals is now back in the green. JSW Steel, Tata Steel, Hindalco, so some metal names. Again, this is all the price action change that we've seen since 11 o'clock. Catch your attention. So JSW Steel is now flat. Hindalco, Tata Steel have been, they've opened trade strong and they continue to build on that. So now you've got a gain. A considerable gain, I think, on Tata Steel. So that's up 1.25%, while Hindalco is inching towards a 3% rally. On the way down, you have softness in a few auto names like M&M, Tata Motors, Bajaj Auto. So even as Ola Electric continues to rally, some of the other incumbent four-wheeler, two-wheelers have been a bit subdued in trade. Bharti Airtel is down nearly 1%, and ICICI Bank too is not doing too much. Reliance Industries has been a big mover, and that's helping.
Okay, well, yes, lots of individual stocks also. Trent, by the way, you mentioned that fresh record high over there. It's been a phenomenal mover, Trent, that is. And a couple of other names also that do stand out. Ashok Leyland has actually come back in a big way this year. Ashok Leyland is up 45% this year. It's now at a fresh 52-week high at 258 rupees. And really, I mean, there has been a slowdown in the commercial vehicle market last year. This year, the commercial vehicle market is bouncing back. So on hopes of a better year, Ashok Leyland as a stock is doing pretty well. I mean, it's really been a phenomenal mover over there. Let's do one thing. Let's get you some market opinion now from Mark Mobius on the recovery in the emerging markets and if and when a rate cutting cycle begins from the US Fed, what does this really mean for Indian markets? Also, he compares India versus China and the possibility of a Fed rate cut. Listen in.
When you look at emerging markets, India is going from strength to strength, but there are a lot of retail investors coming in and playing with derivatives and all kinds of operations, which could be kind of risky for that market. But generally speaking, things look good. And believe it or not, China is beginning to recover. We've seen a move from the bottom. And so that's good news for emerging markets generally. So if you look at the emerging markets index, you see some recovery. I think definitely there will be a move by the Fed to lower rates. There's no question about that. And that's, I think, being reflected in the markets. I think the markets are beginning to discount that. Also interesting that a lot of these emerging market currencies are getting stronger against the US dollar, which is quite interesting when you look at the whole situation. Part of that, of course, is some uncertainties regards to what's going to happen in the election. So that's, I think, beginning to be factored in to the markets and to the currency rates.
Okay, that's important opinion from Mark Mobius. But time to take stock of our own markets. Nilesh Shetty from Quantum Advisors is now with us on the show. Nilesh, morning. Thank you for joining in. I remember the last conversation you sounded a bit cautious about high valuations. And of course, it remains about individual stocks and picking, the stock picking. What is the cash level now? Because last conversation you'd indicated the cash level had gone up to 15%. And any incremental changes that you've made to your portfolio?
Cash levels remain around that 15% level. Markets month to date is actually down. So in that sense, it's not moved up for us to trim further. But it is selectively that we are seeing certain names getting there. We continue to believe that entire consumer discretionary space, including automobiles, is now getting expensive by whatever measure you want to sort of gauge valuation. So a lot of our trims are happening in that space. To get a value is very, very difficult in this market, barring, say, that banking and some names in financial space, which has tested people's patience and they're now trading at, say, 2-decade low valuation. But if the markets were to move higher, and incrementally when you now see it earnings which have come out in Q1, it doesn't warrant anywhere close to the valuations that people are factoring into these companies. So the market has held up surprisingly on flows, domestic flows. Foreign investors have taken money out, but at some point it will turn. And especially in the small and mid-cap space, you need to be very careful because when you're trying to sell, what you assume liquid or what you think there's liquidity when the markets are going up suddenly disappears when the market turns, and the drawdowns can be very sharp.
So autos is the only space where you are pairing positions because it's the valuations have gotten expensive? or any other pockets?
Autos, PSUs for sure. PSUs. We've actually exited a couple of PSUs in the last 1 year. Industrials, we had one name a year ago, which we now don't have any position in industrial because valuations are reminiscent of the 2003 to 2007 bull cycle, while the earnings are nowhere even close. Even the revenue growth is nowhere even close. So getting valuation or getting positions in some of these sectors is very, very tough. So we have zero positions in these sectors actually.
Okay. Are there any sectors that look attractive to you now from both a valuation and a growth standpoint? I mean, for the next 1 year, where do you have your sights set?
The private sector banks by far remain the best value opportunity, but they've tested investors' patience. We thought there was value 2 years ago, and they've not moved much even in the last 2 years. But that remains the only bucket where there is margin of safety in some sense. We have built positions in life insurance. We had a position in a general insurance company which we built a year ago, and a broking company which offers value provided the legal issue is sorted out there. But apart from that, there is very few places where you find value at the moment.
Nilesh, what about some of these new age tech companies? So for instance, something like Zomato, stock is running up, but it's delivering on growth and on that, improvement in profits. Ola Electric, there is so much optimism baked into the kind of stock price. Pull up something like Unicommerce, the SaaS player. I know it's much smaller. Its market cap must be 2,000-3,000 crore rupees, but Unicommerce is now up also 20%. Its issue price was 108, and now the stock price is at 220, 230. Paytm is also up another 4-5%. What are your thoughts now on new age tech companies and the kind of rally that we've seen?
Yeah, so one is moving from loss to slight profitability, and one is trying to build in extremely high profits and valuation. So there is a big gap there, which we've, at least whatever modeling that we do in these numbers, you have to be very, very optimistic to try to justify any of these valuations. Again, our style is value. We tend to be a lot more conservative when we are buying into companies, try to build in margin of safety. And for us, we are based on the numbers that we build in for these companies, we don't believe there is margin of safety at the moment in these companies. They were getting their cover maybe a couple of years ago, and valuations had taken a deep dive after IPO. But still, it was like even then you had to be optimistic to buy into these companies. Of course, they've done very well in terms of price, moving higher in terms of share price. But again, it's just moving from marginal or losses to marginal profitability. It's not that they're throwing up billions of dollars of cash flow for investors.
Okay, well, let's do one thing. Let us wrap up on that note. Thanks a lot, Nilesh, for joining in. Appreciate your time here on CNBC TV18. We'll slip into a quick break. On the other side of the break, we'll get you more on the markets and all the top stock updates. Stay tuned.
the Roadster series. The first product is going to be the Roadster Pro. This is the Roadster Pro. But I'm going to move along. We have a lot of announcements. A 10-inch TFT touchscreen, ADAS. With this vehicle, you saw the vision of ADAS in MoveOS. That'll be installed in this vehicle. It'll come with all the sensor package. So that's the Roadster. The specs again are absolutely killer. Fast acceleration, high top speed, power, range, 250 kilometers of range. Kripa is a biker girl, isn't she? So we've shown you two bikes, the Roadster Pro and the Roadster. All right, let's have the Roadster X.
Welcome to Trading Hour on CNBC TV18. Well, freight container rates have risen sharply amidst the Red Sea crisis. Sonal is standing by with a complete timeline and details on the impact on exporters. Sonal, over to you.
Thank you so much for that. Well, freight costs have surreptitiously increased multifold since the time Red Sea crisis has hit the global markets. So let's just map the timeline from here. It was in October last year when Houthi rebels, they launched missiles and armed drones in the region, and since then it's been a one-way move. Freight rates, they were at $1,384 per container end of November, which moved to levels of $1,461 that we saw in December first week. By the end of December, it moved to $1,661 and a big spike in January because we saw big moves. $2,070, $3,072, then we had levels of $3,777, and in Feb it stabilized to levels of around $3,700. And that continued in March as well. In fact, we saw some decline in freight costs at that point in time. It was around $2,900 a container. This continued for a bit. Entire April, it was around $2,700. But in May, it saw a spike again to levels of $3,159. And since then, it has kept going higher. By end of June, freight rates have reached levels of $5,318. And in July first week, it moved to levels of around $5,900. And it stabilized in August. But in last 1 week, we have seen it come off a little to levels of around $5,551. But just in Q1, how have these rates moved? The composite index suggests increase of 87%. Individual routes now from Shanghai to Los Angeles, that's where the rates are up 80%. From Shanghai to Rotterdam, they are up 137%. From Shanghai to New York, rates are up 60%. And Indian exporters have seen an impact because of freight rate hikes. Let's talk about some examples. Reliance Industries says the cracks in refining segment were impacted due to higher freight rates and ultimately it led to lower imports. Divi's Labs, on being asked about the impact of freight rates, said that they are not immune to issues of container availability and freight cost issues. They face challenges with exports and they continue to face them. Welspun Living, a big exporter, indicated that there is stock build-up due to Red Sea issues and they continue to monitor the same. Aarti Industries indicated that volume growth in some segments in exports could be impacted due to Red Sea crisis. UPL said contribution margins declined due to price decline, liquidation of inventory, and increase in freight costs due to Red Sea issues. Galaxy Surfactants called this a tricky situation since freight costs have doubled in most of the sectors and getting containers to load products for exports is an issue. APL Apollo indicated that EBITDA per ton was impacted due to high employee costs, power costs, and also freight costs. Well, Container Corp indicated that EXIM volumes in Q1 were hit by high ocean freight rates and shortage of containers. Balkrishna Industries indicated that freight costs expected to increase to 8 to 9% of revenues in Q2, largely due to Red Sea crisis, which was at 6.4% in Q1. Blue Star indicated that they've taken a price hike due to higher freight costs and that exports could be muted in FY25. Growth would be just 6 to 7%. Supreme Petrochem indicated delay in export orders due to freight costs going higher on the back of the surge in freight costs. Now, because of this, shipping major Maersk increased full-year guidance in calendar year 2024. EBITDA guidance was increased to $7 to $9 billion from $4 to $6 billion. EBIT guidance to $1 to $3 billion versus a loss that they expected earlier. Free cash flow guidance has also been raised to $1 billion versus negative cash flows that they expected earlier. Now, what are the current regional rates? As on 18 July, Shanghai to Los Angeles was 7,512, which came down to 6,500 now. Shanghai to Rotterdam from 8,000 has come down to 7,900s, and Shanghai, New York has come down from 9,300 levels to just $8,900. It is last week. Mask also indicated that growth in second half could slow down in terms of container volumes from 7% in first half to around 4 to 6% in second half. They also indicated maybe shipping disruptions could last until end of the year. If that does happen, exporters could continue to see an impact on their margins as well.
Thank you. Very interesting compilation of what's happening on the freight front globally and even the impact out here in India. Well, with that, we're going to take your leave on Trading Hour from the entire team. Thank you for watching. Stay tuned. Halftime Report is up next.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions.
You know, they do polls and this stuff, and I'm at like 93%. I said, so why are we having an election? They didn't have an election. Why are we having an election? How would you like to be Biden? He's working, he's spending money, he's trying. They wanted to have a debate. That's the thing that started it all. You know, if I didn't debate him, he'd still be running right now. But I believe she will be easier to beat than him because she's a truly radical left lunatic. And with him, he never really believed it. Of course, I don't know if he knew anything. I'm not sure. But he didn't really believe it. She totally believes it. She wants to destroy our country. With 4 more years of Kamala, your finances will never recover. They will only get worse. She said, I don't want fracking in Pennsylvania. She said it hundreds of times. I don't want it anywhere. We will. Then a couple of months ago, when the polls are showing that she's getting clobbered, well, actually, nobody actually thought they were politically correct. They wanted to be politically correct because they wanted, they had 11 different people, and they put her name in to be number 12, and they had a vote. She came in last. So people say, be nice. Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic. Have you heard it? I'm a better looking person than Kamala. No, I couldn't believe it. She said, I had never heard that one. They said, no, her biggest advantage is that she's a beautiful woman. I'm going, I never thought of that. I'm better looking than she is.
Market cools off from opening highs with banks and auto stocks coming under pressure. PSU stocks outperform. Large cap ITCs follow through buying. Mid cap see momentum with the index up nearly 0.5%.
Ola continues to electrify the street with the stock nearly doubling since listing. Market focuses on reducing losses and the e-motorcycle launch. HSBC says falling battery prices likely to boost profitability of EV makers.
CNBC TV18 exclusive. Ahead of Motilal Oswal Investor Conference, Ramdev Agarwal says stock valuations are a challenge. Quick commerce remains a good business, but Motilal has booked profits due to stock surge in Zomato and also sees value in the capital marketplace like insurance, private banks and BFSI.
Stocks in focus. BEML rallies on hopes of more contracts as the cabinet clears metro projects in several states. Kaplan point surges after the Brazil regulator approves its plant in Tamil Nadu. Voltas gains as Nomura gives a buy recommendation on the stock on the back of expected strength in AC sales. Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it is turning out to be a good session for us. No complaints except for the fact that the Bank Nifty is just about moved into the red. We're off the day's high, but the larger picture is that the Nifty is also above 24,500 as we speak. So that continues to maintain. We're just about trading with a little bit of a positive bias. Well, we do have a lot of cues lined up over the week, which we need to watch out for, especially in terms of the global front. So we have minutes from the Fed meet, which is on the 21st of August. We have the Jackson Hole Symposium, 22nd to 24th August. And Jerome Powell will be talking on the 23rd. Remember that the US markets have seen a good comeback after fears of a recession. So it'll be important to just watch out for the commentary which comes in from there. But for our markets, well, like we mentioned, Ola Electric and all of the others, really, Mangalam, it's a lot about specific stocks.
A lot about specific stocks, Ekta. You know, you did speak about some of the cues that we are tracking towards the end of this week itself. But ahead of those cues, the texture of the market is actually pretty good. Yes, we're marginally in the green for the frontline index, but if you just take a look at the intraday chart of the Nifty, as you see, you know, opened with a gap up. That gap up, given the sort of rally that we had seen on Friday, was prone to seeing some profit booking at some point in time. It did see some profit booking, but the dip has been bought with equal, ferocity. So now the Nifty is back again higher today. And despite the Nifty bank being weak, what's leading the Nifty higher is Reliance. So that big boy has now suddenly moved higher, up around 2%, up around percent from the lows, and trading with a gain of just 1% right now. So we'll keep an eye out on this stock, and alongside that, the IT pack continues to buzz. What should give bulls a lot of support is the fact that we have nearly 3 stocks advancing for every stock which is declining, and the quantum of gains are a lot more than the volume of losses that we are seeing on individual stocks as well. Let's talk about IRCTC. Now reported its numbers, a steady set of first quarter numbers. Profit after tax further aided by higher other income. Prashant caught up with the company's chairman, MD Sanjay Kumar, began by asking him about the decline in travel and tourism revenue and spoke about the way forward for the company itself. So let's hear out that management conversation with IRCTC post their first quarter results.
I am happy to inform that this quarter one is the highest ever revenue we have achieved, and similarly the profit margin this time is the best ever quarter results. But yes, all other segment except tourism has shown an increase of around 15%, and in tourism there was a specific cause that why we could not do better in this quarter is because of the model code implementation of model code of conduct during the election period. So our main product, tourism product like Bharat Gaurav trains and state trips, we could not run, and that's how it affected our revenue. But going forward, I assure you that we are doing excellently well.
Mr. Jain, there are more elections coming, as you would recognize, right? State elections, Maharashtra, Haryana, Jharkhand, J&K. So give us a sense. I mean, so for the full year, last year, that is FY24, in the tourism segment, you did about 700 crores in revenues. You posted a growth of about 24%. Could you give us a sense of what numbers could look like for the full year, FY25?
Yeah, it's a good question. Yes, election is everywhere, but whereas it gives some good business to us, like movement of election specials and all, but at the same time some business get hardened. But all these state elections are not like our general election, because in general elections the complete involvement and model code of conduct is implemented in every state. Here certain pockets which we have to avoid, but we have already entered into MOU with 8 states, and another 2 states are almost ready for implementation. So I will try to maintain the same numbers.
So around 20% growth, 25 over 24 in the tourism business?
Exact number should not be said in Q1. We are sitting, but our strategy is to maintain the same amount of growth, same numbers of growth on a year-to-year basis.
Okay. Tourism, to be fair, is not the biggest of the segments. Actually, perhaps it is the smallest in that sense. On the ticketing side, if I can sort of come to you, revenues here have gone down about 4%, again on a quarter-on-quarter basis. On a year-on-year basis, they're up about 13.5%. Could you talk about this segment? This is an important one for you.
Yeah, it's a good question also. You know that IRCTC in business which is seasonal. When chutti is there, when people are going on tourism, when children are going on holidays, then our earning, our ticketing during that period, the revenue enhanced during that period. If you see the trend, it is similar. But I am happy to say that we almost maintained the same revenue which we on a Q-to-Q basis also, and around 16%, 13% growth in IT earning.
For the internet ticketing segment, sir, revenues grew 8% in FY24. For the full year FY25, what can we expect from this segment?
You see, it will be almost same, because I am telling you, we are not only seeing the convenience fee, we are working on non-convenience fee part also, which is quite a good number. Like if you divide these two earning, around 2/3 comes from our convenience fee, and 1/3 is coming from non-convenience fee. So there is a huge chance of improving this earning. So we'll maintain that.
Okay, got that. The margins in this segment are the highest for you, right? I mean, it's come in at 82.8% segment margins for internet ticketing. Will you be able to hold on to these margins? Give us a sense.
So far as IT revenue is concerned, IT margin concerned, yes, certainly it will be the same, because we are not reducing any charges. And as the number of trains are also increasing, if you see the number of tickets daily which we booked in Q1 last year, we have 11.41 crore lakh only. This time we have touched 12.9 lakhs per day. So the improvement of 1.5 lakhs passenger per day in this quarter. And as now election is over, the many rakes are ready, so new numbers of trains are going to come this season, this year. So we are likely to achieve it. I don't see any problem in this.
Okay, let's come to catering now, sir. Again, a large segment for you. Could you give us a sense of what you've seen and what should we expect? I mean, you're tying up with various aggregators. There is the Vande Bharat opportunity. But on an overall basis, what should we expect from the catering segment?
I'm also saying quite encouraging, because as you correctly told that economy is booming, rail infrastructure investment is quite a number. DFC is coming, so now the release of the capacity for running passenger trains, more and more Vande Bharat trains are coming. All these will add to our revenue in catering. Similarly, if you see our growth in e-catering, it has improved a lot, and I find it very encouraging that it will further grow exponentially.
What should steady-state margins in catering be, according to you? And is there a potential for a tariff increase here?
You see, these are all conjectures. If you see the history, every 5 years there is an increase in tariff. But till it is done, we should not say anything.
So is this the 5th year? I mean, what's the likelihood of an increase?
It was done last. It was done in 2019.
So we are there. I mean, we are there. It could happen, right? But as you said, if it happens, it happens. When it happens.
But it doesn't matter, because we are already working on cluster. We have given we got a new policy from Railway Board in November 23, and we are already halfway through in implementing it. This is a major change from the previous policy, and now that we are giving a long-term contract for the catering. So the response is very encouraging. We are already halfway through. We have already started 100 such kitchens. New kitchens in this quarter, so I'm seeing lot money coming for on catering side.
Okay, all right. So that's the management of IRCTC looking to maintain their growth rates, and they're seeing catering as a good source of revenue going forward as well. That stock up around 1% but this has been a complete outperformer, as we know. We'll take a short break, but we'll get you a lot more on the markets, and we'll focus on stocks such as Voltas and Ola Electric, which are buzzing today.
You know, they do polls and this stuff, and I'm at like 93%. I said, so why are we having an election? They didn't have an election. Why are we having an election? How would you like to be Biden? He's working, he's spending money, he's trying. They wanted to have a debate. That's the thing that started it all. You know, if I didn't debate him, he'd still be running right now. But I believe she will be easier to beat than him, because she's a truly radical left lunatic. And with him, he never really believed it. Of course, I don't know if he knew anything. I'm not sure. But he didn't really believe it. She totally believes it. She wants to destroy our country. With 4 more years of Kamala, your finances will never recover. They will only get worse. She said, I don't want fracking in Pennsylvania. She said it hundreds of times. I don't want it anywhere. Then a couple of months ago, when the polls are showing that she's getting clobbered, well, actually, nobody actually thought they were politically correct. They wanted to be politically correct because they wanted, they had 11 different people, and they put her name in to be number 12, and they had a vote. She came in last. People say, be nice. Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic. Have you heard it? I'm a better looking person than Kamala. No, I couldn't believe it. She said, I had never heard that one. They said, no, her biggest advantage is that she's a beautiful woman. I'm going, I never thought of that. I'm better looking than she is.
Welcome back. Well, steady for the markets in terms of at least the Nifty trading with gains. So 24,570 is where currently the Nifty is at. Just want to point out that a couple of stocks which are seeing some amount of traction include Emcure Pharma, which is a recent listing. That stock came out with numbers recently. It's up around 5% and BLS E-Services is doing very well today. That stock is up around 10% in today's trading session. It hasn't done much for the year, but nonetheless, it's doing some amount of, it's gaining some amount of traction today. But nonetheless, the other stock that we're looking at is Voltas, which is in focus on the back of a strong performance in the UCP business in Q1, which is their cooling products business, and the brokerage commentary is enthused the counter as well. Sudarshan is here with the details.
So Voltas has built onto strong gains that company had seen post strong Q1 earnings. Now stock is back at record high, and if you talk about the earnings, Q1 was led majorly by USP business, for which volume growth had come in at 67%. And for FY25, company maintains high single-digit margin guidance. As far as brokerages are concerned, most of them remain bullish on the stock. Nomura has a buy call with a target of ₹1,857 per share. It says growth outlook remains strong, and it has raised FY25 UCP revenue growth to 30% from 26% earlier, and it says priority of market share gain over margin by the company is a step in the right direction. Jefferies too has a buy call with a target of ₹1,770 per share, and it has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and target is raised to ₹1,960 per share. It says company is optimistic on demand for Voltbek products in Q3 FY25 led by festive demand. MS has an equal weight call with a target of ₹1,225 per share. It says company guides for high single-digit margin in USP business given elevated competition. Kotak too has a sell call and target is ₹1,100 per share. It says limited margin expansion and unchanged guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLSA has an underperform call. Target is raised to ₹1,310 per share. It sees limited re-rating potential. Last is GS. It has a sell call with a target of ₹1,310 per share. It says margin may have limited room to surprise upside in the coming future, and sustainability of ordering will be a key for the stock going forward.
All right, take that point on UCP or unitary cooling products. As we know, it includes the air conditioning systems and the refrigeration systems for Voltas as well. The street bullish, the stock up around 4%. Remember, all of last week, it was a big mover as well. But speaking about big movers, and this one's actually the unusual mover, listed on 9th of August. Since then, it's been 6 trading sessions, and the stock has almost doubled from its issue price. We're talking about Ola Electric. They've made a couple of announcements post-listing as well. Right now, locked in that 10% upper circuit. Ola Electric, electrifying moves. Sudarshan is still with us. Sudarshan, unusual mover.
Totally. So IPO price, if you talk about, the IPO price was ₹76 per share, and it had listed almost the same price. And from that level, it almost doubled, and today it hit high of ₹146 per share. But remember, free float is only 17% of total outstanding share. It means only 17% of total outstanding shares is available for trade. If you talk about the recent announcements, company had launched Made in India 4680 Bharat battery cell, and CEO has said he has promised faster charging and more energy storage through new battery launch. Also, it has entered motorcycle segment. It has launched roadster portfolio starting at ₹74,999. And today, HSBC has come out with a note initiating coverage with a buy call, and target is ₹140 per share. It says, despite our conservative view on EV, it believes Ola is worth investing in, and its go-to-market and localization efforts are noteworthy and to attract investors looking to play electrification theme in India. And its target price implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times for Ola Electric.
Okay, all right, Sudarshan, thanks very much for that. In fact, earlier today, we did catch up with Elara Capital's Jay Kali and HSBC India's Yogesh Agarwal. Let's listen in to their views on Ola Electric.
There are positives and there are negatives. Of course, being the positives, they are one of the leaders in terms of electric scooters in the country. Their ramp up has been pretty impressive. In a very short span, they have ramped up quite well on the EV two-wheeler side, and now they are going ahead with the EV motorcycles as well. But one needs to be cautious about their cell venture as well. Globally, cell prices have crashed. How much of a benefit will that cells be for their internal consumption versus peers? That needs to be looked at. The cell, stability in terms of yields is also something that needs to be looked at. And hence, once the cell manufacturing comes on full stream, how much of that really gives in terms of cost advantage is something that is, still, execution is one of the key risks for Ola over here on the cell side.
At least for the next 2 years, things will be better. And it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we've all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. And that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in four-wheelers. And in two-wheelers, anyway, the launches are happening more and more. With more launches, there'll be more options. And I think there will be some bit of a pull factor. It is very, very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it'll be a very big challenge to electrify motorcycles. Large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
All right, interesting commentary around Ola Electric. Much spoken about stock, especially after the breathtaking moves that we've seen in just the last 6 trading sessions itself, taking the market cap of Ola Electric closer to that 60,000 crore mark. Important, as Sudarshan pointed out, to know that only 17% of the company's available equity is open for trade right now. The rest is locked in post IPO. So as the first tranche of selling comes in post, the freeze opening in on September 5, we'll keep an eye out on how this pans out. Take a short break. Come back, get you more on the market technicals. Rachna Vaidya joins in with some trading strategies. Stay tuned.
प्रथम दृष्टया जो ज्ञात हुआ है वो ये है कि इस पे कोई बाहरी ऑब्जेक्ट हिट किया है, जिसके कारण इसका कैटल गार्ड डैमेज है और जिसके कारण शायद ये घटना घटित हुई हो। परंतु अभी हम लोग रेस्टोरेशन पे फोकस कर रहे हैं और इसकी जांच के बाद इसका कारण सामने आएगा।
Together, we will build what I call an opportunity economy. Under my plan, more than 100 million Americans will get a
Welcome back. You're watching us here on Halftime Report. Perfect time to take you through what's taking place in the markets at midday. Let's talk about the indices. The frontline indices, both the Nifty and the Sensex, are flitting between both red and green. They're off the day's low, but off the day's high as well. Why is that? Because there is a couple of indices which are playing a bit of a tug-of-war. So IT index, which did well on Friday, continues to hold on in some green, whereas the Nifty Bank is seeing some supply at higher levels. It's off around 400 points from today's high as well. The good part is that the mid-cap index is doing relatively better. At an index level, it's a gain of almost 1/4%. But if you look at the broader markets, the market breadth has maintained its outperformance of advances versus the declines at a ratio of nearly 3:1. So 3 stocks advancing for every stock, which is lower in today's trading session. So from here on, the one stock that could change things could be Reliance. Like I said, it's been trading with a gain of almost 1% over the last 14 days. It's up 3%. Can that big boy power up? If it does, then maybe the Nifty has a few more upside triggers left. For now, the option writers are positioning themselves for a bit of a range. What is this range? 24,600 put is seeing some amount of writing at a premium of 140 rupees, telling you that around 24,450, 24,460 would be a strong amount of support coming in. On the way up, however, as we move towards today's high or closer to 24,700, we are likely to see some supply. The 20-day moving average, it's an important level for both the Nifty as well as the Nifty Bank. For the Nifty, it's an important support, whereas for the Nifty Bank, it is an important resistance. So around 50,923, were the Nifty Bank to cross that, we will see some more traction on the Nifty itself. A couple of stocks that I'm watching out for, in particular, we have Birlasoft, which is doing well, but off highs, because now the open interest positions have increased the threshold level, so the stock may re-enter F&O ban after exiting it on Friday. And the other one you're looking at is Biocon, which may actually exit F&O ban in today's trading session, and that explains why the stock is higher by about 1%.
Okay, all right, Mangalam. Thanks very much for that. So those are a couple of F&O cues to watch out for at midday. Just want to point out that there are lots of stocks buzzing around from the broader markets within the pharmaceutical space. So Kaplan Point is up around 13%. It's showing traction because one of its facilities got approved by the Brazilian regulators with 0 observations. So that stock is higher. And we have Morpen, which is also gained around 13%. It's one of the key gainers on the BSE this afternoon at this point in time. Godfrey Philip is also giving it company along with Angel One and Gravita. But we do have Rachna Vedya who's joining in on the show to discuss the technicals of the market. Rachna, hi, welcome to the show. Well, it's more about specific stocks as compared to the index, which as we speak, the Sensex has slipped into the red and the Bank Nifty is now showing a cut of 150 odd points. So how would you approach it? What are you telling your clients? Is there an index call that you're suggesting, or is it more stock specific today?
Yeah, good afternoon and thanks for having me here. Yeah, as far as the indices are concerned, what I would say is that until the last week, the resistance that Nifty was facing, especially on futures, was 26,400. Now it has taken it out very powerfully, and now it is above that well and strong. So now the same resistance of 26,400 becomes a support. So until and unless that is broken, we don't need to worry. And intraday pullbacks would be buy on dip, because the texture of the market, the overall texture of the market has now changed from sell on rally to buy on dip, along with the strong, powerful closing that we got in the last trading day. So that is how the index is readable. And as far as the call on the index is concerned, we could be taking along on the index when the index stops falling and stops giving us this pullback, which is currently on. And if it settles down anywhere about 24,400, which is a very high probability, then we enter long with a stop loss below 26,400 and 24,600, sorry. And that is how we go long with a target of 26,650 and 26,700 on the upper side. And as far as the bank Nifty is concerned, the situation is a little weaker compared to Nifty, and this particular index needs to hold the current price level itself, which is 50,500 approximately on futures. And if that sustains, only and only then it remains positive. Otherwise, that's an avoid.
All right, the Nifty Bank is an avoid. Rachna, thank you so much for joining in. The Nifty Bank currently at the low point of trade, settling a lot below that 50,400 mark, a little around 420 points off today's high as well. So just keep an eye out on that one. What's dragging it lower has to be HDFC Bank. That's the one which has moved towards the low point of today's trading session. Also, putting some pressure, downward pressure on the Nifty Bank is ICICI Bank. So just pull up the intraday chart of ICICI Bank. You would see that from the highs, it's corrected about 1.5%, currently trudging around at the lower end of today's trading range. Take a short break, come back. On the other side, we have the management of Suprajit Engineering joining in.
And we will do this by restoring 2 tax cuts designed to help middle class and working Americans. The Earned Income Tax Credit and the Child Tax Credit. We will provide $6,000 in tax relief to families during the first year of a child's life. Now think what that means. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance.
We have a 5-year-old daughter. We want to make sure that she has access to the best schools and to community programming and those kinds of things. And so we really want to be in a position to give her the kind of home, a little more space, a place where we can entertain and invite our friends in our community to spend time with us. All of those things are really important. And we really want to make sure that it makes financial sense before we can do something like that. So she spoke to my heart as a potential homeowner.
Welcome back. You're watching us here on Halftime Report. Let's get chatting with the management of Suprajit Engineering. K. Ajit Kumar Rai, who's the founder and chairman at the company, joins in to detail their business performance, not only in the first quarter, but more importantly, as they see it going ahead. Thanks a lot, sir, for joining in. I remember the last time you said that, because of Red Sea issues, etc., your margins could be impacted by about 100 basis points. And at the same time, you would, see some sort of improvement in the controls division over the next couple of quarters. So 1 quarter hence, how has the situation panned out so far? Is the pressure on margins abating, and are we seeing some signs of turnaround in the controls division?
Good afternoon, and thank you for having me. Yes, we are seeing some change in the controls division. As you have seen, for the first time, we have touched the 8% EBITDA margin, which was what our target was for the year in the very first quarter. The growth has been lukewarm, but operationally we are doing pretty well, and that's why the reason of the improved margin slightly. But on an overall basis, we have been growing pretty well. On a standalone basis, we are at about 13% growth, and even on a consolidated basis, we're about 8-9% growth, with the margins, meeting more or less what we have guided.
Okay. Sir, can you give us an update with regards to the automotive division? Because that seems to be doing well on a global level, despite what's taking place in the industry. You are seeing an inflow of orders. So tell us where it stands in terms of an order inflow that you saw this quarter, cumulative order book when it comes to the automotive division, and what you can guide on.
Yes, the automotive side of our business is doing pretty well globally. What has happened is that in the last 2-3 quarters, actually, we have been winning significant new contracts, which will go into production for the next, 2, 3, 4, 5 quarters. So what is happening in the industry is that the customer is looking at supply chain partners who can deliver products either from the onshore or from the close shore or from the low-cost destinations. With the acquisition of LDC and now that of SCS, we are able to give that perfect footprint to the customers, and that's why we have been winning a lot more contracts than the industry growth. So going ahead, although industry may not be growing, anywhere near maybe 1%, we are expecting, as we said, even in the controls division, by end of the year, we should be touching double-digit growth in that business. So there is a consolidation of vendors, and then, appreciation of the footprint that we have that has been winning us new contracts in the last few quarters. And that trend continues as we speak.
All right. So even as the fundamentals are showing signs of improvement in a couple of your divisions, right now as we speak, the stock is down by almost 6.5%. Maybe because the street is not very happy with the size of the buyback that you've given. I mean, just 1.3% of the current total market cap at 750 rupees per share leaves very little in the hands of, say, retail investors when it comes to, say, the acceptance ratio. Do you think you could have done a little more? And also, are promoters participating in the same?
First of all, you must understand on Friday, the stock went up 16%. So it's just, readjustment of the price. So I wouldn't comment on the price at all, but it has done a good returns to shareholders for many years. In terms of the size, our first buyback has been for 50 crores. Now it's about 110 or 112 crores. The underlying, philosophy of the buyback has been that Suprajit would be distributing between 30 to 40% of the, distributable profit to shareholders over a period of time. We have been doing about 20% of that through dividends and the balance 20% through buybacks. So when we sort of accumulated 2-3 years of sort of undistributed, let's say, dividend, it amounts to that quantum. So that is what has been distributed now, in line with our assurance to the market. I think that's exactly what has happened. Price, on the day of declaration of the buyback, we have priced it almost about 45% higher than the previous closing price, which I think is quite attractive. Of course, subsequently, prices of the stock has gone up.
Okay. All right. Just wanted to get back to the overall growth that you're targeting then. You did around 8% growth in this quarter. Your EBITDA was, better. It was up 20-odd%, margins at around 12-odd%, and profit of around 15% growth. Tell us, what are the coming quarters looking like? Are you going to continue this double-digit growth in terms of EBITDA as well as profit? And is the revenue going to pick up to a double-digit increase?
Typically the first quarter of the year is a slightly lukewarm quarter in the automotive industry. It's a sort of seasonal business, particularly in India at least. We are seeing that, we are quite confident that by end of the year, we will be that double-digit, growth in business. Certainly in the standalone business, that probably it will be much higher. But also in the consolidated business, including our subsidiaries, which are in marketplace, where there is no growth, largely due to the increase in businesses and the new contracts we have won. In terms of the margin profile, I think we have sort of guided that on a consolidated basis, we want to be between 12 to 14 in the reasonable future. And we are at about 11.75%. We have also guided that on the controls division, the target is to do 8%. We are almost there now. For the first time we touched it. And on the standalone, we have been between 15 and 17% EBITDA margin. And we have been very much there in this quarter as well. So generally, I think we are in a good wicket. I think the order wins gives us the confidence that the growth trajectory and the margin profile that we have been talking about all these days seems to be, happening as we speak.
All right. So just final question before we let you go. One is on the DCD margins, which, there are hopes of improvement going forward. If you could give us a sense of how July and August have been. And the second part is on your SCS acquisition. What do you expect it to be in this year and thereafter, steady state margins? On those two factors, if you could give us a sense.
I think on the domestic cable division, please keep in mind that, it also includes the overheads of the corporate as well as our, technology center. Last year at this time of the year, we had only about 40 or 50 engineers in technology center, whereas in this quarter, it has been in excess of 100. So obviously, those are the costs that is adding. If you look at the cable division on operational basis, it is, striking the same EBITDA margins as it has always been doing historically. Now coming to SCS, I think we have only done the first phase of the transaction. Please understand that we have bought it from an insolvency proceedings. And obviously that means that they have been incurring significant losses. So this is a little bit of a longish journey, and given, a year or two, I'm pretty sure that SCS will turn around nicely and give significant, not only the top line business, which anyway is there, but also improve its margin in line with our, targets.
Okay. All right, sir. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Suprajit Engineering seeing some amount of profit booking after that strong run that we saw on Friday. For the markets, there's some recovery which has taken place for the Sensex. So just about flitting between red and green. You'd have to say it's a consolidatory trend in today's trade on a larger scale. We'll take a short break, but a lot more on the markets. Stay tuned.
बहुत मैं बहुत पागल था।
मेडल पलेना हमारे लिए चैंपियन है आज भी। इन्हें जो रोड से लेके तो पोडियम तक का सफर तय किया। धन्यवाद।
Welcome back. Well, just want to point out a couple of stocks that that are buzzing. So Kaplan Point, we'd spoken about it briefly just a couple of minutes ago. So that stock is up around 13%. The news is that Anvisa, which is basically Brazil's regulator, has conducted an inspection of the sterile injectables and ophthalmic facility. Inspection was between the 12th of August and 16th of August, and they had mentioned that there will be this inspection taking place in their Q1 call. Which, the week on post their earnings. There are zero observations issued by the by the Brazilian regulator, and that's the reason you're seeing the stock up around 13%. Now, Latin America as a whole is majority of the revenues for Kaplan Point. Brazil is an important part of the expansion plans in Latin America, the company has said. This opens the doors to the largest market in that particular geography, which is in Latin America. Brazil, Mexico and Chile are now new opportunities for the company, and that's the reason why you're seeing that stock up around 13% in the past 3 months. As you can see, the stock has rallied over 35%. We'll take a short break on that note, but up next, Manisha Gupta will join in with our commodities segment.
The Roadster series, the first product is going to be the Roadster Pro. This is the Roadster Pro. I'm going to move along. We have a lot of announcements. A 10-inch TFT touchscreen, ADAS. With this vehicle, you saw the vision of ADAS in MoveOS. That'll be installed in this vehicle. It'll come with all the sensor package. So that's the Roadster. The specs again are absolutely killer. Fast acceleration, high top speed, power, range, 250 kilometers of range. Kripa is a biker girl, isn't she? So we've shown you two bikes, the Roadster Pro and the Roadster. All right, let's have the Roadster X. That's the Roadster X. Again, great features for its class of performance. High top speed, 11 kilowatt of power, 200 kilometers of range in a single charge. Iconic LEDs, 4.3-inch LCD, and that's the Roadster X. So आज हमने एक नहीं, दो नहीं, 3 बाइक्स दिखाई हैं. 3 बाइक्स लॉन्च कर रहे हैं.
Welcome back, and joining us on the show now is Jonathan Bharat. He's CIO at Probus Securities. Jonathan, thank you so much for joining us. And yet another very strong start to the week when it comes to the gold prices, $2,500 an ounce is holding. What's your sense from here? Would you say that the rate cut in September is now factored in? And is it going to be about a day-to-day event, kind of a day where you would see news informations moving the prices?
Manish, look, it's quite interesting to come in and see gold once again at record highs. I do expect it to continue. I think the market is sort of definitely looking for that rate cut in the US in September. I think the key will whether be, we're going to get more after that or whether it's a wait and see. I do get a sense that given the CPI data that we had out last week, it did indicate that the year-on-year numbers were quite good, but I am concerned about the monthly data. The monthly data, particularly with core inflation, was up 0.02%, and that to me is something that the Fed's going to be looked at. Remember, we do have a big week this week for the Fed, so it'll be quite interesting to see.
Oh, absolutely. You mentioned about the Jackson Hole meeting, and that is where the markets will take cues from. Having said that, do you see further gains from gold within this year now? And of course, the last quarter is going to be quite important. So is the month of September. But is the gold done as highs? What is the kind of range that you're working with now?
Look, I think when I look at gold, it still looks quite well bid. From a technical point of view, we want to see maybe a blow off at the top. But at the moment, it's holding on to these gains. It's holding on to 2,500. And that gives me a sense that she will trade higher. Now, whether it's more safe haven buying that's keeping it at this level, obviously we got concerns in Russia and the Ukraine. We've also got concerns in the Middle East. So maybe there is this movement towards gold. We're also seeing the US dollar under pressure as well. All those bode well for prices to go high. Always a bit of a concern given that it's Monday trading and the US hasn't seen what's out there. But I think it looks good. I think it looks good from here, and I'm looking forward to more gains.
All right. Any price points that you would want to mention on from the higher side?
Yeah, I do. I mean, from the high side, I think it's more to look at where we are, 25, 50, maybe even higher than that. But make a mention on silver. Silver really hasn't moved as much as gold. So I think if you're a bit nervous about buying break to a new high on the gold price, have a look at silver. It sort of technically looks quite strong, and it certainly is nowhere near record highs. Remember, the record highs were in 2011, and that was at $50 an ounce. We're only trading, around this 25. So a lot more to see on silver.
All right. What about the industrial metals? Because it's not just silver within the metal space. We've seen other metals do quite well. For example, copper is trading at a 2-week highs. Aluminum prices have seen some strength as well. So while the data continues to be uneven within the metal space, with the kind of sell-off that we have seen, are you comfortable buying a couple of these?
No, I'm not. No, I want to sort of hold off there on the base metal markets. There are some concerns still looming out there. You are correct with that. The economic data that we saw out of the US, that does worry me. And I think that's why we might see those rate cuts. Industrial production, retail sales, all that sort of data last night was well below expectations. And I think that might filter through to some weakness in the base metal markets. One thing that will keep the base metal markets supported will be the weakness in the US dollar, because that's certainly at tenterhooks at the moment. And if we see a break below these levels, we could see US dollar under pressure, which will naturally support the base metal markets.
So what is your base case scenario in that sense? I mean, if there was a buying happening at these current levels, would you say a 3 to 4% or a 5 to 7% of gains could be on cards?
Look, I think if we see the US dollar break through these levels and it starts to trade, then I think you could see a good 3 to 5% upward move across the board. Obviously copper, but remember, copper is the litmus test for the economy, and if the economy starts to weaken, then that's going to impede any more movement to the top side.
Jonathan, before we let you go, a quick word on the crude oil prices also, because that has come off its highs yet again. This week it started on a very flat note. What's your sense on this one?
A little bit underrated with oil at the moment because it hasn't moved given the concerns that we have in the Middle East. And I would have expected more of a lift. I actually think technically it's trading in an area that should see it actually trade a lot higher from here, which is a concern for all our economies, particularly India. So I think the dips here will be supported. It just makes me very nervous as to what's happening, in the Middle East and what's happening, with Blinken over there at the moment. And if we can't get some resolution out of there, I think there's more of a peace deal actually factored into the price rather than anything else. So we could see some fireworks there, and I'm pretty concerned.
So are we. But as you said, Jonathan, there are no shorts that you're doing right now into the market. There are perhaps some buying opportunities, not too much perhaps in metals, but silver does seem to be one commodity that could look at further gains from here. Thank you as always, Jonathan, for joining us with that. And that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.
Across the price point, across from the Pro, absolutely top of the line bike. The kind of power that bike has, maybe even 1000cc bikes don't have. The Roadster and the Roadster X. You can take your pick, all from the same family, same design, same platform.
The example that you're talking about is one of my favorite analogies in the book, which is the fact that in America they have an opiate crisis, where and the reason why they have this opiate crisis is, as many medical people have said, is that the slightest hint of any pain, you administer opiates. So you become hooked then, like on opiates in terms of that, and you have so many people, you have so many movies, everything else which have been made documenting that. So the same approach now has come to economic management, which is that at the slightest hint of trouble, you administer stimulus or you do like a rescue. It's no longer very selective. Even in America, and this is what I find it really fascinating, the concept of bailing out private sector companies was considered completely heretical until the 1980s. So before that, the private sector was supposed to operate on its own and the government was not supposed to come to the rescue if any companies got in trouble. In the 1970s, we got the first calls for such bailouts, and it was met with a lot of opposition, including from politicians. Then, and this is the irony of it, that in the middle of the so-called Reagan-Thatcher revolution, which we thought was all about free markets doing well, in 1984, the first big bailout of an American financial institution takes place. That's Continental Illinois. And after that, there's been no looking back, which is that one after another, every time there's been a crisis, whether the savings and loans crisis in the late 1980s, then LTCM, which happened in 1998, and then you had in 2008, of course, all the bailouts. I still feel it's very tough to do business on the ground in terms of that. And one thing which I've been very vocal about is in terms of the, the role of the fact that you have weaponized the investigative agencies. I've been very critical of that you may do that for political purposes, but there are serious business and economic consequences to that. On the ground, we know it, that the fear now, once again, of...
Market cools off from opening highs with banks as well as auto stocks coming under pressure. PSU stocks outperformed today. Large cap ITCs followed through buying, while mid caps see momentum with the index up 0.25%.
Ola Electric continues to electrify the street, with the stock now nearly doubling from its IPO price. Market focuses on reducing losses and the e-motorcycle launch. HSBC says the falling battery prices are likely to boost the profitability of EV makers.
A CNBC TV18 exclusive ahead of the Motilal Oswal Investor Conference. Ramdev Agarwal says that stock valuations are a challenge. Says quick commerce remains a good business, but Motilal has booked profits due to the stock surge and sees value in capital market plays, insurance and private banks.
Plenty of stocks in action in the broader markets as well. BEML has rallied on hopes of more contracts as the cabinet clears metro projects in several states. Kaplan Point surges over 13% after the Brazil regulator approves its plant in Tamil Nadu, while Voltas gains as Nomura gives it a buy recommendation on the stock on the back of expected strength in AC sales.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha. As usual, with me is Hormaz. So Hormaz, it's a quiet start. In fact, earlier in the day, markets looked much better, but during the day, it has come down and sobered down quite a bit. At the moment, looking flattish on Nifty 50 as well as Sensex, minor gains. But if you really look at the swing from the opening highs to the lowest point, it has been only of 100 points for Nifty 50, and it's trading somewhere in the middle of those 2 points of high point as well as low point. So Nifty 50 at 24,580 odd levels. Sensex 2 absolutely flat at 80,470 levels. What has really transpired in the last 15 minutes of trade is that the mid-cap universe was performing much better, was seeing gains and was up about 0.25%. While the banking stocks have been having a tepid day today, and especially leading the one pack was HDFC Bank, the heavyweight has been in the red. So that had minor losses, but the losses have expanded in the last few minutes, while mid-caps has stepped down a little. So those two factors have put larger pressure on the market. When we look at some of the gaining stocks, well, metals, the high beta metals are the ones which are gaining most. And on the flip side, the banks are the ones which are losing out the most. And M&M, SBI, Live, Bharti Airtel, and some of the Aditya Birla Group companies like Grasim is also on the downward trajectory today. Hormuz.
You know, it's been a range-bound session so far for the Nifty. Even though we are off the highs of the day, we are still trading in a very narrow range. The Nifty continues to remain around that mark of 24,550, 24,650. It's a 100-point range in which the index has been trading in all through the day. Banks, as you said, yes, they have been the culprits, mostly the private sector heavyweight banks, because the PSU banks are doing very well for themselves. The PSU bank index is among the top sectoral gainers. The finance minister is meeting the SBI chairperson and the chiefs of all other public sector banks as well. So those stocks are doing well for themselves. All index constituents of the PSU Bank index are trading with gains of anywhere between 1.5% to 3%. They are doing well for themselves in today's session. But the mid cap index is flat, but the small cap index is where the action is. 1.5% higher as we speak is the small cap index. They're trading at the highest point of the day as well. So good going for the small cap index, and plenty of stocks that are buzzing in the broader markets, more particularly the capital market oriented names. They continue to be in a different world. Angel One also now up 8% as we speak. CDSL, CAMS, all of them are doing very well in today's session. CDSL also, of course, because of the bonus issue, the record date is closing in. Angel One now up almost 10%. The last check was around 8%. So good going for CDSL as well. And CAMS is the other one, is also trading with gains of around 5.5% to 6%. But there are plenty of other movers in the broader markets, and we'll focus on some of them. Voltas is the first one, and that is trading with gains today on the back of strong performance in the UCP business, which is the unitary cooling products business, and in the first quarter, and of course on the back of some strong brokerage commentary coming in as well. Sudarshan is joining in with more details. Sudarshan, what do brokerages have to say on Voltas?
First, talking about the stock performance, Voltas continues to seek buying after a strong set of earnings for the Q1, which was led by the UCP segment. And this segment saw volume growth of more than 67% in the Q1. And also, company has managed to gain market share, with market share coming at more than 20%. Now, talking about the brokerages, most of them remain bullish on the stock, with Nomura maintaining buy call with a target of rupees 1,857 per share. It says growth outlook remains strong. It has raised FY25 UCP revenue growth to 33% 30% from 26% earlier, and it adds priority of market share gain or margin is a step in the right direction by the company. Jefferies too has a buy call with a target of ₹1,770 per share, and it has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and target is raised to $1,960 per share. It says company is optimistic on demand for volatile products in Q3 FY25 led by festive demand. MS though has an equal weight call with a target of ₹1,225 per share. It says company guides for high single-digit margin USP business given elevated competition. Kotak too has a sell call with a target of ₹1,100 per share. It says limited margin expansion and changed guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLSA also has an underperform call, but it has raised target to ₹1,310 per share. Goldman Sachs has a sell call with a target of ₹1,310 per share. It says margin may have limited room to surprise positively in the future, but sustainability of ordering will be key for the stock in the near to medium term.
All right, Sudarshan, thanks so much for getting us details. Voltas is sitting pretty with almost 4% gain. Now, another stock that is doing well today is Zomato. We are talking all about consumption today, it seems. And Zomato is surging after receiving a record number of orders on Blinkit yesterday. Now, the stock is holding up with gains of close to 1%. It has receded substantially from its high point of 280-odd levels in the day. Mangalam Malu is right here to tell us more about Zomato's plans and what is it that the street likes.
Well, you know, the widespread adoption of quick commerce is something that the street likes, and Zomato remains the only listed player in that space right now. If you notice, yesterday was, a record day of orders coming in on Blinkit, and that was largely on account of Raksha Bandhan. And across all the Q-commerce platforms, the leaders did tweet or put on social media, the kind of orders that their platforms got, including the likes of Zepto, etc. as well. But in that, Blinkit really stood out, with Albinder Dhinsa actually saying that they received not only record number of orders, but also the record number of, gross merchandise value, alongside a large part of their revenues coming in from Rakhi-related products, including Rakhis themselves and sweets, etc. So at peak concurrency, they had almost 700 Rakhis being ordered per minute on that platform. And all these factors really talk about the widespread adoption of Q-commerce in India as a channel of convenience. Zomato benefits also from a couple of brokerage notes that have come in this morning. UBS, for instance, they've rolled forward their estimates on the stock, and as a result of which they've increased their target price from 260 to about 320. Remember, after the first quarter results itself, they had upped their estimates for Q-commerce by about 20 to 30% and 2 to 3% for the food delivery business. So all of that with a valuation at almost 35 times FY27 EV to EBITDA makes it comparable to all the other listed consumer players, which are trading at around 30 times itself. Though, there is a justification for this premium by saying that maybe the growth profile and operational turnaround profile of the company looks a lot better placed than all the other peers, and as a result of which the stock is trading at around 35 times.
Delivering gains, delivering food. Zomato is doing everything it can as of now. Mangalam, thanks a lot for that update. Now, in fact,
especially Rakhi on Rakhi Day.
Of course, delivering Rakhis as well.
That was a very good idea, and so many people benefited from that, including Zomato.
Indeed. And in fact, earlier we did speak to Ramdev Agrawal as well, who's the chairman and co-founder of Motilal Oswal Financial Services, and on Zomato, and listen into what his views were on the stock.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant.
All right, outlook for this particular space, food delivery as well as quick commerce, remains buoyant. That's what Ramdev Agarwal says, even though his company has booked profits on various mutual funds on Zomato. With that, we'll slip into a short breather on the show. When we return, we'll get you a deep dive into the freight container rates as they surge post the Red Sea crisis. Stay tuned for all those developments.
Of having the, like in terms of the power that the bureaucrats have got on that at the top level, they don't even know that in terms of how it's being misused at the ground level, what exactly is going on out there. I think that, the license, that, and the fact that, some of these agencies have been even more weaponized in terms of the powers they have, who they can call for questioning, how that can be done. Like all this may appear optically, it's being done for anti-corruption stuff, but the real consequences on the ground. We go, we meet people, we talk to businesses privately, we do that. So I think that it's stuff like that I have much greater problem with. The macro management, I think, has been really good. The micromanagement in terms of why is it so difficult? Why is manufacturing as a share of the economy still stagnating, at 14-15%? Of GDP forever, in terms of that. Why is foreign investment still not flowing in more the way it should be? Why is, in terms of domestic private investment not doing more? Because it's still the government capex cycle which has done a lot. I think that those are issues that I would like to see more to be done for. And as I said, that the great opportunity for us is that, in a way, is that China has clearly imploded, right? I mean, it's an economy that I've been pretty bearish on, as you know, for a while. And I think that the China story is done. Now, the debate in China is only whether...
When you say it's done, what do you mean exactly? Because there was a lot of talk around, no one's anywhere but China and so on and so forth. But that's not, it hasn't played out that way.
Exactly.
So what do you mean by
but I think China story is done in a way, in the fact that I feel that the debate in China now is that can that in terms of can the economy still grow? Or is the economy headed for some sort of a property financial sector bust? That's the range of the debate. I think that the days when China could grow at even 4-5% are behind us, right? Because I think that's because it's demographics, its debt are just totally against it. No country in the world can generate a meaningful growth when your population is shrinking. For the first time, Chinese population is shrinking. How do you generate growth on the back of that, in terms of that? And then the debt hangover that they have is incredible in terms of, how much debt they pumped up in the last decade. And they created so much overcapacity across industries using this debt that's very hard for them to grow out of this. So that's the debate as far as China is concerned. Plus, you have the added thing that because of geopolitical reasons and other things, that nobody wants to concentrate their bets on China. But remember, when China was booming and doing well, it was attracting FDI of 3-4% of GDP. Foreigners were lining up to get into China.
Back with us here on Business Lunch. Now, freight container rates have risen sharply amidst the Red Sea crisis. Now, Sonal is standing by with a complete timeline on the details and the impact that it has had on exporters. Sonal.
Thank you so much for that. Well, that's of course the big story, right? Freight costs have surreptitiously increased multifold since the time Red Sea crisis has hit the global markets. Let's just map it for you now, because that has been the case for a long time. Since the time Houthi rebels, they launched armed drones in the region, and since then it's been a one-way move. Freight rates, they were at $1,384 per container end of November, which moved to levels of $1,461 in December first week. And by the end of December, it moved to $1,661. A big spike in January because we saw big moves. $2,670 moved to $3,072. Then we reached peak of $3,777. And in Feb, it stabilized at levels of $3,700. That continued in March as well. In fact, we saw some decline in freight rates where it was around $2,900. This continued for a bit, but entire April was around $2,700. In May, it saw a spike again to levels of $3,159, and since then it has kept going higher. By end of June, freight rates reached $5,318. In July first week, it moved to levels of $5,900 a container, and it stabilized in August. In last 1 week, we have seen it come off to levels of around $5,550. But just in quarter one, how have these rates moved? The composite index suggests increase of 87%. In fact, individual routes now from Shanghai to Los Angeles, there the rates are up 80%. From Shanghai to Rotterdam, they are up 137%. From Shanghai to New York, these rates are up 60%. Have Indian exporters seen an impact of the freight rate hikes? Yes, they have. Let's talk about some examples. Reliance Industries said the cracks in refining segment were impacted due to higher freight rates and ultimately lower exports. Devi's Labs, on being asked about the impact of freight rates, said that they are not immune to issues of container availability and freight cost issues. They did face challenges and exports continue to be under pressure. Welspun Living, a big exporter, indicated that there is stock build-up due to Red Sea issues and they continue to monitor the same. Aarti Industries indicated that volume growth in some segments in exports could be impacted due to Red Sea crisis. UPL said contribution margins declined due to price decline, liquidation of inventory and increase in freight costs due to Red Sea issues. Galaxy Surfactants called this a tricky situation, since freight costs have doubled in most of the sectors and getting containers to load products for exports is an issue. APL Apollo indicated that EBITDA per ton was impacted due to high employee costs, power costs and also freight costs. While Container Corp indicated that EXIM volumes in Q1 were hit by high ocean freight rates and shortage of containers. Balkrishna Industries indicated that freight costs expected to increase to 9% of revenues in Q2 largely because of Red Sea crisis. It was at 6.4% in Q1. Blue Star indicated that they have taken a price hike due to higher freight costs and that exports could be muted in FY25. Growth would be just between 6 to 7%. Supreme Petrochem indicated delay in export orders due to freight costs going higher. On the back of the surge in freight costs, shipping major Maersk increased full-year guidance in calendar year 2024. EBITDA guidance increased to $7 to $9 billion from $4 to $6 billion. EBIT guidance increased to $1 to $3 billion from negative to $0 billion. In fact, free cash flow guidance has also been raised to $1 billion versus negative cash flows that they expected earlier. Now, what are the current regional rates? As on 18 July, Shanghai to Los Angeles, which was at 7,512, has come down to around 6,500 in August. For Shanghai to Rotterdam, it has come down to levels of $7,900. And Shanghai to New York, from $9,400, it has come down to around $8,900. Just last week, Maersk indicated that growth in second half could slow down for container volumes from 7% in first half to around 4 to 6% in the second half that they are talking about. They also indicated maybe shipping disruptions could last until the end of this year. If that does happen, exporters could continue to see an impact.
All right, thanks Sonal for that very informative as well as important bit of geopolitics really impacting the supply chain and therefore the companies as well as the overall exports. Now, moving on, of course, Indigo stock is in focus. It has seen a large trade of 0.5% of the stake changing hands. The stock was at the low point of the trading session, is trying to perk back a bit. All right, moving on, the Finance Minister Nirmala Sitharaman is currently chairing a meeting with representatives of public sector banks and regional rural banks. Now, the first session with PSBs includes a review of the PSB's deposit growth, credit to deposit ratio and asset quality, all of which are vital indicators of the bank's health, and her agenda for this particular second session that takes place later today includes evaluating the bank's performance under government initiatives such as the PM Awas Yojana, PM Surya Ghar and PM Vishwakarma.
Time for a short break here on Business Lunch. When we return, we'll get you all the latest updates on the Kolkata rape and murder case as doctors across India continue their strike. Stay tuned. Back on the other side.
In the 2000s, foreigners just wanted to get into China and they felt very secure and stable that once we get into China, we know exactly what it is. In India's case, that's just not happening. That why are foreign investment? It's, you can't, to attract foreign investment by talking to the top CEO of a top tech company and keeping him happy and doing that. That's just not the way it works. It has to be much more organic in terms of it. In China, the provinces were really attracting investment, going out of the way to do that. So the issue is that we need to think about those issues, about how do we do that? Because, we can be happy with the current growth rate, which is 6 to 7%. On a relative basis, it's fantastic. At a time when the rest of the global economy is growing at 2 or 3%, maybe it appears really good. When no other really, serious emerging market is out there. So on a relative basis, that's great. But remember, on this path, our per capita income is still less than $3,000. Yeah. On this path, we are going to be, in terms of, we'll won't even become a serious middle income nation in the next 20 years.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly
Welcome back, and straight to the important national news for the day today. The Supreme Court has taken suo motu cognizance of the gruesome rape and murder of a trainee doctor at RG Medical College in Kolkata. A 3-judge bench led by Chief Justice of India D.Y. Chandrachud will hear the case tomorrow, and the IMA has also written to PM Narendra Modi appealing to bring in a central law to check violence against the healthcare professionals. Meanwhile, President Doctor in Maharashtra, they have continued their indefinite strike on the occasion of Raksha Bandhan, and the protesting doctors will send Rakhis to the Prime Minister demanding a safe working environment.
This morning, our colleague Santya visited the Azad Maidan in Mumbai, where some doctors who were protesting against the injustice towards women raised their concerns over the safety of doctors and women in the workplace.
Right now, we are in Mumbai's Azad Maidan, and a group of citizens have gathered here. They are protesting, seeking justice. Thanks a lot for talking to us, ma'am. 12 years have passed, Nirbhaya and the RG car instance. What do you have to say for these 12 years? Do you think anything has changed for us?
I think we're all just as shocked as we were in 2012 to watch these things happen to young professional women. Where is the safety for women in public spaces? Where is the safety for women using public transport? I think we want our mothers to be safe, our aunts, ourselves to be safe, and I'm here with my 7-year-old daughter today, and I would hope that when she joins the workforce, she will also be safe.
But this instance has clearly proved that our workplaces are also not safe for us. What do you think the society, the organizations, the governments can actually do in order to ensure our safety? Not talking about the lip service, the actual steps which we can take.
I think one difference that we see in public hospitals over private hospitals is that security is a much better organized thing in private hospitals. Both my parents have been doctors in public hospitals in Kolkata, and I think there should be a permanent police or at least a private security presence to protect doctors, nurses and all healthcare officials at all times.
Thanks a lot for talking to us. So you can see the citizens group here. Most of them are doctors, but there are people from every walk of life. They have gathered here on a Monday morning to demand answers, to know what happened to their daughter, and to seek justice for not just her, for every other woman who's out there worried for her safety.
Thanks, Santhya, for that. Of course, a grave situation there in front of the country, and thanks for covering that for us. In fact, Santhya was at the protest site, and she also spoke to the former SBI chairperson, Arundhati Bhattacharya, and asked her about the thoughts on the Kolkata case. Listen in.
We do not persist with ensuring that what is being promised is actually being delivered. We really have to come of age. In today's day and age, we cannot have such atrocities. We have to ensure the safety of women, both at home and in the workplace. And if we cannot do that, this society will not progress. We are looking at becoming a developed nation. How can we be a developed nation if we are not able to ensure the safety of 50% of the public?
Arundhati Bhattacharya there speaking to Santhya. But with that, it's a wrap on this edition of Business Lunch from Nishami and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों के तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए, और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs, and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted, and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. We did see a sharp spike. We've come up from the highs, but still in the green so far for the Nifty. What's doing well is the broader market. So a lot of action there. Something we'll discuss on the show today. Hey, Vivek.
Broadly a green-based scheme. The only thing that's seeing a bit of a cool-off has been the banks, and Nifty Bank is the one that you can see on the top of screen, cooled off quite a little bit. But quite a lot lined up on the show. Let's start off with the top headlines. Market cools up from opening highs with banks and auto stocks coming under pressure. PSU metal stocks outperform, mid-caps in line with the benchmarks.
Volta surges over 3% near record high after a strong performance in Q1. Brokerages Nomura, Jefferies and UBS bullish on stock. Nomura says growth outlook for company remains strong.
Ola Electric nearly doubles from listing price as stock hits high of 146 rupees per share today. HSBC initiates buy on the stock with a target price of 140 rupees a share. Says despite their conservative view on EV, they believe Ola is worth investing in.
Shiva Cement surges nearly 4% after its promoter JSW Cement files for 4,000 crore rupee IPO. JSW Cement holds 66.17% stake in the company and had acquired it in 2017.
Gene Spa surges nearly 5% after its arm gets 3 letters of awards worth nearly 3,000 crore rupees. With these recent orders, the company's total order book exceeds over 24,000 crore rupees.
Okay, all right. Those are the top headlines for the markets as we've been pointing out. The Nifty right now is up 25 points. Mid-caps better than the benchmark. However, there's not so much of a difference right now. So 86 points higher on that one. It's been quite steady around those levels. In last couple of minutes, we've seen some fall from the highs on the Nifty as well. Small cap index, that should come up for you on the screen because the small caps seem to be defying what we are seeing with the benchmarks and the banks as well. So that index is up 1.5%. So one-way move there on the small caps. As Vivek was mentioning earlier, banks are under pressure. So that index is down around 130 points.
Well, what an unreal move as far as small caps are concerned. 1.5% higher, significantly outperforming the benchmark indices. A couple of stocks on the radar. If you're looking at the metal stocks, in the last hour of trade, the metal stocks have actually moved to the high point of the name. So if you look at names like SAIL, Tata Steel, they are the ones today, especially in the last hour, that are doing quite well. But we have Hormaz who's standing at the wall to take us through the mid caps that are moving around in the session.
Well, small caps is where the action is lying in today's session. The mid-cap index is currently flat, as you just highlighted. But barring Ola, which has been in the news ever since it listed, or maybe even before that, there are many others that are moving in the broader markets. And IIFL, we'll start off with some of the gainers in the broader markets that will come up on your screen. Now, there you can see Ola almost now doubling from its IPO price. But yes, IIFL Finance up 8.5% in today's trading session. NCC recently announced the record date for its dividend first source. That continues to move. Gravity-defying moves continue there. Now 330 on the stock, another 8% in today's session. And Glenmark, some healthy commentary coming in there from the management. The capital market linked names are continuing to do well as well in today's session. CDSL, the record date for its bonus issue is coming closer. 3.5% higher. Stock is up 30% in the last month. Angel One is up nearly 10%. CAMS also at the highest point of the day, now 8% higher. Ramdev Agrawal also spoke this morning saying he likes these capital market linked names. PSU banks, the index is the top among the top sectoral gainers today. All constituents among the PSU bank index are trading with gains. And here as well, most of these names low float, of course, but trading with gains between 2.5% to 4%. Stocks doing well on the back of very strong volumes, and Kaplan Point is one of them. Positive commentary coming in there from the Brazilian drug regulator, 14% higher now on the stock. Triveni Turbine was up almost 8-6% at one point of the day, has cooled off very sharply over the last couple of hours, 2.5% lower now on very strong volumes, of course. Godfrey Phillips, Bombay Burma, Poly Medicare also seeing strong gains today on very strong volumes. And of course, lastly, some stocks not doing well today. V-Guard at the lowest point of the day, now 7.5% lower. Masgaon Dock seeing some profit booking, as is Kalyan Jewellers. Back to you guys.
Okay, all right. Some interesting names there, some profit booking that we've been seeing post results. Largely, it has not been a very strong Q1 as well. So thank you, Harmas, for joining us as always and getting us that list. It's time to welcome Sudeep Shah of SBI Securities for a technical check on the markets. Sudeep, good afternoon. Thank you so much for joining in. What is the market suggesting right now? Do you think we'll see a sideways move? We did see that stellar rally on Friday. We've not been able to continue that. But yes, markets in the green today as well.
Good afternoon, Sonal. Sonal, what I feel is that while we are seeing some kind of sluggish action in terms of Bank Nifty, it is Nifty IT and oil and gas that is supporting the Nifty today, and it's okay if we are consolidating today post that Friday's bigger rally. So till the time Nifty holds above this zone of 24,400, 24,430, now where the maximum put writers have shifted their positions to that strike price. So I feel till that zone is guarded, steadily we will see an up move up to 24,700, 24,750 in the next couple of sessions. My only worry is with respect to Bank Nifty, because today also if we see Bank Nifty resisted somewhere closer to 50,700, 50,750, where the 20-day exponential moving average is placed. So for Bank Nifty, it is imperative that this zone of 50,700, 50,750 crosses for a sustained rally up to 51,200, 51,400 in the coming few sessions. But what's encouraging apart from both these indices is the small cap and the mid cap indices, the way they have moved, and a lot of individual stock specific action that we are witnessing.
Good afternoon, Sudeep. Like you mentioned, small and mid cap doing very well. What are the individual stocks on your radar? Are they from the large cap or the mid cap space?
Vivek, they are from the mid cap space only. So the first one that I like is Nuvama. Now, if you see this stock, Nuvama, this stock had a good rally in the month of July and going into the month of August. So post that, there was some correction. The stock did not even breach its 20-day exponential moving average. And today we are seeing one more rebound on the upside, and it's in the direction of the original uptrend. So from the current levels, I feel that Nuvama could be bought with a stop loss of 62.50 on the downside and a target of 65.50 on the upside. The second stock that I like is Bajaj Industries. Now, similar pattern lies here also. There was a decent up move from 660 to 740 in the first week of first 10 days of August. Then there was minor profit booking wherein the stock retested its 20-day exponential moving average. And once again, we are seeing a strong action on the upside. So the daily, weekly, monthly, all the time frames, the charts are suggesting constructive move on the upside. So we feel from the current levels, Bajaj Industries could be bought with 710 as a stop loss on the downside and 765 to 770 targets on the upside.
Okay, all right. Thank you so much, Sudeep, for joining in with all those details and your individual technical picks as well. We'll slip into a short break now. When we come back, we'll talk more about specific stocks and talk about Kaplan Point and Ola Electric, which are buzzing in trade today. Stay tuned. An unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Welcome back to Mid-Cap Radar. The indices continue to hover near the flat line with the small cap index outperforming. One particular stock on the radar is Indigo, that's Interglobe Aviation. Just now we saw the fact that there was market share data that came out and the company appears to have gone ahead and reclaimed some market share in the month gone by. And along with that, just around 2 hours ago, there was also a large trade. Post that, the stock has recovered quite sharply from the day's lowest point, now trending closer to the flat line. The other stock on the radar is Kaplan Point. The stock fires up in trade as the company said that it received 0 observations by Brazilian regulator. In our segment Mid-Cap Spotlight, Ekta joins us with more details.
Well, yes, Kaplan Point is seeing a double-digit gain in today's trading session. That is because there is positive news with regards to a regulatory inspection. Anvisa, which is basically the Brazilian regulator, has conducted an inspection of their steroids, injectable and ophthalmic facility in India. And they have issued 0 observations in this particular inspection, which means that this inspection has been successfully cleared. It took place between the 12th of August to the 16th of August. This is something that the company had also mentioned, that the Brazilian regulator will be inspecting one of their facilities in their Q1 call. Now, the company says that Brazil is an important part of their expansion plans in Latin America. Remember that they get majority of their revenues from Latin America. So with this inspection, it opens doors to the largest market in that particular geography of Latin America. Brazil, Mexico and Chile are new opportunities for the company in terms of expansion, and hence they believe that this regulatory inspection, which was successful, would help them in terms of opening doors for Brazil.
All right, thank you so much, Ekta, for joining us with all those details. Kaplan Point up around 13.5% in trade today. Well, one company or one stock, I would rather say, that continues to see an up move is Ola Electric. In fact, the company announced its foray into electric motorcycle segment, the launch of the Roadster series motorcycles. The stock continues to electrify the street, nearly doubling since listing now. Sudarshan is joining us now to tell us more in terms of valuations and more fundamentals. Sudarshan.
So what a move the Ola Electric has had since listing. If you remember, IPO price was ₹76 per share and the stock listed almost at the same price, but but from that level it has almost doubled, and in today's trade it hit intraday record high of rupees 146 per share. But remember, free float is only 17% of total outstanding shares. What does it mean? Only 17% of total outstanding shares is available for trade. Also, in the recent announcements, company had launched Made in India 4680 Bharat battery cell, and company has promised faster charging and more energy storage via this battery. And also company has entered motorcycle segment, had launched roadster portfolio starting at 74,999. On the brokerage note, HSBC has initiated coverage with a buy call and target is 140 per share. It says despite its conservative view on EV, it believes Ola is worth investing in as companies go to market and localization efforts are noteworthy, and it should attract investors looking to play electrification theme in India. Target price for Ola Electric by HSBC implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times.
Thank you so much for that, Sudarshan. In fact, earlier today, we caught up with Elara Capital's Jay Kale as well as HLPC India's Logesh Agarwal. Let's also listen to their views on Ola Electric.
There are positives and there are negatives. Of course, being the positives, they are one of the leaders in terms of electric scooters in the country. Their ramp up has been pretty impressive. In a very short span, they have ramped up quite well on the EV two-wheeler side, and now they are going ahead with the EV motorcycles as well. But one needs to be cautious about their cell venture as well. Globally, cell prices have crashed. How much of a benefit will that cells be for their internal consumption versus peers? That needs to be looked at. The cell, stability in terms of yields is also something that needs to be looked at, and hence, once the cell manufacturing comes on full stream, how much of that really gives in terms of cost advantage is something that is, still, execution is one of the key risks for Ola over here on the cell side.
At least for the next 2 years, things will be better, and it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we have all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. And that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in four-wheelers. And in two-wheelers, anyway, the launches are happening more and more. With more launches, there'll be more options, and I think there will be some bit of a pull factor. It is very, very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it will be a very big challenge to electrify motorcycles. Large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
Okay, that's all about Ola Electric and the EV space in general. By the way, just take a look at the mid-cap index because it is now it's just at the flat line. It has fallen from those highs and it is underperforming the Nifty right now. So the mid-cap index, a sharp fall that we've seen in the last couple of minutes. In fact, the Nifty as well, if you look at it, it is very close to the day's low. So there has been a continuous fall from the highs. The Sensex is in the red right now, 56 points lower there. Bank Nifty that continued to be lower, and that has been the case again. So just watch out for that one. Sensex is at the day's low. So there is some pressure that we are seeing coming in at this particular time. So stocks like ICICI Bank, there's IndusInd Bank, some of these consumer names which are putting the pressure that we are seeing on the Nifty currently. There you go. ICICI Bank again at the day's low. You have IndusInd Bank also, which is putting pressure on the Nifty that we are seeing right now. But let's move on because we have spoken to a lot of managements today. Growth in ticketing segment would be same as FY24, says Sanjay Kumar Jain, Chairman and Managing Director of IRCTC. Speaking to CNBC TV18, he also said that he expects the internet ticketing margins to stay at the current levels. Listen into what he had to say.
We have already entered into MOU with 8 states. And another 2 states are almost ready for implementation. So I will try to maintain the same numbers. Our strategy is to maintain the same amount of growth, same numbers of growth on a year-to-year basis. IRCTC in business which is seasonal. When chutti is there, when people are going on tourism, when children are going on holidays, then our earning, our ticketing during that period, the revenue enhance during that period. If you see the trend, it is similar. But I am happy to say that we almost maintain the same revenue which we on a Q-to-Q basis also, and around 16%, 13% growth in IT earning. So far as IT revenue is concerned, IT margin concerned, yes, certainly it will be the same because we are not reducing any charges.
Very interesting conversation there with IRCTC, but let's now slip into a short break. We'll get you more on the markets and stock specific action on the other side. Stay tuned.
What kind of thing we accumulated at sub 100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a
Welcome back to Mid Cap Radar. Let's now get you a CNBC TV18 exclusive. Earlier today, we spoke to Ramdev Agarwal, the chairman and co-founder at Motilal Oswal Financial Services. Let's listen in to his views on Zomato as well as Trent.
What kind of thing we accumulated at sub-100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in Trent has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
Well, very interesting views on Zomato as well as Trent, but that's all the time we have on Midcap Radar. Your stocks when we return.
We are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in Trent has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
You know, they do polls and this stuff, and I'm at like 93%. I said, so why are we having an election? They didn't have an election. Why are we having an election? How would you like to be Biden? He's working, he's spending money, he's trying. They wanted to have a debate. That's the thing that started it all. You know, if I didn't debate him, he'd still be running right now. But I believe she will be easier to beat than him because she's a truly radical left lunatic. And with him, he never really believed it. Of course, I don't know if he knew anything. I'm not sure. But he didn't really believe it. She totally believes it. She wants to destroy our country. With 4 more years of Kamala, your finances will never recover. They will only get worse. She said, I don't want fracking in Pennsylvania. She said it hundreds of times. I don't want it anywhere. Then a couple of months ago, when the polls are showing that she's getting clobbered, well, actually, nobody actually thought they were politically correct. They wanted to be politically correct because they wanted, you know, they had 11 different people, and they put her name in to be number 12, and they had a vote. She came in last. So people say, be nice. Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic. Have you heard it? I'm a better looking person than Kamala. No, I couldn't believe it. She said, you know, I had never heard that one. They said, no, her biggest advantage is that she's a beautiful woman. I'm going, huh. I never thought of that. I'm better looking than she is.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it is turning out to be a session where we are seeing some amount of consolidation for the markets come off the day's high, so that initial gains that we did see have been sold into. We have the Bank Nifty, which is down over 200 odd points. We have the mid-cap index, which has given up gains from the top, along with the Nifty and the Sensex as well. This Nifty, in fact, is the lone ranger amongst all of these four indices. The Sensex Nifty mid-cap index and the Bank Nifty, which is managing to just about hold with a gain of around 20 odd points. Let's see whether that gets sold into or not. As of now, the advance decline ratio is just about holding in the advancing side. So that's a key metric to track, which is positive. As you can see, it's been, the gap has been maintained through the trading session. So around 1,780 odd stocks advancing on the National Stock Exchange and over 650 stocks declining. But joining us today, we have Astha Jain of HEM Securities and Richard Jain of 5paisa.com to answer all of your queries. Astha as well as Richard, welcome to the show. Well, Astha, seems as though you're dressed to definitely celebrate Rakhi today. Markets are open, but nonetheless, celebrations are on. Richard, I'll start with you. The markets have given up a little bit of their gains. We have the Bank Nifty, which is under pressure. Can you give us a sense in terms of where the Nifty would go from here? What's your strategy today?
Yeah, hi, very good afternoon, Ekta. Well, Ekta, if we see the recent correction, which was there from 25,000 to 23,900, markets have seen a retracement of about 61.8% of that fall, which is coming around 24,625. And I think that's why we are witnessing some consolidation or hesitant to surpass that level. But looking at the market breadth, which has turned positive since last couple of trading sessions, the large caps from stocks names such as IT, even selective auto names have been doing well. So I think the momentum would slowly and gradually continue on the positive side. So from here on, downside seems to be limited, and any kind of decline, if we get towards the 24,400 to 350, I think that's where the support will come in again. So the overall structure remains positive looking at the market breadth, and it should be seen as a buy and dip market until we see any kind of significant supports getting broken.
Okay, all right, fair enough. We do have a couple of queries now. First one is Chandan Kumar, who writes to us from Mumbai. He holds 135 shares of Gujarat Gas, which he's bought at 645. He wants to know what to do, whether to hold or sell this particular counter. Well, Gujarat Gas, he's bought it at around 645 odd rupees. He's sitting on a loss at this point in time, which is around 6,500 odd rupees. Well, let's start with you, Astha. What would you recommend on Gujarat Gas?
Hi, good afternoon to both of you, and wishing both of you a very happy Raksha Bandhan, and to all the viewers as well. So talking about Gujarat Gas, I think the results were good, because what we have seen in the quarter one of FY24 was the 52% rise in their bottom line. Along with that, the pricing or the price to earning multiple of around 32 compares to be on an average side, because the industry P multiple is standing somewhere at around 34. So I think looking after a decent set of numbers from this counter with the average valuation, I think one can stay invested in the counter. There is no need to book the loss. So my advice is hold the counter, and I think a rise of around 10 to 15% in the stock prices can be expected from this counter in the coming days.
Okay, all right. And what about the technicals? 12 months, it's gained around 30 odd %. Richard, what would you recommend on Gujarat Gas?
Technically, if we see, then in the short term, I think the stock would consolidate within a range of 560 to 650 on the higher side. It doesn't seem that the stock is in a trended phase. And if I do some comparative analysis of other stocks within the same sector, that is IGL or MGL, then a clear relative outperformance has been seen in the other two names compared to Gujarat Gas. So this has been a relative underperformer within the sector. So I would suggest, if you get any kind of pullback move towards that 630, 640, take that as an opportunity to exit from this stock. And if he wants to remain invested in the same sector, it's better to shift to stocks such as MGL, which is outperforming. And in case if the sector, all the three stocks move higher, then I think that outperformance from MGL could continue, because even the volumes are quite good there compared to Gujarat Gas. So look to exit on pullback moves in Gujarat Gas and shift to MGL would be my take.
Okay, all right. Well, we now have Ramesh, who writes to us from Hyderabad. He holds 2,200 shares of Vodafone Idea, which he's bought at around 13.25. He's sitting on a profit on that one. He wants to know what to do, whether to hold or sell this particular counter. Well, Richard, I'm going to toss this over to you. What do the technicals say in a stock such as Vodafone? Do you think that it has, the ability to become a multi-bagger?
Well, let me give a disclaimer first that recently the stock came out with an FPO at 11 rupees, in which even I had subscribed. So I have a holding from that FPO time. Now, if I look at technical structure, then the stock has good support around that 14 to 14.5 range. So price-wise, I think downside seems to be very limited. Yes, if you're looking from next few weeks perspective, then I don't think that we would see any kind of significant up move as well. So 18 to 14, I think this is the range where the stock could see some consolidation for maybe few weeks or even a couple of months time frame. But yes, on a longer term time frame, the kind of volumes that the stock has seen in last 3 or 4 months, this clearly indicates a shift in sentiment of market participants towards the stock. So from a mid to long term perspective, no, I am positive on the stock, but from a near term perspective, I expect some consolidation to continue.
Okay. All right. And what about you, Asta? Do you think that there will be some kind of fundamental support which will come through on the stock?
Not really, because what we have seen that the revenue was down marginally, in fact, in the Q1 of FY25. Although we have seen the rise in ARPUs, and that was led by the higher monetization, etc., and the more increase in the recharge vouchers, which was demanded by the client. So I think we have seen the increase in ARPUs, but the debt is still a concern for this company because they are standing at around rupees 2 trillion debt. So I think that is a major negative for the company at present moment of a time, and we really need to see how the company will be repaying that over the period of time. So I think one need to wait patiently for a long time, maybe for 6 months or 1 year time horizon to get the strong rise in the stock prices. But at present moment of a time, if someone is hurry to book the profit, then I think because the investor is already in the profit, so partial booking of profit is also recommended at current point of time. So my idea here is just to this investor, because he or she is into the profit, book partial profit and remain holding the another partial quantity for another 6 months or 8 months.
Okay, all right. So that's on Vodafone. So you would probably recommend holding, partial quantity for the next 6 to 8 odd months. Well, we now have a query on Asian Paints, which has come through. We have PC Achaya, who writes to us from Bangalore, holds 60 shares of Asian Paints, which is purchased at 2,900, wants to know the outlook of these particular shares, sitting on a good profit at this point. Well, there's so much, Asta, which is spoken about when it comes to Asian Paints, the competition that it'll probably see. But from a long-term portfolio stock perspective, do you think that one should hold on to Asian Paints?
Yes, for the long-term purpose, definitely a hold is recommended because what was the attraction in the management guidance is that they have still maintained the EBITDA guidance of around 18 to 20%, which seems to be fairly okay. So I think they have maintained their guidance, and what we are seeing that maybe we can see some sort of a double-digit volumes also in the Q2 of FY25. So I think if we see such sort of volume, then definitely it can lead to the strong financials going ahead. And maybe we can see the rise in the stock prices also. So in the near term also, we are expecting the stock to move till the level of 3,200 or 3,300. And definitely it's a hold from the long-term perspective.
Okay, all right. A hold from the long-term perspective. And what about the technicals? Does that give you any kind of confidence, Ruchit, for Asian Paints? It's a Nifty stock portfolio company, but, hasn't done much this year. In fact, it's declined around 9% odd. Would you, be a holder?
Yes, in fact, I have the similar recommendation to hold on to the stock. So technically, if we see, then the stock has gone through a long consolidation phase. The all-time high in the stock was seen in January 2022, when the stock made a high of around 3,600 levels. Since then, a broad consolidation phase has been seen where initially we witnessed a decent price-wise correction, but now the stock has also seen some good time-wise correction as well. So if we look at the bit longer-term picture, then the stock has already gone through some time-wise as well as price-wise corrective phase recently. And so the downside from here on seems to be very limited. But because what we are seeing that whenever the stock dips towards that 2750, 2700 kind of range, a good buying interest has been seen over there. So I think the downside seems to be very limited. Yes, so from a long-term perspective, I think these are not the prices where one should look to exit from stocks such as Asian Paint, but rather keep some more patience and hold. I think the stock has potential to rally back towards that 3350 mark.
Okay, all right. Well, we have another query on another Nifty stock. We have Preeti Sharma, who writes to us from Patna, holds 50 shares of Infosys, which is bought at 1700. Again, sitting on a profit there, wants to know what to do, whether to hold or sell this particular counter. Well, let's get to you on this one. Asta, let's start with you again. What would you recommend?
So we recommend hold on this counter. We are positive on this counter because we believe that this company will show improved financial performance going ahead because they have a strong pipeline. In fact, they have acquired a German company, tech company. So I think the synergies will be developed from there. And they have invested, in the generative AI also. So I think all these factors will really contribute to the strong financial performance going ahead. So definitely hold from our side. In fact, buying on dips is also we advise at present to our clients. So Infosys is definitely a hold as well as buy. From the perspective of price target, we recommend it to go till the level of 1940 or 2000. So we are expecting 2000 as the ultimate price target for this counter.
Okay, 2000 is the ultimate price target for Infosys. On the technicals, is that your target, Ruchit? Are you close to that? What's your recommendation?
Well, the technical targets are coming a bit higher from those levels, which is 2160. So if we take the structure first, then a clear high top, high bottom structure is there in the stock since last 2.5 months. And what we have seen that in the recent decline as well, when the IT stocks corrected because of this global markets volatility, Infosys managed to hold about its 40-day exponential moving average support. So I think that uptrend is still getting continued. And if we take the retracements of the previous corrections, then it gives a potential targets around 2160. So I think from a bit medium-term perspective, the stock has potential to continue this rally towards 2160 mark. So definitely a good risk-reward ratio even from current levels. So it should continue to hold on.
Okay, all right. So continue to hold. That's the word coming in on Infosys. Well, for the markets, we're seeing a little bit of profit booking, which is coming for the Bank Nifty. So just want to emphasize that a couple of these, corporate private banks, Axis Bank, for example, is down around 1.3%. There's profit booking, which is coming in on ICICI Bank also, which is down around 1%. And IndusInd Bank giving it company as well. That stock has underperformed this year with a cut of around 15.5%. So IndusInd is also seeing some amount of profits being taken off the table. And giving it companies, HDFC Bank, that big boy is down around 0.4%. It's lost around 5% this year. We'll take a short break, but up next, more queries. Stay tuned.
We will build what I call an opportunity economy. Under my plan, more than 100 million Americans will get a tax cut, and we will do this by restoring 2 tax cuts designed to help middle-class and working Americans. The Earned Income Tax Credit and the Child Tax Credit. We will provide $6,000 in tax relief to families during the first year of a child's life. Now think what that means. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance.
Welcome back. Well, you're still tuned into Your Stocks. We have with us Richard Jain as well as Astha to answer all of your stock queries. Well, let's get to another query now. We have Kalamani Sekhar, who writes to us from Chennai, holds 10 shares of Sun TV, which is bought at around 752. So he's sitting on a little bit of a profit there. He wants to know what to do, whether he should hold or sell. Well, his buy price is 752. He's currently sitting on a little bit of a profit. But do you think that there's any kind of upside to these levels, according to you, Richard?
So we have seen a decent amount of up move in last 3 or 4 months, but what we have seen during the last week that the price correction was backed by very high volumes. And generally, when we see any such down moves which are supported by high volumes, then those stocks can tend to show relative underperformance in the short to medium term. So I think I would advise to at least book partial profits over here and take some money off the table. And on rest of the positions, technically the support is placed around 750. So you can keep a stop loss below 750 on the rest of the position. But at least the stock is not looking that it would show a significant outperformance in the near term.
Okay, all right. And it's gained significantly in the past 1 year, over 45%. But fundamentally, what's your view on this one?
So even I recommend to book partial profit. The reason being is that whatever results they have posted in Q1 of FY25, we have seen the degrowth of around 12% in their bottom line. So bottom line was a little bit under pressure. In fact, if I talk about the valuations also, they are quoting at a P multiple of around 17 to 18, which seems to be fairly reasonable. So I think some profit booking is a better choice at the present moment of a time, looking after the weaker set of numbers from this counter. Maybe in Q2 FY25, if they perform better numbers, maybe one can take another buy call. But at present moment of a time, it's better to book profit.
Okay, at present, it's better to book profits at this point in time for Sun TV. Well, we do have K. Karthikeyan, who's writing to us from Chennai. He holds 220 shares of Cosmo First, which he's bought at around 650. So he's sitting on a very good profit on Cosmo First. And he's a long-term investor, wants to know what to do, whether to hold or sell this particular counter. So 52-week high is at around 985. So it's probably already there. But it's been a strong rally from its lows of around 450. Ruchit, what would your target price and stop loss be on this one?
So one notable thing is that the recent up move since the month of June, that is in last 2.5 months, the volumes have been quite good along with this price up move. And any kind of corrections that have come, the stock has managed to take a good support around that 40-day exponential moving average. So I think trailing stop loss would be the best method to ride this trend. The good support now is around 830, which is also quite above its buying price. So keep a stop loss below 830 and trail the stop losses higher at the stock as the stock price move higher. And initially you can expect a target somewhere around 1150 where you can have a look or have a review on the positions.
Okay, all right. And have you looked at the stock fundamentally, Astha, Cosmo First?
So this company being the global leader in the specialty film as well as emerging leader in the specialty chemical, they have posted very strong set of numbers. In fact, if I take out the other income, extraordinary income, etc., then they have shown the turnaround in this quarter, which is really a commendable performance. And that's why I think the stock prices has also moved in that direction only. So we are positive on this counter, looking after the strong set of numbers, recommending a hold. Our initial price target is 1035 for this counter.
Okay, all right. Well, we do have Ranga Reddy now, who writes to us from Chennai, who's 20 shares of Trent, which is bought at around 5,381. He's sitting on that. He's sitting on a profit. He wants to know what to do, whether to hold or sell this particular counter. Well, you know, we just had some comments with regards to Trent coming in from Ramdev Agarwal earlier in the morning as well. Even if he bought it at a high price of over 5,000 odd rupees, he's still sitting on a profit considering the kind of momentum that we've seen on this stock. And in fact, it's corrected from its 52-week high of around 6,745. Just wanted your sense. Let's start with you, Astha. Do you think that these punchy valuations justify the fundamentals going forward? What's your earnings estimate which you factored in for Trent, and what do you recommend to your clients at these levels?
So I think as long as the company is posting strong growth in their bottom line, these valuations are really justifiable, because what we have seen in the quarter gone by was around more than 200% rise in their bottom line. And I think if such a extraordinary rise we are seeing in the growth, definitely that leads to the higher valuation. And we are expecting this counter to continuously showing strong financial performance at least for coming 1 or 2 quarters, because we have seen that their all formats are performing very well. We have seen the improved footfalls, and especially the Zudio is really working wonders for the company. So we really expect this company to post the performance of this sort for coming at least 1 or 2 quarters, and that's why we are positive on this counter. But yes, now valuations have started playing their role, so we are limiting our price target to 6,900 at current moment of a time, recommending a hold with a limited price target of around 6,900.
Okay, all right. Target price of 6,900 on trend. What about you, Rajit, on the fundamental, on the technicals?
The momentum is quite strong in the stock. We have seen that whatever corrections come, it hardly lasts for 3 to 4 days, and again the stock resumes its uptrend. If I put some retracements of the recent correction, then it gives a potential targets around 7,100. So it's quite possible that we may see a continuation of this up move towards 7,100. So can hold on. But yes, post the recent rally, they are also in bit overbought zone. So do not forget to keep some stop losses in their profits. So ideal stop loss from the current market perspective would be below 6,300 level. So because that is the support on the short term chart. So keep a stop below 6,300 for now and look to book profits around 7,100.
Okay, all right. So that's the target coming in, bullish calls coming in from Trent. But now we have Vijay, who writes to us from Thane. He holds shares of Angel One, which he's bought at around 2,200. So he's sitting on a profit there. And 50 shares of CAMS, which he's bought at over 4,000 odd rupees. He wants to know what to do, whether to buy more, hold or sell these particular counters. Richard, you take this one away first. What is your recommendation on the technicals of this?
So technically, Angel One looks positive. We have seen a decent corrective phase from the highs of around 3,800 to 2,000 levels. And now, if you look at today's trading session, the stock is on the verge of a breakout from a falling wedge pattern with good volume. So I think you can expect a move towards 2,800 kind of levels. So can look for fresh buying as well at current levels for potential targets of 2,800. CAMS will be a hold. The broader trend for the stock has been positive, but since the stock has already given a decent rally, so I think it's a buy and dip approach should be stock that in case if we get any kind of declines towards that 4,040 to 100 range, then those would be good levels where the risk reward ratio will become favorable for fresh buys. But yes, if existing long positions are there, then no signs of reversal for now. So continue to hold on existing longs.
Okay, and what about you, Asta? Any recommendations on both these counters?
So first of all, talking about CAMS, we are positive on this counter, recommending a hold on this counter because we have seen the strong performance and the growth was mainly driven by their non-MF business. And we are expecting this non-MF business to continue to show 20% growth over coming quarters. So we are positive on this counter, recommending a hold on CAMS with a price target of around 4,900 at the initial level. Now talking about Angel One has also shown very strong performance. Or what we have seen now, the company is venturing into the businesses like wealth management, etc., distribution, etc., and asset management also. So all these businesses, we really need to see how they will be acting for the company in the future. But at present moment of a time, on the basis of their increased share, I think this company has performed well. Although the number of trade has declined, but their number of client addition is really good. And in fact, they have surpassed the industry client addition level. So on that basis, Angel One is also looking good to us, recommending a hold, but initial price target can be set at around 2,450 to 2,500 levels.
Okay, all right. On that note, Ruchit as well as Astha, we're going to wrap up on the show. Thanks very much for joining in and taking us through all of those questions. Well, just want to wrap up with the news that the advance decline ratio is managing to maintain on the positive side. So it currently stands at around 2:1 on the Bombay Stock Exchange. The only possible place where we could probably see some more of a retracement is the Bank Nifty, which is one of the indices which is in the red, down around 158 odd points. Like we pointed out, a lot of these corporate banks are currently trading with losses. But besides that, we even have another rate sensitive such as M&M, which is your top loser on the Nifty. That stock is down around 2%. That's all the time that we have on the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up next.
we have a 5-year-old daughter. We want to make sure that she has access to the best schools and to community programming and those kinds of things. And so we really want to be in a position to give her the kind of home, a little more space, you know, a place where we can entertain and invite our friends in our community to spend time with us. All of those things are really important. And we really want to make sure that it makes financial sense before we can do something like that. So she spoke to my heart as a potential homeowner.
The Roadster series, the first product is going to be the Roadster Pro. This is the Roadster Pro. I'm going to move along. We have a lot of announcements. A 10-inch TFT touchscreen, ADAS. With this vehicle, you saw the vision of ADAS in MoveOS. That'll be installed in this vehicle. It'll come with all the sensor package. So that's the Roadster. The specs again are absolutely killer. Fast acceleration, high top speed, power, range, 250 kilometers of range. Kripa is a biker girl, isn't she? So we've shown you two bikes, the Roadster Pro and the Roadster. All right, let's have the Roadster X. That's the Roadster X. Again, great features for its class of performance. High top speed, 11 kilowatt of power, 200 kilometers of range in a single charge. Iconic LEDs. 4.3-inch LCD, and that's the Roadster X. So आज हमने एक नहीं, दो नहीं, 3 बाइक्स दिखाई हैं. 3 बाइक्स लॉन्च कर रहे हैं. Across the price point, across from the Pro, absolutely top of the line bike. The kind of power that bike has, maybe even 1000cc bikes don't have. The Roadster and the Roadster X. You can take your pick, all from the same family, same design, same platform.
The Taiwanese index is up around 19 points, quite flat, but with some positive bias.
A lot of these emerging market currencies are getting stronger against the U.S.
The Supreme Court takes suo motu cognizance of the gruesome rape and murder of a trainee doctor at RG Kar Medical College in Kolkata.
24,477, and that's the first level that the market needs to stay above. 24,618 is where the Nifty is at 616. That's about 70 points higher.
Capital market still looks very exciting.
Around 41 gigawatt of thermal power capacities was under resolution, of which 25 is already resolved.
The markets, it's a slow grind down to the flat line for the benchmark indices.
I will try to maintain the same number.
In last 1 week, we have seen it come off to levels of around $5,550. We did see a sharp spike. We've come off from the highs, but still in the green so far for the Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Well, that was a day so far, and it has been a quiet day if you look at the Nifty, but broader markets are doing just fine. This is Closing Bell, last hour of trade coming up from the CNBC TV18 Muthuros studios. I'm Prashant. With me, my colleagues Reema and Surbi. Guys, good afternoon.
Hi, good afternoon. Well, yeah, I guess quiet start and some volatility hitting some of the Asian markets again. For instance, the South Korean market, the Nikkei, they were actually looking at a lot of profit taking today. So by that stretch, maybe not that bad. Some consolidation.
No, absolutely. I think Kospi was up 2% on Friday, so maybe they're a bit of pullback. In Japan, of course, has been all over the place, 10% down, and then recovering almost most of it, I think, right?
It's a huge, deep, large capital market, yet it moves like a mid-cap stock.
As I think the Financial Times wrote an article saying that why is Japan moving like a penny stock?
Exactly.
And, but yeah, it was a shocker that, of course, the week before, that is, I mean, on that I think it was the 2nd of August, it was the 5th, it was the Monday when markets moved like that. Anyway, let's just quickly run you through what's happening right now, which is, at least on the Nifty, not very much. 30-40 points higher is what you have. So we are trading above the 20-day, which essentially is the first kind of prerequisite for the market to stay sort of healthy and then look up and wonder about how high and where it can get to. But it is nowhere close to getting to that gap area, which is 24,686. And it's been in this zone for a while, 24,577. But the trajectory is higher. Nifty Bank, true to character, is the weaker of the two. It never got to the 20-day on Friday, while the Nifty crossed it. And it is weaker, slightly down, about 0.25% or so. Mid-caps are up, but it's a small-cap index, which is up 1.5%. And that is essentially the star of today's trading day. That's the mid-cap index, a quarter, nothing. But the small-cap index is the one which has got about a 300-point pop. And that is essentially basically the reason why, I mean, I think portfolios will be feeling quite well because so many of these smaller names are popping up 5, 10, 15% in some cases, which some of them we will get to as we go along. Reema.
But after Friday's more than 2% rally on the benchmark indices, it's good to see that the markets are holding on to those gains and consolidating. But we've consolidated in a pretty tight band. So the Nifty range today has been just about 100 points. Banks are underperforming a bit. So the Nifty banking index is down close to about 150 points. But in that, the PSU banks are outperforming. So the Nifty PSU banking index is a gain of 1.5%. The problem is for private sector financials banks, large ones like an Axis Bank, ICICI Bank, HDFC Bank too is under pressure. Remember today, Finance Minister Nirmala Sitharaman will be holding a performance review meeting with the public sector banks and the PSU banks, so whether it's a Bank of Baroda, Canara Bank, Union Bank, all of them higher in trade. IT too is having a good day. It was the standout performer on Friday, and it continues with the up move today. The Nifty IT index is up nearly 0.8%, with LTIMindtree leading the charge in the frontline pack and metals as a pack. So Tata Steel, Hindalco, JSW Steel up and about. The Nifty metal index will also come up for you on your screen.
Well, on the mid-cap screen, actually the good news is that if you look beyond the index will tell you that there's just about a 0.25% sort of an increase coming through. But the good news is that if you look at the advance decline ratio, that tells you a much better story. Because even after a pretty range-bound, lackluster kind of a day, you've got almost 1,800 stocks advancing and about 650 stocks on the declining side. So beneath the surface, there's plenty of action. And I'll just take some names to highlight. Some of these infrastructure plays, they've had a good run today. So stocks like IRB up about 3%, NCC's up about 5%. These are some of the names. And on the infrastructure play, I mean, we've been discussing BEML since morning because of the approval for a lot of the metro orders coming through. And that stock's been up about 3 to 4% right throughout the session. But go beyond, even beyond news. I mean, look at a Godfrey Phillips, about 11% right now. Angel One, 9% is the surge. IIFL Finance suddenly moving 11 to 12% higher. I know I'm sort of taking so many names. We'll quickly put them on the screen. That's just the nature of the mid-cap market. You go beyond the headline, and there's a lot of movement out there. Uflex, 11%. Something like an Imagica World, which typically doesn't come up on the screen that often, up about 9-10% as well. So basically, beyond the indices, there's a lot of individual stock level action going on. A lot of the PSUs are having a good run as well. But yes, the headline market seems to be in consolidation mode. So let's quickly kickstart the show and get you some trading ideas to begin with. Mitesh is with us. Mitesh, good afternoon. What have you made of the index consolidation today, and what are the ideas now for the last hour?
So I think the index, basically, good afternoon, Surbi, is not able to get past the higher level because the bank Nifty is not participating. And I was looking at the hourly charts of the Bank Nifty. It's not very negative. In fact, post the big movement which happened on Friday, this looks like to be a mild pullback. And if the Bank Nifty can hold above 50,200 to 20, I think it should make one more attempt towards 50,700, 5,800 zones. And if it manages to clear that, then it should be even better. So in that sense, I think I'll keep maintaining a long bias. Right now, I have a buy on Berger Paints. It's managed to get past this 200 average and is trading well above that now. So buy here with a stop at about 549 for targets of 590. And we had HPCL as a recommendation earlier. BPCL is the current recommendation. Buy BPCL with a stop at about 338 for targets of 360.
Thank you very much for that. From 76 to 146, that's been the journey of Ola in a span of just 6 trading sessions. Last week, remember, the company announced its foray into the electric motorcycle segment with the launch of the Roadster series. The stock continues to electrify the street. It's practically doubled since its listing. Sudarshan is joining in with some more details and numbers. Sudarshan.
What a move the stock has had since listing. IPO issue price was rupees 76 per share and the stock had listed almost at the same price. But since then, stock has almost doubled and in today's trade, it has hit intraday record high of rupees 146 per share. That is up 92% since its listing price. Also, it has added market cap of more than rupees 25,000 crore. On the listing day, its market cap was rupees 40,000 crore and in today's current level, the market cap is almost rupees 65,000 crore. But remember, free float is only 17% of total outstanding shares. What does it mean? It means only 17% of total outstanding shares is available for trade. Talking about the recent announcements, company launched Made in India 4680 Bharat battery cell and its CEO says he promised faster charging and more energy storage via this battery. Also, it has entered motorcycle segment, launched Roadster portfolio starting at 74,999. Talking about the brokerage, it just have one coverage as of now. HSBC has initiated coverage with a buy call and target is rupees 140 per share. It says despite its conservative view in electric vehicles, it believes Ola is worth investing in as Ola's go-to-market and localization efforts are noteworthy and should attract investors looking to play electrification theme in India. And target price implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times for Ola Electric as per HSBC.
Thank you very much for that. In fact, earlier today, we did catch up with HSBC's Yogesh Agarwal, the author of that note on Ola Electric. We chatted with him about the EV penetration in India, competition, the motorcycle, its bet on battery. Listen in to his views.
At least for the next 2 years, things will be better. And it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, just from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we have all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. So, and that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in 4-wheelers. And in 2-wheelers, anyway, the launches are happening more and more. With more launches, there'll be more options. And I think there will be some bit of a pull factor. It is very, very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it will be a very big challenge to electrify motorcycles. Large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
Well, that was a good discussion. You know, guys, we were talking about last week also, we were talking about Ola, right? And what does it mean for the other two-wheeler companies? Maybe we're all looking at it in the wrong way because The question has been whether it hurts the traditional Hero and Bajaj, etc. But can it benefit? In the sense, can Ola's valuation rub off on the other companies? Remember, Hero especially has a 35% stake in Ather. Ather has about, I think, 15-20% market in electric vehicles. So, you know, Ola is doubled. I don't know what Ather is valued at. And this is it's a strong market. It's looking at what can go right. Nobody's looking at what can go wrong. So I don't know if there is a quick sort of buck to be made trading rally. But it's entirely possible that if this goes on, we'll have to do the numbers, but it's possible that at least long term, whatever happens, happens. But I'm saying, you know, maybe there is there's a trade here on the upside rather than on the downside. That's Hero basically on the back of what's happening with Ola.
No, absolutely. But I think, Prashant, the point that you made last week as well, that's a point that I don't think the incumbents can ignore either, because 88% growth just selling scooters last year, FY24. 32% growth first quarter just selling scooters. Now, by next Diwali, when they get into the bike space, I mean, will those numbers start looking bigger and bigger? And most analysts on the street are expecting costs to go down, margins to improve, more profits, because they'll start making their own batteries. I mean, it sounds actually too simplistic, but 92% is the stock price appreciation. So let's put that to Deepan Mehta, really. How do we wrap our heads around what's happened with Ola in just 6 trading sessions alone? But hey, that's what they call a bull market, right? Dipan, hi, welcome to the show. So it's over to you now.
Yeah, Surbhi, that's what they call a bull market. And why just double? It can triple and quadruple also. I have seen Harshad Mehta rally. I have seen the .com bubble also. And that time also a lot of stocks didn't make sense. But they kept on rallying because of very heavy speculative activity and a lot of trader interest. And it's an easy trade in Ola Electric for the traders, you know, because there's so much of concentrated buying. And when stock starts to hit circuit, automatically it attracts a lot of players who just want to buy just before it hits the circuit, hold it for the next day and then sell it off at a premium of 4-5% or even higher. So what we are seeing is a lot of liquidity flow into one counter. And obviously the kind of float which is there has evaporated, which is why the stock price has gone up the way it has gone up. On a fundamental basis, it's very difficult to justify this kind of a valuation. Great long-term prospects. I believe in the story. And eventually, I think it'll start to make solid profits. But there are execution challenges. There are regulatory challenges, product acceptance, and all the expansion plans have to really play out well. So there are sort of risk factors as they are in all businesses. And those are not fully captured in the stock price. So if you're a trader, you're an investor in Ola Electric, by all means, remain invested. You may trade in it. But a new investor entering at this price, I'm not sure he can make a good return over a long period of time.
Well, what is your view on the impact Ola's electric motorbike will have on incumbents? Because Ola's priced it very aggressively. It starts at 75,000 and the cheapest motorbike is, I think, at 1 lakh or a little more than that. So the pricing is very aggressive. So will it hurt any of the other incumbents?
See, Nima, I'm not really an expert on consumer trends over here, so I really can't say. And actually, Nigel has driven a motorcycle. I haven't. All I can say is that my next car is going to be an EV. That's for sure, so I can assess that. But whether an electric motorcycle will be a success, I'm not so sure. Globally, it's not. Globally, even two-wheeler EVs have not been such a great success. But that's because it's a very narrow market, small market globally. But yes, you know, I mean, who knows? Stranger things can happen. And the important thing is that now Ola Electric is a complete platform, you know, so they will offer two-wheelers, they will offer motorcycles also, and who knows, they may go to three-wheelers as well in future. And that's important because they'll capture all the segments of the market. And sometimes these niche plays also work out very well, as I've seen in Eicher Motors 10 years ago. Nobody could believe that a premium motorcycle could sell, but it did. So who knows, it could happen with an EV motorcycle as well. And one needs to wait and see. But on the whole, I think, you know, the more important aspect is that, you know, what are the risk factors at these levels and have they got captured in the stock price?
Okay, let's see. Let's move on and talk about Voltas. That's another big mover, up nearly 5-6%. Strong Q1 numbers. Brokerages too have raised the target price post the conference call. Sudarshan is back with us for more on Voltas. Sudarshan.
So Voltas has hit record high today, and as stock continues to see buying after a strong set of earnings for Q1 and healthy management commentary. Talking about the earnings, Q1 was led by a healthy performance by UCP business. The segment saw healthy volume growth that was almost at more than 67%, and also it has gained market share. Market share for Q1 has come in more than 20%. For FY25, company maintains high single-digit margin guidance. Talking about the brokers, most of them continues to have bullish stance. First one is Nomura. It has a buy call with a target of rupees 1857 per share. It says growth outlook remains strong, and it has raised FY25 UCP revenue growth to 30% from 26% earlier, and it adds priority of market share gain or margin by the company is a step in the right direction. Jefferies too has a buy call with a target of rupees 1770 per share. It has raised FY25-26 EPS estimates by 10 to 12%. UBS has a buy call and target is raised to 1960 per share. It says company is optimistic on demand for Voltpack products in Q3 FY25 led by festive demand. MS has equal weight call with a target of rupees 1225 per share. It says company guides for high single-digit margin in UCP business, that is given elevated competition that company is seeing in the segment. Kotak too has a sell call with a target of rupees 1100 per share. It says limited margin expansion and unchanged guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLS also has an underperform call, but it has raised target to 1310 per share. Goldman Sachs also has a sell call and target is 1310 per share. It says margin may have limited room to surprise positively in the future, but sustainability of ordering will be key for Voltas in near to medium term.
Thank you very much for that. Voltas up 65% this year, and it's doubled in the last 1 year. Dipan, Q1 numbers were strong. As Sudarshan pointed out, we've seen a lot of EPS upgrades post the Q1 numbers. But going forward, brokerages have flagged off that margin expansion is limited since the company is focusing on regaining its market share. So re-rating potential could be limited. That's what the bearish argument is. Voltas, after this kind of a rally, where do you stand?
So I think it's a great long-term story, and the summers are not going to get any cooler. It's going to get warmer. So the next season may be even better for the air conditioning companies, including Voltas. Also, the projects business has got re-energized with all these data centers and so much of urbanization, and they're winning good orders in the Middle East as well. So from a long term, the business has great dynamics. But look, valuation at 117 or thereabout times trading 12-month, I don't know whether the risk return profile favors you. At correction, very positive on all these air conditioning companies across the board, be it a Havells or even IFB Industries has got an air conditioning business, and even some of the contract manufacturers like PG Electroplast, Amber Industries. You should have one or two of these stocks in your portfolio if you don't have them. But I would wait for a 15-20% type of a correction when there is some amount of margin of safety. But all this entire industry, this air conditioning industry, we're very positive on that. But as I said, I think wait for a correct entry price.
Dipan, long list of movers today, right? And I'm going to just read these out, and if anything strikes a chord, weigh in. There's Angel 1, 10%. Gravita, I think, saw a recent initiation. We'll have these stocks up. Gravita is up 11%. Stocks at about 24.51. It's come up very quickly. Last, 4 days from 1700, stocks at 24.50. So that's fast-paced. There is Boriput Laboratories, which has come up to about 68 rupees. CAMS is another one, which is up another 7%. Keytex is up 40% in 3 days flat. Uflex is up 12% today. Again, I mean, Uflex was at 560 2 days back. It's at 750 today. Just incredible. Edelweiss is another one. I mean, I think it started at $60. I mean, it was at $60 about 6 trading sessions back. It's at 90 today. So that's a very large move coming through. And a beaten down name like IIFL, which is, of course, still waiting for the RBI clearance on their gold lending business. Of course, it had been completely sold out from 530 to, levels of about under 400. It's come up to a more respectable 450 kind of levels now. So that's a big one right there. Deepan, anything interesting here?
See, I think you can classify them into two groups. IIFL and Edelweiss going up purely because these are nice low PE stocks with still can generate some amount of growth. They have outperformed their peer group, and Edelweiss especially has got other ancillary businesses also, like asset reconstruction, which are quite interesting. So yes, I think, you are seeing P re-rating over there. Other than that, the likes of other companies you named, I think something positive going for them. Uflex, we've seen across the board all these flexible film manufacturing companies have done very well, cyclical upswing, you may say. Gravitas because of expansion, good corporate numbers. Also, Angel One, I think the threat of derivatives volume gradually getting priced in. So something positive is happening, and investors are on the lookout for new ideas or some positive trend. And these companies are in the limelight just now for various reasons. So they are being bid up higher and higher. I don't think any of them, the valuations are completely out of whack, like say Ola Electric. So if you're an investor, I'd remain invested in these companies and look for the next fresh ideas, which traders or investors will target. And typically that company has to be a reasonable valuation, and it should not have rallied like, the way other stocks have rallied. Like, if your stock has gone up 10, 20 times or so, it's best to avoid because the correction will eventually take place. Or look for companies where some positive news flow can be expected in terms of new order wins, because now the elections are over and we could expect a lot of new order flow on the engineering construction side as well.
Okay, it's a good day for mid caps, really. Got that point. Just to add to Prashant's list, two more stocks. Matrimony.com, something we don't discuss too often. Matrimony has hit, I think, 20% today. Very volatile, but the last couple of sessions have seen the stock fly higher. There you go. There's a circuit on Matrimony. And the one that we were discussing last week, Panacea Biotech, remember it started rallying. It's a small stock, started rallying because they're doing clinical trials for dengue vaccine. Market got excited. Even this afternoon, there's follow through buying on Panacea. So it's basically a good afternoon for mid caps and small caps.
Shadi season is back. It's coming, right?
Yeah, it's coming.
Perhaps some excitement ahead of that. But yeah, excitement all around in the mid cap and small cap universe today. Deepan, we'll thank you on that note. Appreciate you being with us. Have a good rest of the day. And we look forward to connecting again later in the week. Right now, we take a quick break. On the other side, Vaibhav Sanghvi, CEO at ASK Hedge Solutions, joins in with some views on the market.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints in the last financial year alone. Express and mail trains, which account for bulk of passenger transit in India, saw 47% rise in complaints over the quality and hygiene of food items served to the passengers, according to RTI response shared to CNBC TV18. So what action has the railways taken so far? Well, 3 contracts have been cancelled and 68 show cause notices have been issued in the last 3 years alone. Let me put this in context. Even after facing nearly 13,000 complaints over food quality served to passengers in the last 3 years, only 3 contracts have been cancelled. quality concerns over food served in train is not an issue. In 2017, a CAG audit report revealed that the caterers for Indian Railways have consistently failed to protect the food quality served to passengers from flies, insects, dust, rats and cockroaches. A parliamentary panel report tabled this year said that the lapses identified in the current system pose a challenge not only to the passengers' experience but also to the overall reputation of the Indian Railways. We asked IRCTC to respond over the rising complaints over the food quality, and they have not done so yet.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly.
Investing.
Welcome back. So the market's spending some time around the flat line today. It's been that kind of a session. Nimesh, however, has had an exciting day because he's been, I think for the most part of it, at the Motilal Oswal conference. Yeah, he's still there joining us from the scene of the action. So Nimesh, I know you're going to get some guests with you as well and give us a feeler from the inside. But let's talk about the dealing room chat up and what all are you picking up? Very range-bound day today.
Well, yes, Surbi, first a bit on the conference. It's been well attended. There is a lot of buzz around as well. I've managed to pick some lot of chatter as well from many of those fund managers. But broadly, from a market point of view, it's been a bit of a quiet day of trade. The Nifty is pretty much range bound, but it's the broader markets which is relatively outperform, and that's where the action seems to be. Even at the conference, the mood seems to be more biased towards the broader market stocks. So there are a lot of interest, there are a lot of meetings also going around at the Motilal conference, largely in the mid and small cap sector stocks. So that's been the key key takeaway so far, the day one of the conference. Even there are a lot of themes now which have been talked about. The same was the case in the MK conference as well last week. Look at some of those themes which have done well today. The EV theme is doing good, but recycle as a theme has been talked about very much for the last couple of days, and many of those stocks have done well. The likes of Gravita, the likes of Ganesha Eco, all are buzzing in trade. So again, as I said, there is a lot of interest in the broader market, and a lot of themes is well been discussed. From a flow perspective, there's going to be a small MOC basket buying is what I understand towards the end. So maybe last half an hour we'll see some impact in the non-Nifty stocks from a flow perspective. But broadly, while the Nifty has been consolidating, there is a lot of interest in the broader markets today.
Nimesh, you also said that you picked up some chatter while you were there. So tell us a little bit more on individual stocks, some tidbits.
Well, Rima, the big theme seems to be blocks. There are so many indications of large blocks coming in, or for that matter, large blocks which have been done today. So the first one is Zaggle. We saw a large block trade in that particular name. Nearly 4% equity got changed hands. I understand the venture capitalist was the seller in today's block. So disclosures will be quite interesting. Second, a couple of large blocks expected in the next few days. One is Zomato and the other one is Interglobe. Both have highlighted in the past that maybe you'll see large blocks. For Interglobe, the reason being the Ganwal lockup of 5 months has got over. So now anytime the block can come, and again Ganwal could be a potential seller in that particular block. And again there is going to be a 150-day lockup. That's been the trend in the past blocks. And even for that matter in Zomato, there has been a strategic investor who's looking to sell a large block in Zomato as well. So again there could be a potential block there as well in the days to come. The other large block which is going to come, and it's potentially going to be a clean out trade, is going to be in Kalyan Jewellers. Again, the private equity investor has been a seller in the past, but now it looks like it's going to be a clean out trade in Kalyan Jewellers, which can come very soon. So that's again a large potential block to track. The other, from a flow perspective, couple of stocks. First is Trent. While everybody argues about valuations and the way the stock has doubled in the last 6 months, even at these levels, I understand there are block bids, and some large global funds are looking to buy into Trent, and they are looking for blocks as well. So Trent has been buzzing largely on back of very strong buy flows from larger global investors. And the other one is Hero MotoCorp. The management was at the Motilal conference as well, spoke about the outlook, and they were quite confident about the next few quarters. But again, from a flow perspective, I understand one of the leading long-only fund was an active seller in Hero MotoCorp. That's largely over. And now I understand some domestic mutual funds are looking to buy as well. So that's the reason why even Hero MotoCorp is buzzing in trade today.
Okay, all right, Nimesh, have fun. And we look forward to the next conversation, which we're going to come back to you for in just a bit from now. Lots of blocks, and why not, right? Markets are buoyant. Interglobe, Zomato, and others as well. Vaibhav Sanghvi is CEO at ASK Hedge Solutions. He's with us. Vaibhav, good to have you with us here. Good afternoon. Thanks for your time. Again, markets doing well, but, it's more measured, right? It's not a race straight to the top. More measured. I mean, the US is, I think, it saw a bit of a bigger swoon, but it's also recovered very fast. The S&P sits just 2% away from its highs. What's your sense, Vaibhav? Are we looking at a bit of an uptrend here, building an uptrend here over the next few weeks?
No, Steve, Prashant, I think this week there are important events, including the Jackson Hole. Let's see what comes out of that. However, if you also see that the global volatility levels, after the recent spike which had happened, has kind of cooled off, along with your domestic volatility levels as well. So what effectively happens is basically that money gets kind of starts getting deployed again, and you will see or probably this is some amount of reflection of the confidence in terms of the data which is kind of expected going forward. So we do think that the chances are there that we may see possibly a shorter term upswing because of the cool off in terms of the volatility levels. Having said that, of course, valuations is something which everybody is looking on to. So that it's going to be a little range bound, with kind of market giving opportunities on a bottom up basis rather than a broad spectrum kind of bullishness as we see.
The market is also latching on to themes. So Nimesh was telling us how recycling, electrification, or even these entire, cooling segments, Voltas, Blue Star, these are stocks which have been gaining a lot of traction. Can you highlight a few themes for us which you like?
No, of course. I think the way the market is structured, we do think that consumers, including both consumer discretionary and staples, are something which are likely to do better going forward. Of course, rural side of the economy is likely reviving. And last but not least is basically the monsoons have been pretty favorable. So consumers on an overall sector is something which we like. In addition to other non-consensus kind of sector is basically the IT. So IT, consumers, pharma from a bottom-up perspective are the sectors which we would be looking to kind of invest in. And if you see, the nature of these sectors are largely defensives, and that is how we are looking at the market currently as well.
Okay, got that. Vaibhav, hi, good afternoon. Good to have you on. The big debate has been about what's happening in the auto space, right? With Ola really hogging the limelight. I mean, it's been an absolute stunner since the listing day, almost doubling, right? And one is wondering what kind of disruption we are in for. And these stocks have been, the likes of Bajaj Auto, they've had a great run in the last 1 year. There's also the rural recovery play, which some are sort of talking about with respect to the likes of Hero Moto. But given what we are seeing, and then let's not forget the four-wheeler space, Tata Motors is going to go through a demerger. So there's a lot going on. What is your overall stance on auto? What are you liking, keeping, avoiding in this large side of the market?
No, of course, Surbi, I think autos looking at a lot of action within the sector. Partly also, kind of euphoric valuations in some of the segments. But when we look at two-wheelers, when we look at rural recovery, you will continue to see some amount of good numbers coming on from there. In passenger vehicles, though the underlying retails have not been very exciting, we'll wait for that to kind of recover. But in the advent that when the monsoons are pretty neat, I think we may see some amount of revival also happening into tractor segment. Of course, CV also have been continuing giving the kind of robust volumes on a month-on-month basis. But it's like, I mean, in some ways it is kind of diverse, where PV is not performing, but the rest of the segments are performing. And lastly, that the commodity prices impact, which had happened in the last quarter, whether it is continuing going forward as well or not, is something yet to be seen. So mixed trends with certain pockets kind of giving you the opportunity to kind of probably trade in this.
What about banks? Where do they stand in your portfolio? Because they've been testing everyone's patience. You find value in it, but it's just not rewarding investors so far.
No, we've been actually, consistent with our view, saying that banks, we are kind of neutralist to probably slightly negative as well. The reason is that, here is a situation where we've seen best of interest margins, best of credit growth and best of credit asset quality cycle as well. Incrementally, what we may see is basically one, pressure on growth or margins purely because you have to have, higher cost deposits. And lastly, that from a personal loan segment in certain pockets, including your credit cards, we are seeing, in MFIs, we are seeing some amount of pressure on the asset quality as well. So going forward, probably, within a year, we may see earning estimates kind of getting downgraded in this whole segment. Of course, the valuations have been reasonable, but I think that may stay reasonable, in absence of strong FPI buying coming onto the Indian markets. However, if FPI kind of investor interest comes back, then you may see some amount of traction, but otherwise I think we should be neutralish at best, in this sector.
Let's pull up metal stocks. I mean, the Nifty Metal Index is spiking as we speak, and I think it's up about 1.8%. And let's just have these names, Tata Steel and JSW Steel from the steel space, but Vedanta, of course, I mean, there's, a stock-specific, a company-specific reason as well, the stake sale in Hindustan Zinc and deleveraging, etc. That's another story. Let's look at Hindalco and a few others as well. Tata, I think, was up 3, Vedanta is up almost 3, and there are, Hindalco is up about almost 4% now at this point in time. Weber, any thoughts here? I mean, it's a global-facing sector. And I was reading this comment from the Chinese steel major, Bao Steel, warning of severe stress for the steel industry at least. And they produce about 7-8% of world, global steel. Now, that's, of course, comment coming from Chinese steel maker. I don't know what the dynamics here are and what impact that could have. But stocks are doing well today. Any thoughts, Weber, on the space?
I will not go by the temporary kind of momentum on the metal space, especially the base metal. My sense is basically when in a scenario when from a global perspective, we're not looking at good growth in terms of the economic numbers, and especially from China, where, which kind of leads the whole metal pricing. My sense is basically you may have a tactical trade here or there, but from a medium term basis at least, we would not be keen, getting into this space. Unless and until, you can see stupendous growth coming back, which is unlikely to see. My sense is this sector will continue to remain under pressure. So at every kind of, rise, I think you will see continued pressure coming on to these names.
All right. We'll leave it there. Thank you very much, Weber, for joining us and running us through that perspective. Point taken, bit of a tactical move here, according to Weber, as far as steel and metals are concerned. We'll take a break. We are back on the other side. We'll be joined by a panel of guests from the sidelines of the Motilal Oswal 20th Annual Global Conference. And we'll have Nimesh conducting that interview. Stay tuned. Coming up.
Is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Welcome back. Mitesh is back with us for a few BTST calls. Mitesh.
I have a couple of metal names on the list, and Hind Copper is one of them. And that's also something which we've recommended to our clients. So disclaimer that there could be vested interest. BTST here with a stop at 320 for targets of 330, and the other one is JSW Steel. That's a BTST with a stop at about 905 for targets of 935.
Okay, all right. Steel and metals is what we were discussing, and some trades coming through in that space from Mitesh. Alan Kim is partner at ARK Impact Asset Management, and Atul Mehra is fund manager at Motilal Oswal AMC. They're sitting down with my colleague Nimesh. Nimesh, over to you.
Thanks, Prashant. As you rightly pointed out, interesting to get different perspectives on the market. One is Kim. He's from Korea, and Atul is from the Motilal Oswal AMC. Kim, thanks for joining us. You've been managing a lot of money in Korea, but you've also looked at Indian investments for a while now. Sitting outside India, what is your view on India currently from a valuation perspective and from an opportunity perspective?
Yes. So for us, I speak for Korean investors. So for us, India is a beacon of high growth. So compared to Korean market, investors sense high growth and excitement from Indian market. But in terms of valuation, it's the multiple, absolute level of multiple itself is quite different, a lot higher here in India. So I think that's becoming a sort of a hurdle for many Korean investors to accept.
Sure. I understand outside Korea, the other big investment for you is India in the emerging market. Of course, US is the other big investment for you. What has been changed from a Korean investor point of view, looking at investing into India?
Right. So I think the biggest change is that Korean investors are now seeing exits from Indian markets. So before, whenever they invested in other emerging markets, exit has always become an issue where IPOs are not happening, and even if it did, the liquidity was not enough for the exit to be actually made. Whereas Indian market, it's one of the largest stock markets in the world right now, and there's no more doubt about the exit side of it. So I think that's making Korean investors much more comfortable in investing in Indian private markets.
Okay. Alan, I was looking at a portfolio, and one thing which struck me was your investment in Ola. It just got listed 8 days back, and the money has doubled for most of the investors. A, are you still holding on to Ola? And B, what has made you excited to invest in a company like Ola in India?
Right. So, yeah, obviously the investors are very happy about the result. But the reason, I think, not just for us, but for many of the Korean investors, their first experience of investing in India was back in 2017-16 timeframe, where digitization of India and mobile proliferation of India became quite known amongst Korean investors. And that story, digital growth story, is quite familiar with Korean investors. We've experienced it ourselves. We've seen it in China. So I think it was meant for many of us, it was easier for us to imagine how India trajectory will grow from there. So that's when we got interested in those types of companies in India.
But if you can share your experience on, have you invested back in Korea in any of those EV bike companies or EV motor companies, and what has been the performance there for you all, and was that a reason for you all to invest into Ola in India?
Oh, absolutely.
It's still loss-making, that's why.
Yes, it's still loss-making, but it's a different story compared to Korea, because Korean company EV chain is mostly focused on the manufacturing side of it, and it's looking at the global customer base. Whereas India, we are focusing more on how Indian consumers are using the service itself. So the two aspects are quite different. One where Korean EV manufacturers are, clearly riding the global growth cycle, whereas India, we're expecting more of Indian middle-income consumers growing and using the service itself.
Sure. Atul, if I can ask you the same thing, Ola is now not a small cap. You manage a large cap fund at Motilal Oswal, $5.5–6 billion market cap now. What is your take on, I understand you can't talk about stocks, but in general on the EV space in India, and would you look to invest in this kind of opportunities?
So, firstly, thanks for having me on the show. So, yes, so in terms of EV, if you look at it as a theme, it is a theme which is evolving. Yeah. We're already seeing it in case of two-wheelers, the penetration, especially on the scooters, is about 16% on all new sales. So, we are seeing that increasingly, especially for the vehicles which are capable to be on the smaller battery sizes, the adoption is much faster. Yeah. Wherever you move to a higher battery, larger battery size, that is where things get more expensive, because the largest component in the manufacturing of an electric vehicle is the battery. So the use cases will keep evolving as and when battery prices over a period of time decline. But so far, anything which has a small battery size to do with it, like the scooters is the prime example, that is absolutely taking off. We are at 16% now, maybe this can be 50% in the next 3 to 5 years' time. And that is where we are seeing a great amount of traction. So yeah, we are looking at multiple spaces within the ecosystem. And I think things will evolve. Having said that, I would also like to add that I think also the automobile market in India will be a story of coexistence of multiple technologies. We have seen that even in developed markets like US, where hybrid is growing share over the last few years. Yeah. So we believe that even in India, there is a chance that you will have multiple technologies coexist, and it will not necessarily be EV alone, because we also have to understand from the perspective that supply chain, for instance, most of the supply chain for EV in India or globally is the origin of supply chain is in China, right? So a lot of, we see the geopolitical issue arising from most part of the world. Most countries also, I think, will look to diversify their ecosystem and not having an over-dependence on one over another.
Right. But in general, for the autos, I was reading some reports, and many of the sell-side analysts now believe that best is in the price. There could be some distortion, and volumes could decline from here. A couple of them have actually downgraded the auto sector to neutral now after the quarter-one earnings. What's your general take? Because I heard the Hero management here, he was quite confident. Yes. You holding some auto names as well within your portfolio. What's your general sense on the auto sector stocks?
So I think in terms of from a medium to longer term perspective, things look absolutely fine. Because India, if you look at it, it still remains quite underpenetrated on the four-wheeler side. So overall, if you look at it from a growth perspective, from a medium term perspective, things are fine. Now in the near term, depending on analyst to analyst on the sell side, obviously, things differ on views on the near term. But I would believe that the medium term story looks really good in terms of autos in India. So we own some of the automobile manufacturers in India, and we believe things from a medium term perspective look very good.
Sure. Atul, while you manage the large cap funds, I want to ask Alan about the opportunities in the mid and small cap. You've been doing some shopping in the broader market stocks within India in the mid and small cap space. I understand you all bought into the Morpen QIP as well. Generally, from the broader market stocks in the mid and small cap, what has been your experience so far? And are you looking to aggressively look at investing into the Indian mid and small cap companies?
Yes, we are. I think for us, the Indian small and mid cap gives a very unique alpha creation opportunity where the growth of the company itself is in the tens and even hundreds of percentages per year. And those types of opportunities are simply not present in other developed markets. So I think in that aspect, finding those jewels, if you will, even just one or two of them would help our portfolio very much. So in that sense, we're very keen on finding those opportunities.
Okay. Alan, the other interesting thing would be a lot of Korean companies are going to list into India. Hyundai, for example, is looking for an IPO. Would you look to invest in India, in Hyundai IPO?
For that, it's really ironical because Hyundai itself, its headquarters is obviously listed in Korea, and their PE multiple is at mid-single digits. Okay. Whereas I don't know about how the Indian IPO is structured, but I presume the multiple here would be much higher than it is in Korea. So for Korean investors, I think they'll judge that, hey, if headquarters are trading at this multiple, we'll rather invest in Korea. But I think it's a very smart move for Hyundai itself to be able to raise this much capital in such a lucrative market.
Sure. Atul, you've also participated in a lot of the IPOs recently, and some of them have done really well for you.
Absolutely.
Is that an opportunity which, as a large cap fund manager, you find very attractive? That there is so much of IPO pipeline that will help you to invest into larger companies?
Yes. So I think the key is, even in a large cap mutual fund, 80% of the fund has to be invested in large cap companies, but 20% we are allowed by the regulator to invest in any market cap company. So in the fund that we've been running, our fund has so far been the best performing large cap fund since inception, with 8% outperformance. Now the key is we have been able to spot a number of new IPO opportunities, and we have a number of exciting new businesses which are coming to the capital markets. Like first in, for example, shared workspace, then telecom, or regional telecom, and lifestyle.
Hexacom has been a great investment for you,
yes,
right?
Hexacom has been great as well. So we are seeing a number of new interesting businesses coming to the market, and we have been able to identify and add those stocks to our portfolio, which have generated the returns as well. Sure. So I think the IPO pipeline looks very strong, and the lineup is like a really large one, which will help us identify new names as well.
Atul, Alan, thank you very much for joining us. We're just running short of time, close to market closing. But thank you very much for sharing your perspective.
Thank you. Thanks for having us.
Right, Nimesh, thank you for that conversation. Indeed, a very, very interesting one. Well, the market hasn't moved too much, still about 40 points up on the Nifty. We do need to take a very quick break. We'll come back and we'll be in the final leg. I will get you some more stock ideas in just a bit.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour.
Welcome back. Just a couple of minutes to go before the day closes out. We have Anand Tandon joining in to take us through the last leg. Anand, good to have you on. You know, today's been really all about individual stocks, some news-based, some earnings, etc. But I just wanted to discuss a PSU company, BEML, in case you've had a look at it recently. I mean, some of these stocks which are involved in metro construction, they got really excited because the cabinet has approved, more projects across different states. Your thoughts on whether there's still a play here, BEML or any other private sector name perhaps that would benefit from such orders?
Well, I don't know how much quantity of stuff BEML can supply. I can tell you that, for example, in metros, even something as basic as a sliding glass door, which costs roughly 1 crore per panel, is imported. So, I'm not sure that we have any kind of significant advantage on technology for any of these companies. Maybe they will be getting some orders in terms of a little bit of the, motor parts or whatever. But does it make a lot of sense to be investing based on that alone? I don't know. The cost per metro, is now ranging between 400 to 500 crores per kilometer. And that makes metros generally very expensive and largely prohibitive. So, you would have to see how these projects pan out as well. Overall, I don't think I've changed my view overall on any of these companies. Largely, you cannot keep on bidding them up on the basis of a new order or a new order pipeline. The pipelines are such that they are not able to implement most of whatever they have already as an order supply. So it doesn't really make sense to already increase the inflated multiple for them.
Anand, afternoon. Many of these mid-cap banks, financials like Ujjivan Small Finance Bank, RBL, Equitas Small Finance Bank, Bandhan Bank, these are stocks down 20 to 30% since the beginning of the year. Anything outside of the large private sector banks that catches your attention at current levels?
Well, I think among the non-bank financials, the housing finance companies are showing better numbers. After the merger of HDFC, you have to look for other companies. And some of the new age ones are not doing too badly either. So while the others like LIC, GIC, etc. are not particularly expensive, the new companies are growing perhaps a little faster. While one has to be a little circumspect on their ability to have a matured portfolio, the reality is that the numbers still are showing up quite dramatically. And hopefully, unless they are financing chawls, you will have real estate which you can actually sell if you have to.
The street is also very excited with the potential of India's electrification journey. Which is the best way to play it?
There aren't too many players that you could actually be investing in terms of electrification. Obviously the equipment manufacturers would be the way that you would look at it, but the equipment manufacturers are already priced to perfection and then some. So if you still want to continue to play that momentum, then obviously you could go there. The likes of BHEL, etc., are humongously overpriced. It is not as if they are marginally overpriced. So the rest of it would be in the form of transformers and perhaps meters. which are smaller players, and one could perhaps look for some of those opportunities there. But I think, again, if you are looking at even small companies in transformers, etc., they are reasonably well priced. They are not as strict at 65 times, but even then they are 35 times. And remember, this is largely a business which is highly cyclical, and you're probably at the top of the cycle. So yeah, but those would be ones that you would be looking at, essentially the smaller equipment manufacturers.
Got that. Anand, thanks for that for now, but stay with us. We'll continue our discussion in just a bit. Let me just quickly wrap up the market action here. 40 points higher is where the Nifty will be. So off the day's high. So the day's high was at 24,638. So almost at that sort of gap zone, and then of course the market pulled back a little bit. Nifty Bank, no such luck. Still, it's not even taken out the swing high. The 20-day moving average is a little further away. But of course, broader markets doing well. The small cap index up just under 2% in terms of trade. And I think the sector which did well, of course, were sectors which did well was the metals space. And here the move was continuous, but it really picked up pace from about 12:30 or so when the index started moving up. 2% gains there on the metals index. Oil and gas was up about 1.5%. And of course, PSUs. Actually energy, PSEs, PSU Bank, all up about 1.25%. CPC index about 1% plus as well. IT index, big gains on Friday, but it was up about almost just under 1% today as well. So continuing to perform once again here. I think that's essentially the market wrap and market close for you. Thank you very much for staying with us here on this edition of Closing Bell. But Markets Forward is coming up after a quick break. Rima and I'll take you through that action in just a bit.
Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
what kind of thing we accumulated at sub 100 level after the first correction. I think.
Market consolidates as Nifty Sensex end the day flat. Private banks underperform while PSU banks gain. Metals, oil and gas gain while autos see a muted session.
Ola continues to electrify the street with the stock nearly doubling since listing. Market focuses on reducing losses in the e-motorcycle launch. HSBC, the broker, says falling battery prices likely to boost profitability of EV makers.
Kaplan Point surges after the Brazil regulator approves steriles, injectable and an ophthalmic facility in Tamil Nadu. This opens door to the largest market in Latin America. The stock rallies 12%.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to summarize and get you everything you need to know as you kickstart and gear up for the next trading session. I am Prashant. With me, my colleague Rima Tendulkar. Rima, hi.
Hi, not a very exciting session if you look at the benchmark indices, but lots happening in terms of individual stocks, and we'll tell you all that in the next 20 minutes. We've also got all the big news, the key developments in the Dalal Street, the big corporate voices, and the events to track ahead. But first, today's market action.
I mean, quiet on the large caps, absolutely. The Nifty did not very much. It thankfully held on. I mean, there was no break because that would have been, I mean, it would have left you wondering whether Friday's 400-point move was here to stay or it was just like a one-flash wonder. It was not. I mean, 30 points higher, never came close to breaking the 20-day moving average, although it did not quite take out the gap area as well, which is about 24,686. The high was about 24,640 or so, 638 to be precise on the Nifty. But not a bad day because Friday was a very large one. Nifty Bank yet to take, I mean, actually not even the 20 is further away, but even the swing high is not in sight. It's not very far away. You just need one more good session and you're there, but you didn't get it today. And Nifty Bank actually ended the day lower today. The broader market did much better. Small cap index was up about 2%, and that is the reason why. Just the color, flavor, tenor, and tone of the market looked pretty healthy with so many stocks outperforming. A lot of rotation is there in the market. It's not as if, you know, stock A or B or a list of stocks is doing well and continues to do well. There are, of course, those stocks as well. On any given session, you will find, you know, continuation of the rally. But particularly today, as I was going through the list of what did well, a lot of new names, underperformers, sort of, you know, coming through and performing. Angel, for example, IIFL is another one. These are stocks which have not seen any momentum on the upside for a while, but they participated. We'll, of course, summarize more of these with Hormuz in just a bit. But Rima, what did you see?
Well, it's just good to see that after Friday's blockbuster rally, markets held on to all those gains. So it was largely a session of consolidation. The Nifty moved in about 100-point range. Banks underperformed. The Nifty Bank, the headline index was down in the red, losing about 150 points. But PSU banks outperformed. The Nifty PSU banking index gaining 1.2%. Large cap private sector financials like Axis, ICICI Bank, HDFC Bank end in the red. But on the way up, IT and metals catch your attention. In fact, metals was the best performing sectoral index with a gain of more than about 2%. But as I said, the excitement was all in individual names like Ola Electric, First Source, which continues to rally, Kaplan Point, IIFL Finance, Gravitas. The list is endless on individual names. But here's what we have for you on our show today. We start with the big movers and shakers of the day. Hormuz joins in. The stock of the day undoubtedly was Ola Electric. We'll also talk about Kaplan Point and Voltas, and we'll get you the key reasons why these stocks were buzzing. And we'll also tell you the key market events to watch out for to prepare you for tomorrow's trading session. But first, it's over to Hormuz now for the big movers and shakers.
A slight bit of consolidation today after the move that we saw on Friday. But of course, the action lay in the small cap names, and that is where the outperformers were in today's trading session. But metals among the sectoral indices was the top gainer in today's session. Hindalco among the top gainers on the Nifty today, up nearly 4%. Nalco ended with gains of nearly 4%. Tata Steel, Vedanta, Jindal Stainless, almost all of them ending with gains of over 3% and also ending at the highest point of the day or close to that. So that was good going for the metal names. You mentioned some capital market linked names. Those were the ones that continued to surge. But before that, IT was one sector that saw follow-up buying after the Friday's move as well. It was the 6th day of gains for the IT index, and FirstSource continues to move in a different orbit now. 10% higher today as well. Birlasoft out of the F&O band today, 4% higher. Emphasis, LTIMindtree, TCS also ending at the highest point of the day today among the top contributors to the Nifty. These were the capital market names that I was talking about. Angel One was one of them. CDSL, the record date for the bonus issue is nearing, so that stock continues to do well. CAMS, IIFL Securities, KFin Technologies, all of them having a good session in today's trade. Some of the others, news flow related names were also in focus today. Kaplan Point, after that positive commentary coming in from the Brazilian drug regulator, 16% higher, ending at the highest point of the day, almost 2,000 now for Kaplan Point. DCX Systems and Genus Power both locked in an upper circuit for their respective order wins. NCC declared the record date for its dividend. That stock surged over 5%, and Glenmark continues to move after its results and positive management commentary as well. And lastly, some stocks that did well on the volumes front. Hindustan Zinc on the negative side today, almost now at the floor price of the offer for sale at around 495. Triveni Engineering continues to surge, as does Godfrey Phillips, and E-Clerks and Bombay Burma also had a good gain on strong volumes in today's session. Back to you guys.
All right, Harmas, thank you very much for that interesting sort of list of names which moved around. Anand Tandon and Shilpa Raut are with us. They are guests on the program today. Anand, good to have you with us. Shilpa, same there as well. Anand, just a quick word. Names like Angel. Of course, there are some reasons, and there's a buzz here and there and separate one for each of these names. But your thoughts? Angel popping today, IIFL Finance, and Edelweiss, another one which has come back very, very strongly. Any thoughts? Anything on any of these three on your radar?
I don't think there is any particular reason to be, to attribute as to why any one of them is doing well. But generally, A finance space is all right and is relatively fine, and the non-banking space, especially, is the ones which are doing better, even in terms of the corporate performance. Obviously, with the markets doing well, most of the brokerages will do well. Edelweiss, of course, is not so much into brokerage; it is more into lending, etc. But each of those, factors that you're looking at are, at least from a historic perspective, relatively cheap. And, the growth rates have not particularly suffered. And while the margins may fluctuate a bit, you may find that at least the growth rate will be maintained. One of the non-bank areas are the ones in the financial spaces which are probably the best. I would still prefer, of course, housing and insurance as the two long-term stays rather than looking at NBFCs.
Shilpa is also with us. Shilpa, any thoughts on the day so far on today's trading session, and any ideas for tomorrow?
It's definitely, if you look at the day's progress, on expected lines, we have seen that Nifty has definitely shown some very strong bounce from 23,900 zones. And now I believe the index is very well poised to move towards 25,000. The FI's net longs have also dipped again towards 50% net long, so which is again very positive. And much needed, the price and the time correction has happened. So from here, again, a move towards new all-time highs cannot be discounted. So stocks probably, in the last of the session, we saw some very aggressive up move in the chemical sector, be it Tata Chemical, be it UPL, be it, Chambal Fertilizers. This chemical and fertilizer sector was showing very strong up move in the last hour. So I believe for tomorrow, one can look at Tata Chemicals, UPL. I believe, the scripts have not outperformed at all in this rally that we have seen. So for Tata Chemical, I believe a move towards 1100 can be seen tomorrow, and UPL likewise can see 580 to 590 zones, in the coming days.
Tata Chemical and UPL and the Nifty per se can inch towards 25,000. But let's talk about the stock of the day, and that's Ola Electric. Last week, there was the launch of the Roadster series of e-motorcycles, and with that, the company has forayed into a brand new category. The stock has hit an upper circuit today, and it's practically doubled since its listing. The issue price was 76. Sudarshan joins in with more data. Sudarshan.
What a move the stock has seen since its listing. The IPO price was rupees 76 per share. The stock got listed almost at the same price. But since then, it has been moving in just one direction, that is northward. In today's trade, it has hit record high of rupees 146 per share. Even market cap, if you see on the listing dates, market cap was rupees 40,000 crore. And today, its market cap has hit 65,000 crore. That is a gain of almost 25,000 crore since its listing. But one concern, more than concern, just one point if I could raise, free float is only 17% of total outstanding shares. What does it mean? That means that only 17% of total outstanding shares is available for trade. If you talk about the recent announcements, company launched Made in India 4680 Bharat battery cell, and its CEO says he has promised faster charging and more energy storage via this new battery. And also, company has entered motorcycle segment and launched roadster portfolio starting at ₹74,999. Talking about the brokerages, as of now, it has just one coverage. HSBC has initiated coverage with a buy call and target is ₹140 per share. It says, despite its conservative view on electric vehicles, it believes Ola is worth investing in as companies go to market and localization efforts are noteworthy and it should attract investors looking to play electrification theme in India. Its target price implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times for Ola Electric by HSBC.
Thank you very much for that. Ola Electric's market cap now stands at $7.7 billion, much higher than what it was in the private sector, in the private rounds that took place. Anand, come in on Ola Electric. People found it expensive at 76, at 100, but now it's, almost 150. Is there any element of FOMO in your mind?
If people found it expensive when it came in, it has not become cheaper. Obviously, it remains extremely expensive, and it just shows you one more level at which the market is willing to overlook any kind of concerns that there may be in terms of valuations in favor of growth. Now, the question is with Ola Electric, whether how much that growth will sustain also is, to my mind, a lot of questions, because we are looking at a new technology and many players are already present in them, though they may not be listed yet. So it's not as if Ola is the only game in town, and it is an expensive business as well. So overall, I would think that you are looking at a situation where you are probably better off betting on companies which have a slightly longer track record.
Okay, that's Ola Electric for you, hitting an upper circuit for the fourth session since its listing on 9th of August. But moving on now to Kaplan Point, another big mover. Now, this stock has hit a record high in trade today. This is after the company received 0 observations for its India facility from the Brazilian health regulator. Ikta joins in with the implications and the impact of this. Ikta.
Well, yes, Kaplan Point did see a good amount of traction in today's trading session that was in focus on account of a successful regulatory inspection. The news is that the Brazilian regulator, the Anvisa, conducted an inspection of Kaplan's sterile injectable as well as ophthalmic facility, which is based in India. It was inspected from the 12th of August to the 16th of August, and there were 0 observations issued to this particular plant. Now, the company says that Brazil, in fact, is an important part of their expansion plans when it comes to Latin America. In fact, Latin America is where they get majority of their revenues from. Now, with this particular regulatory inspection being successful by the Brazilian regulators, it will open doors to the largest market in the geography, according to them. And Brazil, Mexico and Chile are the new opportunities that the company is exploring.
Got it, Ikta. Thanks very much for that. Shilpa, any thoughts on this one, on the charts, Kaplan?
Definitely, just a second. I know my system is little hung.
Okay, no problem. No problem for that. Anand, metals as a space was up and about, and I was sort of having this conversation earlier. You got a situation where China is talking about, over the weekend there was news that Bajaj Steel is warning of a severe stress in the steel industry because of the downturn there. When you speak with steel companies here, they say we need higher tariffs, we need import duties, otherwise Chinese steel will overwhelm the markets here. Stocks have not done well. Today they were a little higher. I don't know if you have any thoughts on that space.
Well, like you said, I mean, the world's largest producer, or one of the largest producers, is telling you that the state of the market is not great. There is extreme oversupply and not enough demand. And of course, while we protect our domestic manufacturers with tariffs, there is only that much that you can do. So, it's not likely that the targets will suddenly change. I mean, which of the large economies in the world are actually firing on all cylinders, which require large amounts of steel? Except for India, perhaps, where we have significant spend on infrastructure. And in the global context, that's still, pretty small. The rest of the world is not exactly going out there to consume steel. So it is a little I would imagine that this is one segment that would again perhaps cool off fairly quickly. It's not something that you would be betting on. Even the medium term outlook doesn't look very promising.
Shilpa, if you've now had a chance to look at the Kaplan point chart.
Yes, sorry about earlier. If you look at the Kaplan point chart, it is on a weekly or on a monthly basis. It's already, soaring very high. The immediate support now comes at around 1720. So on any declines, one can accumulate, or if you're already there into the trade, keep a trailing stop loss, and you can still ride. From here, I believe it can definitely do 1980 to 2000 zones in coming sessions.
Thank you very much for that. Quite a few pharma names did well. So Morpin Laboratory 15% up, Panisha Biotech 10%, Markson's Pharma gaining more than 5%, Wockhardt too up close to about 5%. But let's talk about Voltas. The stock rallied 4%. Vamakshi is now joining in. Vamakshi, many brokerages like Nomura, Jefferies raised the target price on Voltas post the Q1 numbers and the conference call. What is it that excited the street today?
Well, absolutely. It was a good set coming in from Voltas in the first quarter. Q1 was largely led by strong performance in the UCP business. In fact, the volume growth too came in at 67% in the first quarter, and the company has maintained high single-digit UCP margin guidance for FY25. Like you rightly pointed out, a couple of brokerage notes came out. First one is Nomura. They maintained their buy rating target price of 1,857 per share. They say that the growth outlook remains quite strong, and the priority of market share gain over margin is a step in the right direction by the company. UBS too has a buy rating on the counter. They went ahead and raised their target price as well to 1,960 per share, while Morgan Stanley has an equal weight call target price of 1,225 per share. While on the other hand, we had a note coming in from Kotak. They said that limited margin expansion and unchanged guidance indicated intense competition. Nevertheless, they went ahead and raised their estimate by almost 11 to 14%, but they've given a sell rating and a target price of 1,100 per share. And lastly, there was a note that came in from CLSA. They say that they see limited re-rating potential, and resultantly they've got an underperform call target price of 1,310 per share.
Got that, Vamakshi. Thank you very much for that. Anand, any thoughts on this one, Voltas?
I don't look at that very closely. I think the best is behind you in terms of the season. So from here on, you are looking for perhaps slightly slower growth on a quarter basis. Again, this is a company which usually flatters to deceive. Consistent performance has been somewhat missing. Over the last few quarters, maybe not so much, but otherwise, I would still prefer to stay away from this particular segment, given where we are in the season.
You spoke about Ola earlier on Ola valuations, right? Is there a case to look at something like a Hero, which owns 35% in Ather? If and sort of you can obviously make the argument that if Ola's with the EV business, the market is ready to assign this valuation. What about Hero's 35% in Ather? And of course, there is the other story for the traditional business. Monsoons have been good, etc., etc. Any thoughts?
Well, yes, certainly. I think you have a valid point. Hero is not doing all that great overall, but the value of the Ather investment could be fairly substantial, especially just because Ather is not listed or we don't have a benchmark yet. You'll have to look at the comparatives. One thing is that when the initial vehicle was designed, it was designed extremely well and had generated a lot of interest in terms of the technologies they were bringing in. That has now become par for the course. I think most companies are also offering the similar kind of design. But the good thing is that at least it's a born electric kind of vehicle. So I think Ether will certainly add value to Hero's portfolio overall, and perhaps is not being factored into their current stock price.
Okay, all right. We'll leave it there. Thank you very much for that perspective, Anand. Shilpa, appreciate you joining in here as well. So that's a quick check on markets and a bunch of stocks as well. We'll take a break. We're back. We'll get you some sort of corporate commentary that we got through the course of the day. And of course, the events to watch out for as we return tomorrow. Stay with us.
We have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are...
Welcome back. Let's now take note of the top corporate voices of the day. So Zensar Tech, the IT company, remains cautiously optimistic on demand. They're saying clients are a lot more discerning when it comes to discretionary spends. That said, the COO, Vijay Simhan, the COO also said that they are hopeful of a sequential growth in revenue from here on. He added that the deals in the pipeline are moving in the right direction and they're hopeful of closing a few in the current fiscal.
Okay, well, that's Zensar, but from the auto ang space, we had K. Ajit Kumar Rai of Suprajit Engineering telling us that they are seeing some changes in performance of the controls division, and growth there has been lukewarm so far. They've guided for double-digit growth for the company, even in a seasonally weak quarter, versus expected industry growth of about 1%.
And Sanjay Kumar Jain, Chairman and Managing Director at IRCTC, said that growth in the ticketing segment would be the same as FY24. He added that 1/3 of the revenue now comes from the non-convenience fees, and there is a huge potential there. He also told us that ticketing revenue was lower due to seasonality, and IT margins will hold on to current levels.
All right, well, that's some corporate commentary that we had through the course of the day. We also spoke with one of the foremost investors in India, Ramdev Agarwal. He's, of course, chairman and co-founder in Motilal Financial Services. We spoke with him on the sidelines of the Motilal India conference, which is being held here in Mumbai. Here are his views, and we sort of began by talking about Zomato, in which Motilal, of course, was a big holder, and they've been trimming positions. Listen in.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. I would think that the best is ahead for the industry. As we go forward, recovery will pick up. I think we've seen the first quarter result. First quarter result was fantastic, that they are clearly leader in their field, and in two-wheeler particularly I have seen being number one is very important. So on the electric mobility, they are clearly number one, and they have very dominant share.
Okay, and now as we wrap up the show, we'll get you the key market events to prepare you for tomorrow's trade. Vamakshi is joining in. Vamakshi.
Well, absolutely. Let me first start off with a couple of AGMs that will be in focus. Let's watch out for the ones that will come through for REC, IKO Lighting, Bandhan Bank. Apart from that, Grasim Industries and Bharti Airtel also have their AGM scheduled tomorrow, so watch out for these counters. Adani Power will be another name that will be in focus, and that is because an investor day is scheduled tomorrow. Board meetings, a couple of them lined up tomorrow. Sansera Engineering will be considering fundraising via the QIP route. Hindustan Zinc will also be on our radar. and that is because they will be considering the second interim dividend for FY25. A couple of events to watch out for as well. India and Japan's foreign and defense ministers will be meeting tomorrow. SpiceJet will also be on our radar. That is because the company moved the Delhi High Court seeking urgent hearing against order to return 3 engines to French lessors. And as far as the global market is concerned, as far as the economic data is concerned, EU's inflation rate as well as the fully fed non-manufacturing data will be released tomorrow. So watch out for this as well.
Right. Thanks very much, Mamakshi, for that. That's a list of things to watch out as we come back tomorrow. It's a wrap on this edition of Markets Forward. We are back with more news and updates on the other side. Stay tuned.
Underlying value. So I would think that prices, even in trend, has reached a level which is very difficult to understand. But there is a momentum in the company's performance as well as in the price.
You know, they do polls and this stuff, and I'm at like 93%. I said, so why are we having an election? They didn't have an election. Why are we having an election? How would you like to be Biden? He's working, he's spending money, he's trying. They wanted to have a debate. That's the thing that started it all. You know, if I didn't debate him, he'd still be running right now. But I believe she will be easier to beat than him because she's a truly radical left lunatic. And with him, he never really believed it. Of course, I don't know if he knew anything. I'm not sure. But he didn't really believe it. She totally believes it. She wants to destroy our country. With 4 more years of Kamala, your finances will never recover. They will only get worse. She said, I don't want fracking in Pennsylvania. She said it hundreds of times. I don't want it anywhere. We will. Then a couple of months ago, when the polls are showing that she's getting clobbered, well, actually, nobody actually thought they were politically correct. They wanted to be politically correct because they wanted, they had 11 different people, and they put her name in to be number 12, and they had a vote. She came in last. So people say, be nice. Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic. Have you heard it? I'm a better looking person.
Hello and welcome to Business 360. I'm Shriram Finance. The headlines that we're tracking for you this evening. Monday blues on the Lal Street. The stock markets end flat after a range-bound session. Metal stocks rise, but financials drag. Veteran investor Ramdev Agarwal says valuations in certain stocks have reached a point where it's getting difficult for even a bullish person like him to justify. Says valuations remain a concern for foreign investors. Peer-to-peer lending platforms knock on the RBI's doors after the central bank tightened the lending rules. P2P lenders say new rules are a body blow for the industry. A platform called India P2P pauses withdrawals and new investments. Tensions in the Middle East send freight costs soaring across the world. More than a dozen companies, including Reliance Industries, Divi's Labs, Welspun, UPL, have issued warnings to investors as the Red Sea crisis continues to impact global supply chain. Israeli forces continue operations in Gaza, even as U.S. Secretary of State Anthony Blinken says this may be the last opportunity to get hostages out of the region and secure a ceasefire. The top U.S. official is on his 9th visit to the West Asian region since the 7th of October terror attack. Doctors in Kolkata continue to protest for the 9th day after the rape and murder of a trainee doctor inside the RJ Kar Hospital. A college student arrested for what the police term is a provocative social media post against Chief Minister Mamata Banerjee. A Trinamool MP and 2 doctors are summoned by the police for allegedly spreading fake news. Kerala-based travel services operator Al Hind Group receives the government's approval for starting an airline. Aims to start operations by year-end. Plans an initial investment of 200 to 500 crore rupees. That's an exclusive. Quick commerce companies Blinkit and Swiggy Instamart claim record Rakhi orders as India celebrates Raksha Bandhan. Blinkit says it receives 693 Rakhi orders a minute at its peak. Swiggy Instamart says Rakhi orders are up 5-fold compared to last year. Well, we'll get to the Rakhi action in just a bit, but let's talk about the markets today. The Sensex and the Nifty ended the day flat after a range-bound session. Now, the Sensex ended marginally in the red, but the Nifty closed in the green. So the Sensex down just about 12 points, the Nifty up 31, the Nifty Bank closing 150 points lower, and the Nifty Metal Index was up by almost 2% this week, today. That is Monday. Financial stocks were the key laggards, and we saw those stocks being under pressure this afternoon. While staying with the markets, veteran investor Ramdev Agarwal says that valuations of certain stocks have reached a level where it's becoming even difficult for someone as bullish as him to justify. Speaking to CNBC TV18 on the sidelines of the Motilal Oswal Investor Conference, Agarwal said that valuations remain a cause for concern for foreign institutional investors. Take a look.
So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices, even in trend, has reached a level which is very difficult to understand. But there is a momentum in the company's performance as well as in the price.
Well, that's Ramdev Agarwal with concerns on valuations, but those are not new concerns, and yet we've seen the markets ignore all of that and continue to rally. Many say that it's hard to call a top as far as our markets are concerned, given the way that they have been moving, defying most models. Now, gold prices dipped marginally as traders booked profits after the yellow metals rise to record highs in the last session. However, prices do remain above the $2,500 mark. This is expectations of an interest rate cut by the US Federal Reserve in September bolster demand for the bullion. Increased geopolitical tensions and robust central bank buying has also supported gold prices, which have risen by 20% so far this year. Now, peer-to-peer lending platforms have knocked on the RBI's doors after the central bank tightened the lending rules. Now, P2P lenders say that the new rules are a body blow for the industry. A platform called India P2P has paused withdrawal and new investments. Ritu standing by now to take us through more details. Ritu, how is industry reacting to the new regulations that have been announced, and take us through what the likely impact is?
Well, India P2P is just one of the players that has already stopped any investments taking on new customers and bulk withdrawals to comply with RBI regulations. But, there's been a ripple effect through the industry, and since the guidelines came out last Friday, we've been speaking to a whole host of players that have outlined 3 to 4 key issues that they want to take up with the regulator, that is Reserve Bank of India. Otherwise, they say this will be a body blow for the industry. And one of the largest players who did not wish to be quoted even said, this is a death knell for the business. So, in terms of some of the concerns that have been raised by the players, number one is that RBI has made it very clear the platform itself will not handle any money. The money will move between the borrower's escrow account and the lender's escrow account, which means any opportunity for reinvesting that small EMI that used to come in on various repayment schedules ranging from weekly, monthly to quarterly, all of that cannot be reinvested by the platform, taking away one of their, lucrative offers that they had. The second is, the liquidity option, whereby, they could earlier offer this option of selling the loan in the secondary market from one lender to another, offering instant liquidity, which again, RBI has put an end to. The other big concern is the settlement of, the loan or the transfer of money between the lender and the borrower has now been brought down to T+1 day, which means within a day, all of the 5 to 10 lakh transactions that happen on a daily basis and are handled by a trustee of the bank, they will have to be manually reconciled reconciled, which the industry says is going to be a tough ask. Apart from this, putting a cap of 50 lakh on the overall exposure across all of the players in the system. Now, industry players have been telling us that there is no common database for them to cross-check whether that 50 lakh limit has been breached yet and whether they're in non-compliance without knowing. So, these are some of the concerns, at least, that, the players have highlighted to us. Remember, it's a 10,000 crore rupee industry, and one of the large players I was quoting earlier said it may come down to a few hundred crores, if some of these relaxations are not provided, because, it is several of these rules that make the industry what it is. Because of the last 6-7 years of no changes in rules, there were certain loopholes, of course, which have been, interpreted by players in different ways, but all of that now goes away with the revised guidelines kicking in with immediate effect.
All right, Ritu, many thanks for joining us. Now, Finance Minister Nirmala Sitharaman met the heads of public sector banks and regional rural banks today to review their performance. The meeting included a review of deposit growth, credit to deposit ratio and asset quality. Cybersecurity and effectiveness of several government initiatives also discussed in that meeting. We'll try and get you more details. Shares of Piramal Enterprises surging in early trade after promoter group hiked its stake in the company from 46% to 46.3%. The promoters bought over 6 lakh equity shares, amounting to 0.27% of the company's paid-up capital. On to a CNBC TV18 exclusive. Kerala-based travel and tour services operator Al Hind Group has received the Aviation Ministry's initial nod to start an airline called Al Hind Air. The upcoming airline is looking to start operations by the end of 2024. After receiving the air operator certificate, a top official from the group told CNBC TV18 the airline will start flying with 3 ATR planes and an initial investment of 200 to 500 crore rupees. It also plans to initially connect Kochi with Bengaluru, Chennai and Thiruvananthapuram. A female Air India cabin crew member was allegedly assaulted by an intruder in her hotel room near London's Heathrow Airport. The incident took place earlier this week at Radisson Red Hotel, where the crew members of several Air India flights were staying. The intruder is reportedly of Nigerian origin. The cabin crew member was rescued by her colleagues after she was heard screaming. In a statement, Air India said that the cabin crew member was left with bruises and the culprit has now been nabbed. Tensions in the Middle East have sent freight costs soaring across the world. A new report shows freight rates on an average have gone up by as much as 87% since October last year. More than a dozen companies, including Reliance Industries, Divi's Labs, Welspun, UPL, have issued warnings to investors as the Red Sea crisis continues to impact the global supply chain. Clashes between Israeli forces and Lebanon have based militant group Hezbollah intensifying over the weekend. While at least 10 people in South Lebanon were killed in an Israeli missile attack, Hezbollah launched a missile barrage in northern Israel. U.S. Secretary of State Antony Blinken arrived in Israel to attempt a final ceasefire agreement between Tel Aviv and Hamas over Gaza. He said it was probably the best and maybe the last opportunity to secure a ceasefire and hostage release deal in Gaza.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security. I'm here as part of an intensive diplomatic effort on President Biden's instructions to try to get this agreement to the line and ultimately over the line. It is time for it to get done.
Ola Electric has continued its electrifying run on the large street, with the stock hitting upper circuit. The stock has almost doubled in price since debuting on the exchanges last week. Ola Electric's market cap now stands at nearly 65,000 crore rupees. India's quick commerce companies are claiming record Rakhi orders as India celebrates Raksha Bandhan. Zomato subsidiary Blinkit claims to have received 693 Rakhi orders a minute at its peak. The Zomato stock in focus today, with brokerage UBS increasing the price target. Mangalam standing by with more on what's driving sentiment there. Mangalam.
Well, the widespread adoption of quick commerce is something that the street likes, and Zomato remains the only listed player in that space right now. If you notice, yesterday was, a record day of orders coming in on Blinkit, and that was largely on account of Raksha Bandhan. And across all the Q-commerce platforms, the leaders did tweet or put on social media, the kind of orders that their platforms got, including the likes of Zepto, etc. as well. But in that, Blinkit really stood out, with Albinder Dinsa actually saying that they received not only record number of orders, but also the record number of gross merchandise value, alongside a large part of their revenues coming in from Rakhi related products, including Rakhis themselves and sweets, etc. So at peak concurrency, they had almost 700 Rakhis being ordered per minute on that platform, and all these factors really talk about the widespread adoption of Q-commerce in India as a channel of convenience. Zomato benefits also from a couple of brokerage notes that have come in this morning. UBS, for instance, they've rolled forward their estimates on the stock, and as a result of which they've increased their target price from 260 to about 320. Remember, after the first quarter results itself, they had upped their estimates for Q-commerce by about 20 to 30% and 2 to 3% for the food delivery business. So all of that with a valuation at almost 35 times FY27 EV to EBITDA makes it comparable to all the other listed consumer players, which are trading at around 30 times itself. Though, there is a justification for this premium by saying that maybe the growth profile and operational turnaround profile of the company looks a lot better placed than all the other peers, and as a result of which the stock is trading at around 35 times.
Many thanks, Mangalam. And not just Zomato, competition Swiggy and Zepto have claimed that they've registered all-time highs on orders and sales. Also, Swiggy's Instamart claimed that their orders per minute rose 5 times in comparison to last year, while Zepto said that they witnessed a surge in first-time buyers. We will head to a break, but up next, doctors in Kolkata continue to protest for the 9th day after the rape and murder of a trainee doctor inside the RJ Kar hospital. A college student is arrested for what the police term is a provocative social media post.
Kamala. No, I couldn't believe it. She said, I had never heard that one. They said, no, her biggest advantage is that she's a beautiful woman. I'm going, I never thought of that. I'm better looking than she is.
Together, we will build what I call an opportunity economy. Under my plan, more than 100 million Americans will get a tax cut, and we will do this by restoring 2 tax cuts designed to help middle-class and working Americans: the Earned Income Tax Credit and the Child Tax Credit. We will provide $6,000 in tax relief to families during the first year of a child's life. Now think what that means. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy. An opportunity economy. An economy where everyone can compete and have a real chance to succeed.
We have a 5-year-old daughter. We want to make sure that she has access to the best schools and to community programming and those kinds of things. And so we really want to be in a position to give her the kind of home, a little more space, a place where we can entertain and invite our friends in our community to spend time with us. All of those things are really important. and we really want to make sure that it makes financial sense before we can do something like that. So she spoke to my heart as a potential homeowner.
Investing.
Protest rallies against the gruesome rape and murder of a 31-year-old trainee doctor continue in Kolkata and across India. The CBI have interrogated Sandeep Ghosh, the former principal of RJKR College, in connection with the crime for the fourth consecutive day. A CBI team also visited the victim's residence. The police arrested a college student in Kolkata for uploading 3 Instagram stories which disclosed the picture and identity of the victim. One of the stories also encouraged others to assassinate West Bengal Chief Minister Mamata Banerjee. Summons have been issued to BJP leader Lokit Chatterjee and 2 top doctors over what the police called spreading fake news. Sitting TMC Rajya Sabha TMC MP Sukhendu Shekhar Roy moved the High Court challenging a notice by the Kolkata police. The police had summoned Roy over his tweet where he sought custodial CBI interrogation of the police commissioner as well. With the onset of the festive season, air ticket prices have witnessed a steep surge. Prices have jumped between 15 to 30% in the last 2 weeks of August. And during Diwali week, flight bookings have also seen a 40 to 50% jump during the same period. Danish is standing by now with the details. Danish, I would imagine that it's been a busy August for aviation companies. But what about the forthcoming festive season? Already demand picking up?
If you look at the trend in the last 2 weeks of August, even at this time, the ticket prices have jumped between 15 to 30%, and the similar jump in ticket prices also observed during the Diwali week. If we look at the data shared by Ixigo, Thomas Cook and IndusInd, there has been a surge between 40 to 50% in flight tickets, especially in the last 2 weeks of August. And if you look at the average jump in ticket prices, we are seeing that this jump is visible in across all routes, especially from metro to metro and metro to non-metro. As per the data shared by Ixigo, on routes such as Bengaluru Mumbai, Bengaluru Kochi, Delhi Pune, Delhi Goa and Mumbai Goa, the ticket prices have jumped between 38%, 46%, 23% and 37% respectively. And as per Ixigo, a new trend is also visible in international travel, and they're seeing that there's a huge demand for destinations like Bali, Thailand, Singapore, Azerbaijan, Georgia and Vietnam. And these especially these international destinations are seeing a surge between 60 to 70% as far as demand is concerned. As far as Diwali is concerned, which is the last week of October, ticket prices have already shot up between 15 to 30%. And as per the data shared by IndusInd, one-way fares on certain routes have surged to as high as rupees 30,000 on key routes like Mumbai to Patna, Bengaluru to Varanasi and Bengaluru to Patna as well. So moreover, the reason why we are seeing such a huge hike in ticket prices is the fact that the demand is extremely high right now, and the capacity constraint is there in the industry, as majorly there's only 2 airlines, Indo and Air India, that are catering to this huge passenger demand.
All right, many thanks, Danish, for joining us. Now, the Union Public Service Commission, the UPSC, has issued an ad for 45 posts to be filled by lateral entry on a contract basis. These posts include 10 posts for joint secretaries and 35 posts for directors and deputy secretaries. Parikshit joins us now with the details. Parikshit, what is the genesis of the scheme and why is the opposition targeting the government over it?
Well, a major political battle has broken out between the Congress and the BJP over the lateral recruitment scheme. Last week, the Union Public Service Commission advertised 45 posts to be filled via the lateral entry on a contract basis. The centre is looking to fill 10 joint secretaries and 35 director or deputy secretary level posts through lateral recruitment. Now, the Congress has called this an attack on Constitution and an attempt to snatch away reservation for backward classes. They've been joined by parties like the Samajwadi Party, the BSP, the RJD, all of them who have criticised this scheme. The BJP is calling this hypocrisy and said that the second Administration Reforms Commission
under UPA and in fact under former Minister Veerappa Moily in 2005 had recommended recruitment of experts with specialized knowledge. However, the lateral entry scheme was formally implemented in 2018 during the second Narendra Modi government. The Department of Personnel and Training told Parliament on the 8th of August 2024 that 63 appointments have been made through lateral entry in the last 5 years. Presently, 57 officers are in positions in different government departments. Lateral recruitments are undertaken by the UPSC and applicants for JS posts, and this requires 15 years of experience, and minimum 10 years of experience is needed for director level positions and 7 for deputy secretary level positions. The Parliament reply by the government also said that a Niti Aayog in 2017 had recommended induction of personnel to bring in fresh talent, expertise and augment manpower. Since 2019, 12 lateral entrants have been appointed as joint secretaries. This includes the likes of Ambar Dubey, who was appointed as JS Civil Aviation, Rajiv Saxena appointed as Joint Secretary DEA in the Ministry of Finance, and Sujit Kumar Bajpai appointed as Joint Secretary Ministry of Environment and Forests. Some of these individuals completed their contracts and returned to the private sector, and some have got an extension as well.
All right, Parikshit, many thanks for joining us. Now, the Union government has taken cognizance of the rising monkeypox cases globally. The Health Ministry convened a high-level meeting to review India's preparedness. Ekta joins us now with the details. Ekta.
The WHO has re-declared Mpox as a public health emergency of international concern on the 14th of August, following its initial declaration in 2022. Since then, over 99,000 cases and 200 deaths have been reported globally, with India recording 30 cases, the last of which was in March of 2024. Currently, no new cases have been reported in the country as per the government. The Indian government, in fact, held a high-level meeting to review the preparedness, emphasizing enhanced surveillance, readiness of testing labs and public awareness campaigns. The risk of a large outbreak with sustained transmission is considered low, according to the government authorities. The release issued by the government has indicated that Mpox infections are typically self-limiting, lasting 2 to 4 weeks, with recovery often achieved through supportive care. Transmission occurs primarily through prolonged close contact, especially via the sexual route or contact with contaminated materials. As per the government, the following steps have been taken in the past 1 week odd with regards to Mpox. On August 12th, the National Centre for Disease Control convened a meeting of experts to assess the risk for India. The NCDC is updating its communicable disease alert on Mpox to reflect the recent developments, and sensitization of health teams at international airports is also being undertaken.
Ekta, many thanks for joining us. That's the latest update on the Mpox virus. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a minute with more.
The Roadster series, the first product is going to be the Roadster Pro. This is the Roadster Pro. I'm going to move along. We have a lot of announcements. A 10-inch TFT touchscreen, ADAS. With this vehicle, you saw the vision of ADAS in MoveOS. That'll be installed in this vehicle. It'll come with all the sensor package. So that's the Roadster. The specs again are absolutely killer. Fast acceleration, high top speed, power, range, 250 kilometers of range. Kripa is a biker girl, isn't she? So we've shown you two bikes, the Roadster Pro and the Roadster. All right, let's have the Roadster X. That's the Roadster X. Again, great features for its class of performance. High top speed, 11 kilowatt of power, 200 kilometers of range in a single charge. Iconic LEDs, 4.3-inch LCD, and that's the Roadster X. तो आज हमने एक नहीं, दो नहीं, 3 बाइक्स दिखाई हैं. 3 बाइक्स लॉन्च कर रहे हैं. Across the price point, across from the Pro, absolutely top of the line bike. The kind of power that bike has, maybe even 1000cc bikes don't have. The Roadster and the Roadster X. You can take your pick, all from the same family, same design, same platform.
In the last 3 years, nearly 13,000 complaints have been filed by passengers over the food served in Indian Railways. The last financial year saw nearly 7,000 complaints, which is a whopping 500% jump compared to FY22. But despite the rise in complaints from passengers, only 3 food contractors have faced repercussions. CNBC TV18 filed a request under the RTI with IRCTC, which is in charge of catering along with ticketing. We asked IRCTC how many instances of rats, cockroaches or other insects were found in food items served to passengers. IRCTC did not provide a specific answer, but provided with the number of instances where passengers complained about the quality or hygiene of the food product. In FY22, IRCTC got total of 1,192 complaints, which rose to 4,776 in FY23. And in FY24, the number of complaints received was 6,948. So all in all, 12,916 complaints were registered in just 3 years alone. Even premium trains like Duronto, Rajdhani, Shatabdi saw a sharp surge in complaints over food quality. In FY23, the premium trains saw 2,812 complaints, which rose to 4,152 in FY24, which is an increase of 48%. Vande Bharat trains received 123 complaints.
Let's welcome in Ramdev Agarwal. He's chairman and co-founder at Motilal Oswal Financial Services, and he's joining us from the sidelines of the Motilal Oswal India Investor Conference. It's the 20th edition. Ramdev, great to have you with us here. Appreciate your time. Thanks very much. Prashant this side. You know, the mood is buoyant as it has been the last couple of years. You know, a mini heart attack about 10 days back with global markets and huge amount of volatility. But that was just it. And the market has looked through that as well in some style, especially here in India. In the US, the S&P is just 2% away from its highs. So, you know, remarkable stabilization across markets. What are you most excited about, Ramdevji, at the conference? What theme, what would you like to hear over the next couple of days? What would you keen to sort of, it's not just what you are telling investors and they'd want to hear from you. What do you want to hear from the people who are gathered there for the conference?
Actually, this is a wonderful time post-election and post-budget and all. This conference is coming up and we are seeing very wide participation from the corporate side as well as from the fund side. A lot of FIs are coming in today, so I am looking forward to talking to them. So I have 2 objectives to figure out. One is sitting through the corporate meetings and try to figure out what's happening on the ground because the recovery post-COVID has not been across the board. I mean, there has been some patches where like consumer and all, FMCG and all have been very slow. So what's happening there? So we have Godrej Consumer coming up and Hero MotoCorp will start the session, one session immediately after. So there are a whole lot of corporates we have designed to get 2 things for the people who are attending the conference. One, to figure out what's happening on the ground across the sectors, where the bright spots and where are the challenges. Second, what's the behavior likely to be of the FIs? I mean, FI is a big player in Indian context Of course, because of retail participation, the importance of FIs is kind of reduced, but still they are very large players.